Good morning.
Good morning. Good morning. I have the privilege of introducing CA Rajiv PT, BBA FCA to you. He is a fellow member of the ICAI and is a partner of Rajan Chakravarti and Associates, CA Chennai. He is qualified both as a chartered accountant and company secretary, and he has also completed his bachelor's degree in business administration with the first rank from the University of Calicut. I think that deserves a clap. He has also secured scholarship from the ICAI throughout his CA course for his merit in academics. So I think we all have to be very careful before we open our mouth in asking questions. He ventured into professional practice after successful employment stints in the Audit and Assurance Department of KPMG India. He has specialized his practice in GST and is providing GST advisory services to some of the big business conglomerates having over 50,000 crores annual turnover. He is a regular speaker in the in-house training of the firm, and he has also presented papers on GST in various business forums and MSME associations. He has conducted many corporate trainings on GST to impart the knowledge of the biggest tax reform in India. Yeah, we welcome.
Thank you.
Very good morning to one and all present here. So first of all, let me thank the Institute of Chartered Accountants of India for inviting me for this special program on GST and giving me, entrusted me with one of the most important topic in GST, that is input tax credit. And let me also thank TV Srinivasan sir. He is available here and he is a program coordinator. Please give him a good round of applause for he's let me tell you, I've been doing many programs with the institute, and the way he is coordinating is fantastic, because every he will give an advance intimation. Second, every programs, eve of the program or on the day of the program, he will remind me that tomorrow is your session or today is your session. So very nice person. And then I have a lot of old memories also with him, but he may not be able to remember because in my profile ma'am read that I got a scholarship from the Institute of Chartered Accountants of India for merit in academics. So when I was a student way back in 2008. At that time I approached the institute for getting the scholarship, and somehow it was not processing. It got stuck somewhere, and then at that time he was the secretary, he was in charge of SARC, and then he helped me out to get that scholarship. So I have a personal attachment to him. So that is we have a separate personal relationship. And let me also thank Sri Priya. He's the CPE chairperson, and for arranging these kind of GST programs on a monthly basis. So this is not a one-time program. Every month we are, the institute is arranging this GST program. So let me thank Madam for a warm introduction. Thank you, ma'am, for the introduction. And we can start, right? Otherwise it will be an injustice to those who are present here at on time. So we'll start the session. So before getting into the topic, let me ask you a couple of basic understanding on GST and basic understanding on input tax credit. So before getting into the topic, before getting into the presentation, let me tell you one thing. This should be an interactive session. Otherwise, it will be boring. Let me tell you very honestly, 3 hours, 4 hours, I'm going to speak. And if I am alone speaking, then it will be like a very, very boring activity, right? I know that, I heard that, one person cannot listen more than 20 minutes. His concentration will get distracted. So, if I continue for 2 hours or 3 hours or 4 hours, that's all. You will curse me at the end of the day. So, better we will stop. We will have a participative, program, and where I need your inputs. You ask all your queries, and to the extent I know, I can clarify. And if I am not able to clarify, I can go back and then revert back to you on that. So, all are ready? But response is still the same. No, I need a strong participation from your end. So, say yes or no. Are you ready?
Yes.
Yeah, that's good. So, let me tell you one thing. This interactive means, you have to ask a lot of questions. You have to stop me wherever you want me to stop. And you can ask a lot of queries. ITC, let me tell you, let me begin with one more, some small question. Who is the king of a jungle? Who is the king of a jungle? Lion, no doubt, right? ITC is the king of GST. Take it from me, ITC is the king of GST. So if you know ITC very well, your 70% of your problems, 70 to 80% of your problems are over in GST. 70 to 80% of your problems are over in GST. Okay. Now from where I am talking, I am taking a statistics, right? 70 to 80%. From where I am taking the statistics, 70 to 80%? Is it something which I am taking from my own experience, or I am taking randomly, or the thing is, if you look at the old indirect tax regimes, VAT or service tax or excise duty for that matter, 70 to 80% of the litigations are only on ITC. So now you would be knowing the importance of ITC. Correct? You should know return filing, you should know place of supply, you should know time of supply. All topics are required. I am not saying that those are not relevant. But I am saying this is the most important topic. This is a big cake for the department. How can the department make money? How can the department make money? You tell, you will have an experience, right? You tell me how the department can make money out of a tax regime. There are two ways, right? One is either they have to say that we will say it is exempted, but the department will say no, it is taxable. Or we will say that it is taxed at 5%, they will say no, it is taxed at 28%. So this is from the revenue aspect. Now we will have something called input tax credit aspect. Revenue aspect, what will happen? Assume that I am a company operating from Chennai. I have, say for example, 10 products, or I have, say for example, 50 products, or I'm doing, say for example, 10 services. What I will do? I will do an in-depth analysis of these services or products to understand what is the HSN code, what is the rate applicable, whether there is any litigation prone area, whether there is any classification issue. I will do an in-detail analysis, right? All of you would have done it. Can you do this exercise on ITC? Input tax credit will come to all of you on a daily basis. You will get an invoice, you will see whether the tax can be taken, input tax credit can be taken or not. So this is a regular affair, on a daily basis it will come. It is not possible to obtain an expert opinion on input tax credit on various matters. If it is a regular, recurring and all, we can take the expert opinion, otherwise it will be very difficult. Most of the time companies, they are applying their own judgment and taking the credit. I will tell you one of my recent experience. Two things. One, we did an audit for one construction company. They are having, branches across India, almost 18 states they are having the branches. And everything was going good with the company. There is nothing wrong with that company. So, but it's a construction company. There is a huge exposure, huge turnover, huge input tax credit. So CFO called me and then said, Rajiv, why don't you do an audit for us? I said, sir, audit format has not come. It will come later. So he said, no. I want you to do an internal audit to check whether all the compliances have been done properly. So I said, fine, I will do it. So we started somewhere in April. After the financial year got over, then only he invited me and then we started doing the audit. When we started the audit, we found a huge hole in that company. The problem was with input tax credit to the tune of around 10 to 20 crores demand. Which, that means, when we did the audit, we denied that credit. Very simple problem. The general understanding to avail the input tax credit is, first one, he should be a registered person, and then general understanding is, there should be a receipt of goods and services, and there should be an invoice. It should credited to the electronic credit ledger. That's all, right? Anything else is required to claim the input tax credit? Since I said there is a problem, this guy is saying something inside that, right? So what is your understanding? Let me also take a view from you. What is the general understanding for taking the input tax credit? Nothing wrong in it. Even I am telling you, there are a lot of, nobody is an expert in this particular area in GST. Only thing is, whoever is reading more will get more knowledge, and whoever is looking from different case laws, advanced ruling, etc. will get a more different views. Otherwise, all of you, including me, are in the same line. So there is nothing wrong in asking doubts. Even if it is an irrelevant question, I don't mind, because when you ask questions only, you will understand whether it is relevant or irrelevant, right? So you ask questions, no problem. So let me ask you, there is nothing wrong in it, okay? Even if you ask, many of the forums, I used to say, when I ask audience to ask doubts, they'll feel like, should I ask doubts? The other people will feel that, I don't know anything, that is what I'm asking doubts. Those who are having knowledge only can ask doubts, irrespective whether it is relevant or irrelevant. Second thumb rule is, please smile. Please smile. I don't like to see faces sitting very seriously attending a GST program. At the end of the day, we will get a heart attack. Please smile. There is no smile tax. If I am not wrong, madam, is there any smile tax in Chennai? No. To my knowledge, there is no smile tax in Chennai. You smile. At least your 1 year will get extended. Last time when I requested, last year audience were smiling like anything. I don't know what is the meaning of that smiling, that is a different issue, but still. So I told them that smile. So one participant told me that, sir, if I smile, you can smile, but you cannot smile in front of the assessing officer. I said, what is the problem? I did a lot of assessment, even I went to a tribunal, I appeared before the tribunal personally, and I smiled at the judge. Judge was very serious. You know how the judges will be, right? So they will be very serious. I smiled at him. And ultimately, the case was in favor to us. The reason being, it's not. Obviously, the case should be strong. That is the first thing. You cannot even, only with the smile you cannot win. But you can win the heart of the judge or the heart of the assessing officer with a smile. So the last time the audience said, sir, if you smile, you will lose the case. I said, no, it's the other way. If you argue with that person, argument wins the situation but loses the person. But if you smile, with that smile, you can win the heart of thousands of people. So keep smiling, there is nothing wrong in it. Okay. So let me ask you the question. Let's come back to this. What is input tax credit? How are you doing it in your office? Quickly tell me, because we have huge topics to be covered. So please quickly tell me what is the general understanding. Please, somebody has to start. That is the problem. Starting is the problem, no?
General understanding?
Yeah, please.
Understanding is like whatever debited to the P&L.
Absolutely.
We are suggesting them to take the credit.
Correct.
And if any capital good which is used for the furtherance of the business, or especially used like some plant and machinery or something in the manufacturing company,
Correct.
then we are telling it to take.
Correct.
Otherwise, like some building, motor vehicle or something like that, then we are capitalizing it.
Okay. Excellent. That's an excellent answer. Any other views? Any other aspects? Don't worry, I will take you through the complete thing. Ladies, 3 ladies are sitting. Ladies will be given the preference. Any idea? Madam? Any idea? Nothing is required to take the input tax credit. Huh?
Business or non-business?
Absolutely, it should be for the purpose of business. Absolutely,
If
very
you are
good.
a direct consumer for some other non-business
Yeah.
market, you can't take that.
Absolutely, it should be for the purpose of business. It need not be exactly as per form, section 16 or 17 or something. I'm going to take that. That is my responsibility. You tell whatever you would like to say.
The time limit for taking credit.
Absolutely, there is a time limit for taking the credit. Excellent. Any other point?
Should have been reported in the returns.
Absolutely, it should be reported in the returns. Otherwise, unless I'll put it this way, after return, it will come to our electronic credit ledger. Otherwise, it will not be possible. Then,
Even reverse charge the take.
absolutely, reverse charge also can be taken. There are a lot of points.
Timely filing of return.
Timely filing of returns, correct. Otherwise, I will not be able to take the credit. Subject to the time limit which is prescribed under 16.4. Then,
Identifying translation credits.
transitional credit. Okay, transitional credit, yeah, correct. Transitional credit is also part of it. That is, delta under 140, 141 and all. So that is actually.
In assessment smile with assessing officer, don't be.
Sorry?
We had to smile at assessing officer. IT officer.
Yeah, you can. I'm telling you my experience. I don't know about the other people's experience. To be very honest, let me tell you, admit in the open forum, I appeared for the commissioner, I appeared before the tribunal, I appeared before the, the assistant commissioner, etc. To be very honest, I'm not, lying. We won all the cases. First thing which we ensure is the cordial relationship with the department. Let me tell you openly on the forum, we will not pay even 1 rupee as bribe. This is our office policy. Even if we lose the case, we don't mind. We don't mind losing the cases. We don't even pay 1 rupee as bribe. That is our office policy. We will tell the client, if the client is saying, we will say that we will not accept the client. Very simple, straightforward case. Paying money and the winning case is not the challenge that any Tom, Dick and Harry can do. Need not be a chartered accountant. So we don't do those kind of illegal activities. We are very straightforward. If the client is encouraging, we'll say, get out of this office. That's all, very simple. So you can win, sir. No problem. You can definitely win. I will give it in writing. Provided your case also should be strong. You should do the other side also. So any other points on input tax credit? Please speak.
There is certain expense on which input tax credit cannot be taken, like
Absolutely.
membership subscription fee or food and beverage and health
Absolutely.
insurance for employees.
Absolutely.
But in case of other insurance employees, if it's mandated by law, we can take it.
Absolutely. There are some blocked credits which are prescribed under 17.5 of the CGST Act 2017, which she is talking about. Absolutely. You can avail all the credits subject to some blocked credits. Any other points?
Refund of credit.
Refund of input tax credit, it is dealt under 54. That there are certain situations where you can apply for refund. That obviously some other faculties will be handling that refund section under section 54. But let me restrict my discussion to ITC. Good point. Any other points? Yeah.
What about the time of transitional? Transitional time, the credit what was available as a SENMAT or whatever.
Yeah.
Got transferred to this.
Yeah, there is something called Tran 1 form where whatever the closing balance in the returns could have been taken into your GST returns. Okay, that automatically by filing the Tran 1 form, automatically it will come and sit in your electronic credit ledger. The time limit, everything is over. So
Full amount was given as.
yeah. Subject to the limitations. See, for example, assume that you are not eligible to take the input tax credit under the old regime and you wrongly availed it. Then you cannot carry forward the entire one. You have to do that manual, and then whatever you claim, entire amount will come to your credit. And whether it is an eligible one or not eligible one will be verified by the assessing officer. So initially they said all the 1 crore above ITC transitional credits, they will be doing a scrutiny assessment, etc. But nothing happened. Some clients got the notice, some clients did not. So transitional credit anyway, it is already.
There is no contradictory terms or with reference to the earlier one on the GST.
See, that's a good point. I have to I'll add one more point to it. First thing which all of you must do when you would like to learn GST, don't never carry an impression that excise duty, service tax, VAT, all three got merged, I would say subsumed, and GST born. That is absolutely a wrong conception. Everybody says, sir, when there was a goods, excise duty, VAT were there. Now what they did, excise duty rate 12.5 and VAT rate is 5%. They added these two, it became 17.5. The same goods, now it is 18%. Had it been 12.5 excise duty and 14% VAT, they added these two and then put it into 28% tax bracket. So old and the new are same, but it is a misconception. Reason being, I will tell you one of the recent experience. I was handling one corporate training fund, one of the biggest. All of you will be having that company's product. I don't want to mention the company name. All of you will be knowing that company. Huge turnover. So I was taking one by one issues. The total 20 issues I handled, out of they were not complying with 18 issues. Not because that they did not, it was like escaping their eyes. See, if it is a financial transaction, it will not escape your eyes, right? But most of the transactions were non-financial transactions. I'll give you a typical example. Assume that there is an employee who traveled from here to Mumbai, okay, and Mumbai charged Mumbai, he would have stayed in hotels and then he would have spent some money, etc., GST would have charged. So Mumbai branch was taking the input tax credit. Now the question is, company has taken a view that if the company travels to Mumbai branch, it is as if it is some supply made by Chennai employee to the Mumbai branch. Now, they were taking the credits, but the question is, you supplied the service, have you raised the invoice? It is something called cross charge. Cross charge and ISD is always a confusing topic. Cross charge was not done. Huge amount lying with them. This is one issue. So like that, there are a lot of issues with that company. So these are all something which we are not familiar with under the service tax law or under the excise or VAT or any other law for that matter. Now it's a time for us to unlearn whatever we learned under excise and learn whatever it is there in GST afresh. What I do is, I just keep all my excise duty, service tax books away. I don't even refer that. I take only the relevant case laws from that, which I can apply to the extent possible. That's all. You should not even think of excise duty concepts or manufacturing, etc., Nothing is valid here, because here the word used is supply.
No.
Now, yeah.
I have a question. See, you are talking about cross charge.
Yeah.
Like head office charging, okay, to its
Sir, can I do one thing?
Yeah.
This cross charge, ISD, all are something which is related to supply. It's not within the input tax credit. I will explain that post the session, because cross charge, since I mentioned.
Since you
Yeah.
mentioned, I got.
Yeah, please. Then I will answer. I moved away from my topic, so I have to take this responsibility. Yeah.
Yeah. See, is that, for example, head office or
Yeah.
holding company or charging, or a company charging other subsidiaries,
Correct.
group companies.
Correct.
A service charge to us providing IT and other technical
Correct.
services.
Correct.
So the GST will be applicable.
Correct. Absolutely. I will tell you a typical example where what happens is, this is coming under section 15 for the valuation purpose. If the head office is providing, or the holding company is providing all the HR services, finance services, everything, they have to do a cross charge. This is one. I will tell you what happened to this company where I did the training. First floor and second floor. That means, exactly speaking, it was 10th floor and 8th floor of that particular big building were occupied by this company. But the rent was paid by Chennai office, Chennai registration, but two registration numbers were there. One is for the regional office, there was a separate business vertical. Another was another vertical. Two verticals were there, but rent was paid by one branch. So what happens is, two office premises rent were paid by one person, but actually that is not belonging to me. So this is something which is not for the, see here in this particular scenario what happens is that company will not be able to take the credit of the 10th floor because that is for the somebody else business. Though it may be within that ABC Limited's, they may be within the same group, but that will not work under GST. It's entirely different. Okay. Now, I told you that company which they did the construction, etc. We did the audit and all, right. In that company, what happened is I asked you all the questions, but I did not get what I expected. The section says the person should be a registered person, goods and services should be received, and the amount should be credited to the electronic credit ledger. All these points were there. Section 16 says, you can see the green color, right? The material is given, don't make a note of it, already the material is shared. Every registered person, subject to ITC rule 36 to 45 in the manner specified in section 40, entitled to take the credit charge on any supply of goods or services, both to him and which are used or intended to be used in the course of furtherance of his business and credited to the electronic credit ledger of such person. Generally we have an, the way we read the law is, whatever we wanted to read, we will read it. If there is any reference to some rules, etc., hey, why should I go and read that? Again, that will get extended. So we will stop there. So it's a general tendency. So in this section, the hidden problem is, you look at that point number 2. Subject to ITC rules 36 to, ITC rules means it's starting from 36 to 45. And in the manner specified in 49. We don't go to the sections. We ignore this and then we'll read this. The problem with this company was in that. The problem was 36.2 there is a rule. That 36 rule says, in my entire presentation, this is like a silent poison. Let me take it from me. This is like a silent poison. Even if you are 100% compliant company, there is a possibility that you will be missing out this particular point. See, when we were appointed as the indirect tax advisory for one big conglomerate, what happened is, what we did is, we got appointed and then we were requested to advise them. What we did is, on a monthly bill, we raised the monthly bill. I requested them to remove a couple of particulars in that invoice and send it across. I requested my admin team to do it. Admin team did it. Invoice went to them. The payment also processed, it got credited. I requested my manager to inform me the moment it got credited. They usually release the payment within 7 days or 15 days. Very compliant company. The moment it got credited, I called the CFO and said, sir, you have a big problem. You know what was the problem? The same problem which has happened in that construction company. It says, 16 says, you can take the input tax credit only subject to rule 36 to 45. 36.2 says all particulars applicable, all the applicable particulars as specified in the provisions of chapter 6, that is for invoice, debit note, etc., etc. These are all the tax, tax credit documents where you can take the credit. All particulars should be there in that invoice, tax invoice. So rule 46 says there are 17 line items. 17 line items which are required in an invoice. If one is missing, your credit will be very well denied. Your credit will be very well denied. You may be asking, sir, what are you talking about? If the other party make a mistake, how can you penalize me? And place of supply is not mentioned, how can you penalize me? It is his mistake. As long as rule 36.2 is available, all of us are in trouble. In my office, we don't have too much of input tax credit. Ours is a CFO. We generally charge, we generally collect. We will not be having any input tax credit. It's a service-oriented industry where most of the cost will be for the article assistants and then the staff. But you look at this company like big companies where they will be getting 3,000 to 4,000 invoices. Will you be able to verify this on a daily basis, 17 line item on a checklist basis? It is not possible. If I say something to the client will say, Raji, what are you talking about? Is it practically possible? Do you want me to appoint 10 people to do this exercise? So it is not possible. How can you do that? So can I ask you one thing? Yeah.
If you really see ITC as a cash flow issue, the company will do that. It is a cash flow issue.
Correct. No, this will not be cash.
I'm serious about this thing.
I'll put it this way, sir. This will not be cash flow issue. As I said few minutes back, this is a silent poison. Nobody notices it. Nobody notices it. If you have not done it, it is not your problem. Because most of the major companies also, when I did it, when I discussed with them, they did not follow this. I don't know what happened to them. They ignored it. You know why? What happens in the construction industry or most of the unorganized sectors? From where they will take the invoice? From where they will take the invoice? I assume that I would like to invoice. The GST has come, so I have to raise an invoice. They will go to Google, invoice format. So one format will come, they will fill up their details, they will send it across. They will not see whether it is complied with rule 46 or 36.2 and all. So this is the practical issue which is happening. Now, once the law has come, you cannot say that it is not practically possible and all. You have to definitely give a solution to it. So what is the solution to it? What you can do is, you take out all the major vendors. Take their last invoice. Take their last invoice and see whether they are complying with rule 46 in terms of the invoice rules. If the 17 line items are not available, send it back to them, ask them to give the fresh invoice with the same number everything after incorporating the particulars. Now, when you go back to your office if you are practicing chartered accountant, inform all your clients there is a bomb which is planted by the GST department. It will get burst anytime. Recently I met one director of intelligence, Chennai. He is GST director of intelligence. I asked him, he's a very good friend of mine. So I asked him, sir, most of your employees are sitting here and they are not going to any raid or audit or etc. He smiled at me and said, Rajiv, if I go now, I will get nothing. Even if I find something, they can do rectification by before 30th of September. Let me go after 30th of September or after 1st December, I will get big things where they will not be able to make the rectifications. I don't want to mention his name, but this is the actual scenario in the market. Now, they will come and they will take all the invoices, they will say all the particulars which are required to be mentioned under 36.2 are not available. I will deny your credit. You can do nothing. Only you can question in the court of law that it's a procedural issue, because of that my credit should not be denied, etc. You can argue all these things. But that requires a lot of time. But basically what we have to do, we have to ensure that they are complying with Rule 46. So, before the session was starting, I was talking to him, Rajesh, right? Yeah. So I was talking to him, he was saying that he has a lot of distributors, small distributors. So now it is his responsibility to ensure that all these distributors who are giving the invoices are in compliance with Rule 46. How many distributors you will be having? 200, 300. Still it's a cumbersome process. So you have to do your work, and over and above you have to do their work also. Second thing, recently there was a judgment from the Supreme Court. Now let me deal with that also, because without telling that, if I go, you all will be afraid. See, what happens is, under Delhi VAT Act, there was a provision that the party should pay the tax. That means your vendor or your supplier should pay the tax to the government. Then only you can take the input tax credit. The same provision as that of GST. It is in the name of Arising India Limited, and there is another party also to that case, on cost merchandising. The similar kind of judgments were there in ABL Traders in Madras High Court, and then Sri Vinayaka Agencies in Madras High Court, and Cotton, Mahalakshmi Cottons in Mumbai High Court. So there are a lot of plenty of cases. Delhi High Court said this was questioned not under the VAT Act. The assessee questioned this provision itself. They said it is against the Article 14 of the Constitution. Article 14 says equality. So now what happens is, the question here is whether the innocent purchaser and guilty purchaser, can they be treated together? Delhi High Court said no. So why I am saying this is, if you look at 16.1 section, which says it should be credited to the electronic credit ledger, right? So how do we get the, how does it get credited to electronic credit ledger? All my friends will appreciate that the other party has to make the payment. If he defaults, I will not get the credit, right? I will not get the credit, right? Same scenario continues, and department knows this issue. They went for appeal with the Supreme Court. Justice Chalameshwar gave the verdict recently. He said, the Supreme Court of India, he said, no, this cannot be questioned by the special leave petition was filed, and the Supreme Court said, no, that was dismissed. That means whatever Delhi High Court said is correct. The same scenario continues in GST. The provisions under this particular sections can be questioned tomorrow by anybody under Article 14 of the Constitution of India. Please keep it in mind, because I will tell you what happens is, tomorrow you have to receive a credit of say for 1 crore. Suddenly the vendor vanished. Whatever it may be the reason, maybe he become insolvent or whatever it may be. What will happen to your credit? What will happen to your credit? Gone. You already made the payment, he vanished from the market. No, this is the responsibility of the department to ensure that he is making the payment. You can very well challenge this in the court of law, but not at the department level. You cannot. You will not get any kind of relief. Now, yeah.
But when you say it is, you can take the credit only when it is created to the electronic credit ledger.
Yeah.
But in today's scenario, what is happening is the electronic credit ledger will be created only if we give the purchase details. Like
Correct, absolutely.
there is no that what do you say that GSTR 2 is not practically going on much.
Correct.
Only in the 3B when you declare the purchase, then it is going to get the credit.
Correct.
So then
See, assume that the 2A everything is coming, and then the credit is not appeared in your 2A. What will happen? You cannot file the return. See, nowadays what happens is it's all electronic. Delhi court case and all, that is not electronic. Now what happens is it's all electronic. You will not be able to file. But you are very certain that even after follow-up, you are not able to get the credit. And it is a huge amount. It is worth pursuing the case. You will definitely, 200% you will get the victory. The reason being, it is already approved by the Supreme Court, because Supreme Court gave a verdict in favor of the assessee. So you can very well challenge under Constitution 14. Now, the session overview, how we are going to take the session. First is, we are talking about the relevance of input tax credit and what is the relevant statutory provisions, issues, illustrations, case studies, AR rulings and case laws. And what is the relevance of this inverted tax structure? This picture makes a lot of sense, no? I already discussed. Tax assessee would be in this side, GST department will be on the other side. I will add one more point. I will also be standing with the tax assessee actually for defending the tax assessee. And what are all the relevant statutes? The relevant statutes are the CGST Act 2017 and Chapter 1, where we will have a couple of relevant definitions. We have CGST Act, Chapter 5, where the relevant provisions under input tax credit is being given. CGST Rules, Chapter 5, where they define, all the rules. They have given all the rules, 36 to 45. And you cannot see these provisions under UTGST or UTGST or IGST. So don't worry, they have given a complete reference to CGST Act. So whatever applicable under CGST Act will be applicable to IGST Act and UTGST Act. because the corresponding sections are under section 20 of the IGST Act says, if you want to know the rules and regulations of ITC, go and then refer CGST. Under 21 of the UTGST, they said, if you want to know the ITC provision, go and refer under CGST Act. And relevant statutes are given. I've given the PPT also, so you can go through that relevant rules, etc., etc. And what is a presentation flow? So whenever I make a presentation, I have my own flow. That is, first, I'll be dealing with the definitions. Don't worry, I will not make you, it will be very boring if I take the pakka definition kind of thing. I will take it in a different manner. And eligibility and conditions, blocked credits, and then we have reversal of ITC. We have availability of ITC in special circumstances, job work, ISD, and banking financial institutions and NBFC. I will not be dealing, if anybody from banking financial institutions and all, anybody from this audience, anybody from banking financial institutions, NBFC? No. So if it is not necessary, I will not be dealing. I will be just touching upon on that particular some points. Definitions. How do we learn a language? Assume that I want to learn English. I have to start with the vocabulary, right? I have to start with the vocabulary. Nothing else. Grammar and all will come after that only. What is the grammar? Interpretation of law will come later. But what is the basic thing? You should know the vocabulary. Definitions are the vocabulary for the statutes. If you don't know the definitions, if you read the law, you will not make the actual meaning out of it. Because definitions are the key. So I have taken a couple of basic definitions which are very, very relevant for the purpose of understanding the input tax credit. First point is ITC. ITC is defined under 263, which says, means the credit of input tax. Very, very simple definition. Everybody was happy. Input tax credit, nothing. Credit of input tax. Typical Indian law, no. Now will come the troubles. Now they are defining what is input tax. 262 defines input tax in relation to registered person. Please note, it's only with respect to registered person. Input tax is not at all applicable to other than registered person. So no registered person except in case of 18.1, where, sorry? No. 18.1 which says, see, for example, you are liable to get it registered and then you apply for registration, and within 30 days, you can apply, and if the registration is approved, and this will be effective from the date of you become liable. So in that case alone, even though you are not, because that is a retrospective effect, they are giving the registration. That is only exception case where this will be, there is an exemption. Otherwise, only registered person can avail input tax credit. So input tax to registered person means CGST, SGST, IGST, UTGST charged on any supply of goods or services or both made to him, and includes IGST, then includes all reverse charge. All that A, B, C, D, E are reverse charge under the respective act. IGST charged on import of goods, that is one, and then the B, C, D, E are reverse charge. 9394 under CGST Act, 5354 under IGST Act, tax payable under section 9394 of SGST. These are all reverse charge mechanism, but does not include tax paid under the composition levy. Composition levy, they are not charging, so you are not eligible. Any problem with this definition? Any problem with this definition? Many are looking at the PowerPoint presentation, so they will get no. Oh, they have a book, no? Okay. So tell me, is there any problem with this definition? See, actually, when you read a law, you should not read what is given. What is not given is what you have to read. What is not given in this? One tax is not given in this. Can you point out what is that? One tax is not given. Under GST law, one tax is not given. Is compensation cess is there? Compensation cess is there in the definition? No? Believe me, believe me, I have copied everything. I did not miss out anything. So, compensation cess is not there in the definition. So, can you take compensation cess as input tax credit? In my view, no. You cannot take, because it is not input tax credit. It is not defined as input. Only input the credit of input only you can take it. So in my view, you cannot take the input tax credit of compensation cess. Any other views on this? But you would have heard that in the market everybody is taking compensation cess as input tax credit against, that can be adjusted against, only against input compensation cess. You would have heard about it. Then from where they are talking about it? It's actually from the Compensation Cess Act says, section 11 says, compensation cess can be taken as an input tax credit for making payment of only compensation cess. So section 11 comes to the rescue of compensation cess. Otherwise, no input tax credit can be claimed for compensation cess. So let me repeat again, compensation cess can be claimed as an input tax credit only to discharge the liability of compensation cess, because we are getting this privilege only, no, not the privilege, it is coming from the act, so it is, we are getting this right only from the section 11 of the Compensation Cess Act. Now, yeah, please.
Don't mind when this compensation cess will apply actually.
See, the intention of the compensation cess is, the word itself is saying, if there is any loss to the arrangement with the states is like, if you incur any loss for the next 5 years, central government will compensate it. So government needs some sort of extra revenue to keep the reserve. So they said they will be charging compensation cess. They will identify the products. To your knowledge, let me give you some examples. Vehicles, when you purchase, they will be charging compensation cess. Luxury items, basically. Second, tobacco, etc., they will be charging. Like that, whenever they identify, now they got huge reserves. They got huge reserves. GST is not a loss actually. It's actually a huge reserve is available in compensation cess also. So, government can notify any product for that matter. Okay?
Excuse me?
Yeah.
What is the meaning of compensation cess? What is the meaning? What is it?
That as I said, the arrangement with the state and center when the GST got introduced is, assume that the state of Tamil Nadu is coming to GST, okay, and now Tamil Nadu is a manufacturing state, lot of excise, lot of input, VAT revenue is coming to the state. Assuming that after introduction of GST, if the state incurs any loss, central government said, don't worry, we will compensate whatever the loss you incur. So that is a concept. So they introduce compensation cess separately and they are collecting the money also. If there is any loss, so far to my knowledge there is no loss. So if at all there is any loss, they will compensate it. And next is, 3 keywords. Yeah.
You are referring other cess also, other than compensation.
Only compensation cess. There is only compensation cess.
Lately we had that Chris Kalyan.
No, all those things are under service tax. All these things are gone. Krishi Kalyan and everything is subsumed. No such cess are available now. Now we have input service in capital goods. Input means there are 3 things. One is goods, services. There are 2 things, right? Goods and services. We don't know anything other than goods and services. Goods, you can put it into 2 buckets. One is inputs and second is capital goods. Service can put it into 1 bucket, that is service bucket. Only goods, we have 2 categories. In the goods, it says, first they define capital goods. Capital goods means any goods which are capitalized in the books of accounts. Input means other than capital goods. Service means anything other than goods is service. Clear? That's all, my definition is over. I am not taking you through the complete definition. You understood 3 buckets. One is capital goods, inputs, services. Clear? No doubt about it? Now the confusion comes. First let me ask you, I want you to make you confused or I want you to make enlightened with less knowledge? If you want more knowledge, you should get confused. I will try my level best to confuse you. That is always my intention is to make the audience confused to the extent possible, and I will obviously take you out of that confusion at the end of the day. With the simple definition we closed it, right? whatever capitalized in the capital, whatever capitalized, any goods which is capitalized in the books of accounts is capital goods. Very simple, we closed it. Now the trouble comes. Capitalization. What is capitalization? Is it under Companies Act? Is it under Income Tax Act? Is it any other law? Is it as per accounting standard issued by ICAI or generally accepted accounting principles? Tell me no. Whatever you like, you can take. We have given you 6 options. Which capitalization you are talking about? Income tax?
So there may be assets who are not subject to income tax, like tax audit and all.
You take the other one. Accounting standard issued by ICAI is there. There are Companies Act applicable is there. Income tax is there. And then any other law. And then company policy will be there. Or you can have, what is capitalization? There should be some sort of thing, no? Any idea? We simply read it as capitalized in the books of accounts. Now the confusion comes. See, let me clarify you. As long as the act is silent, you have every liberty to do whatever you want to do. In my view, you take the generally accepted accounting principle, whatever the way you capitalize, no problem, nobody can question it. Okay, no problem. Now the second question. Is it only when you buy a machinery, what happens? You will bring a big machine, it has to be installed, right? So I will bring a big machine for 1 crore, I will install it. When I install, I will be incurring installation, commissioning, all service charges, transportation, etc., etc. When I install that, the total cost comes to 1 crore 10 lakhs. What is the capital goods in this? 1 crore 10 lakhs or 1 crore? How many of you say 1 crore 10 lakhs? How many of you say 1 crore? Please raise your hands. 1 crore 10 lakhs. How many say 1 crore? Nothing wrong in it. I need an opposition. Your opposition, if the opposition is not there, then it will be difficult. Then I will be alone on the other side. If you say 1 crore 10, I will take 1 crore. If I take 1 crore, if you take 1 crore 10, I will take 1 crore.
As far as the law is telling, I have the liberty to calculate.
Absolutely correct. But sir, you look at the word. Capital goods means any goods, means goods. It's restricting to goods. Right? Installation, commissioning, transportation is not goods. It's a service. Now will your view be different?
No, sir, without instating that goods, sir.
Sorry, sir?
It says the value of which, it comes under the value.
But it says
You
the
value
stuff.
goods.
Yeah, but it says it starts with goods.
True. It's goods, but it's value.
But in my
Value,
The value of that
the
goods.
value of the things are included.
The value does not confine to goods, sir. Service. Sir.
Value is not only the invoice value.
Okay.
in my books, the value of goods includes the service cost.
Good, interesting views. Any other views? You know, the advantage of this program sessions are, I will also take a lot of interpretations.
Sir, without that service, that
Yeah.
good is dumb.
Okay,
It cannot be termed as good.
okay.
So the value should include.
I will confuse you to further. I'll put it this way. If the service is also supplied by same vendor, it's a composite supply. Composite supply. One invoice, everything is same. I'll give you one more option. Capital goods have come, but services are separate.
No, in either case it is capital goods or value is part of capital.
Majority, all are supporting the same point. So I have to fight against the entire crowd now. Now the point is, there are 2 views coming on this particular topic. One view is, as the senior person said, sir, what's your good name, sir?
Ramanathan.
Ramadan. Yes, Ramadan sir said, when I capitalize the entire value. So I can consider this as part of goods. Second view is, it says goods that does not include services. Both views are possible. Now the question is, what is the relevance of it? Why are you discussing so much? Anyway, whether it is capital goods or input tax, anyway you will get 100% claim. Input tax credit can be claimed. What is your problem now? Why are we discussing so much about this if there is no difference? if it doesn't make difference. It makes difference not at the time of availment, but it makes difference when at the time of reversal of credit. Under under rule 42, reversal for the purpose of input is given, input and input service. Reversal for capital goods is given under 43, rule 43. So the treatment for reversal are different. So if you take a view which is not in favor of the department, they can argue in the other way. So this is, keep it in mind, when you do the reversal, assume that you are doing exempted supply, or when you do non-business, etc., exempted supply, etc., all those things, the rules are covered, and at that time only you will have issues. Just keep it in mind at the time of availment. So what is the solution which I would like to give us? I don't want to conclude on this because there are two views I already gave you. When you capitalize, keep your service portion separately. Keep your service portion separately. Recently also in that training I told, keep your fixed asset register, asset number 1, goods value. If you don't want to capitalize the service component separately, put it as a separate line item under the same asset number. At least tomorrow, after 10 years, if they come back and then ask us to do the exercise, it is very difficult to go back and then find out what is the service value. So please do this exercise. Okay. And if you have any problem in future, at that time you can take this number separately. Now, capital work in progress. We have capital work in progress, no? Can you take the input tax credit on capital work in progress? Nowhere it is defined.
No, that is not capitalized in the books of capital working progress.
Capital work in progress is capitalized actually.
No, it's not capitalized. It is accumulation of expenditure and
Okay. Okay.
It is capitalized working progress means it is
Okay.
capital commitment.
Okay.
Which were recorded in the book. That doesn't mean that capitalization happens only when you are
You mean moving into the fixed asset register? That is different. That is different. So here, as far as the GST is concerned, the moment you receive the goods and the moment you receive the invoices, all these conditions are satisfied, you can very well take the credit. Based on the GRN, you can find out that the goods are received or not. So you can very well take the credit. So on capital work in progress, you can very well take the credit upon the receipt of goods. You don't have to wait for the asset to become fixed asset, because nowhere it is mentioned. The conditions which are mentioned under GST are satisfied for the purpose of capital work in progress. And intangible asset, I am not taking it. Again, this will be a very confusing topic. I am just moving on. I talked about goods, you take the other way of it. Intangible asset, software coming with the CD. Now the CD value, can it be capitalized as service or goods? The same thing. Okay. Only thing is, you keep the goods and services separately in your fixed asset register. Now ISD. ISD is input service distributor. If you look at this definition, it's very simple. It says, an office of the supplier of goods or services or both which receives tax invoice under section 31 towards the receipt of input services and issue prescribed document and having the same PAN. Very simple. There is always a confusion between input service distributor and cross charge. Do you want me to confuse you? Yes? Okay, I'll confuse you. My office is situated in, say for example, in Chennai. I have a branch office in Bangalore. That branch office conducted some business promotion activities in Taj Coromandel. Taj Coromandel raised an invoice for 1 lakh plus 18,000 GST. Because it is a CGST, SGST, they said, my Bangalore branch said, why don't you take the credit? I cannot anyway take the credit, why don't you take the credit? They availed the credit, they raised an invoice in turn, they raised an invoice to the same amount of 1 lakh. You understood the point, right? Taj raised an invoice on Chennai branch. Chennai branch for the same amount, 1 lakh, 18,000, they charged IGST. Because now it became IGST, they are able to take the credit. Is it correct or not? Yes? I need two views. Yeah, some gentleman is saying no. What's your good name? Kaushik. Kaushik says that it is not correct. Any other views? Madam? Any other views? No other view.
So only when a common service, the branch to branch cannot stand.
That's what the question is, See, the confusion comes mainly because there's a difference between input tax credit, input service distributor and cross charge. Here what happens? Chennai branch has received an invoice. He is not supplying any service. Only cross charge comes when he is supplying any service. Here he is not supplied any service. He has just received the invoice, and the way he is raising invoice is wrong. Actually, it should be under ISD only. Lot of confusions in this, because everybody will get confused. Please understand, ISD means he will get an invoice under section 31. His duty is to distribute, that's all. He is not providing any supply. If he is providing supply, no ISD, invoice, separate invoice under section 31. Okay, clear? If you get confused, later point of time, keep it in mind that cross charge ISD are different. Yeah. Bangalore can raise, but they will be charging CGST, SGST. So Bangalore cannot take the credit.
No, I'm asking how can the Chennai branch take the credit?
Chennai cannot take credit. That's a very good point. Thanks for Kaushik for reminding that. Here there is one more intricacy. First, about the IST. Okay. Second is, Chennai branch cannot take the credit because the invoice is actually pertaining to the other branch. So the only way is get the credit to Chennai ISD and distribute it. Chennai ISD can distribute it, Kaushik. Okay. Now,
Sir, in case there
yeah.
is no branch, suppose I'm operating only in Bangalore.
Yeah.
I held a meeting in Chennai, then the entire thing is gone.
Gone.
The CGST I can take.
No, you cannot take CGST, Kaushik. You cannot take, because it's a state-based thing. You cannot take CGST. This was the understanding when we started understanding the GST. We were under the impression that we can take, but later on we found that this is completely blocked credits. It's not practically possible. I will give you one case law also on this. Business definition. Business definition is very simple, but it's complicated. But I will be taking only one or 2 points. One is any trade, commerce, manufacture, profession, vocation, adventure, etc., etc., for pecuniary benefit, or pecuniary benefit means relating to consisting of money or not, and in connection with or incidental to any ancillary. Look at the point third, volume, frequency, continuity, regularity are not relevant. This is very, very important. I am talking only about A and C because we are going to deal with a lot of cases on this. And now we are getting into the conditions, main conditions. All of you understood the basics of the vocabulary, you got understood to some extent. I am not saying that you understood completely because it is not possible. Business definition itself is a big, huge one. Understood basically what is input services, capital goods, and then the ISD, what is the difference between ISD and cross charge, all these things you understood. Did you get a feel that you learned something new in the last 45 minutes? Yes? That is sufficient, I am satisfied. If you say no, I will stop. The moment you say, because ultimately for me, the only remuneration for this purpose is getting a good feedback from the audience. That is encouraging me all the time. Because I have been doing it for a long time. Whenever I go, I ensure that the participants are getting benefited out of it. Because you are having a lot of valuable time. 3 hours into, say for example 50 people, and my 3 hours, maybe 150 hours getting wasted if you don't understand anything. So I'm happy. So now let's look at, yeah.
So please explain section 270 because about trust and association
Trust.
Next, yeah.
No, madam, here, this slide or next slide, I think.
Next slide. Yeah.
This one you are asking? The first E point? Okay. So, the business means, sorry, ma'am is asking me to explain this, so let me take this. Provision by a club, association, society or any such body for subscription or any consideration of the facilities or benefit to its members. Your residential association, madam, if residential association is collecting money from its members and providing the security services, and then they will be using for cleaning the STPs, all those things. It is considered as a business. Now the question is, I am also residing in a residential association. Will it be taxed? Because it is a business. It is a supply. It will become a supply. Right? It will become a supply. This is a business. So, now what happens? This will create a big hue and cry because or many people in India will get affected. Right? Most of you will be staying in residential apartment. But subsequently they gave an exemption, madam, saying that if it is only 7,500, the collection from the members is in excess of 7,500, then only tax will be applicable. Otherwise, all of you including me, irrespective of the value of monthly subscription which you are paying to the association would be taxable. So the intention here is to bring everybody under GST. They said club, association, society or any such body. So nobody is escaping.
They have to register under GST.
Whether they are registered or unregistered, still they will come under. Oh no, you mean?
Yeah, under GST.
So registration, it will be handled separate session.
No, I'm just asking.
I'll quickly close it.
Yeah.
Sir, if the aggregate turnover exceeds 20 lakhs, then registration is required. But if it is if you are providing only exempted supply, under section 23 they said not required to be registered.
Sir, one doubt.
Yeah, please, sir.
Suppose it is 7,501 rupee. Entire thing will be taxed or 1 rupee will be taxed?
Very good question. It uses the word if it exceeds 7,500. It's not saying up to 7,500. So the moment it exceeds 7,501, entire amount will be taxable, sir. Yeah, sir.
See, it is also, although it's called a business,
Yeah.
it is service to the self, isn't it? I mean, suppose I am the chairman of the association.
Absolutely, sir.
Secretary of the association.
Absolutely.
I'm working for myself as well.
Absolutely.
So
Sir, the moment...
it will be considered a business as if I'm wanting to make profit out of it.
there are two ways you can look at it, sir. One is you yourself is providing. Second is this association, assuming that association has a clubhouse. They are letting it out. Okay? Letting it out for parties, etc., etc. To catch hold of these kind of transactions, they have to define association as business. Otherwise, they will not be able to catch hold of these kind of activities.
In that process, you are punishing others as well.
I am not punishing, sir. It's
I meant you.
So,
The tax.
I usually take the bail actually before I present. Whatever I am saying will be against the audience. So I used to say, it's not me. I am merely a spectator. I am just telling you what is there in the act. So, let's move on to this. 16.1 says, every registered person subject to ITC, this we already dealt with this. First point is, every registered person. So only registered person can take the input tax credit, not the taxable person. Taxable person means he is required to pay tax. Say for example, there is a search, seizure, etc., etc. There, they found that the turnover is crossed 20 lakhs, and now they will apply for registration. He will be a taxable person, not registered person. I will give you another example. One guy came to our office for filing the returns, income tax returns, to my IT division. So that guy's turnover reached around 50 lakhs. He is not aware that the GST registration has to be upon. Very poor guy. He is doing some medical shops, etc. And now he will be called as a taxable person, not registered person. Understood? He is not registered, but he is a taxable person. Now, charged. Charged means, say for example, composition levy, they are not charging us. One example. So you cannot take credit. Second, assume that sometime what happens, you will get a bill for 1 lakh. They will not be separately mentioning tax. Later the other party will come to know, oh okay fine, because I am supposed to charge GST. So they will consider this as an inclusive one, and they will give you electronic credit ledger also. ECL, they will give you the credit also. Will you be able to take the credit? Because it is not charged in your invoice, you will not be able to take the credit. Understood? Understood or not? Yeah.
But it is charged whether this concessional rates are there.
What?
Concessional rates for the airline and all.
What is concessional? Can you elaborate it?
Sir, for a domestic tour operator, it is some 5%. International.
No, that is different.
Whether it is coming under the charge, this thing, or like.
It is charged only. See, what happens is the airline and all, there's a basic rate, from there they will calculate the rate, etc. etc. That is actually charged only. There will be two components. The air travel agent will charge this amount, and then the airline reimbursement. So both are charging only. There is no concept of not charging. And so invoice, if it is provided, as I gave you a few minutes back also, Kaushik also was telling that invoice is raised, actually it pertains to Bangalore branch, but actually it is given to Chennai office, then they will not be able to take the credit because it is not, the supply of goods or services is not provided to him. You understood, right? To him. It should be to him only. You should not consider your Chennai branch, all registration numbers are to him, different persons altogether. All registration numbers. I am telling one registration number different. Additional place of business will be there. I am not talking about that. If you get a separate registration under GST, that will be considered as a separate person altogether. Now, utilization of this 49 says, now we will deal about rules 36 to 45. Before that, the utilization of input tax credit. All of you know that, right? ITC, CGST can be adjusted first against CGST and then balance with IGST. SGST can be adjusted against SGST, balance with IGST. IGST can be adjusted first against IGST, then CGST and SGST. Only thing, SGST, CGST cannot be adjusted each other. Second point you have to understand, this should be read it in from the registered person perspective. Okay. Next is court ruling. This is a high court case. Kaushik, you asked me, right, that will be lost credit. Assume that, they are charging CGST, SGST. What will happen? I'll add one more example to it. You know this Yatra.com, Booking.com, all these online companies, right? What they do is, their registered office will be in, say for example, in Delhi, and assume that Rajesh, right? Rajesh is booking from Chennai, and when he is booking, they will be charging him IGST, right? The hotel will be located maybe in Rajasthan. The Rajasthan hotel, the hotel located in Rajasthan will charge CGST, SGST. So Booking.com will not be able to take the credit because they are in Delhi. They have to charge IGST to Rajesh, he is located in Chennai, but they will not be able to set off the credit. It's a huge problem. You understood the problem, right?
Yes.
You understood, right? This is a problem, and Depot, it's a similar kind of another company. They filed a writ petition with the Delhi High Court saying that this is not the intention of the law, and then we will be running in loss if this continues. Court said, my hands are tied, I cannot help you out. They said, department to represent, that means you better represent it in the GST council, I cannot do anything. So, court is also, their hands are also tied, so this was a not favourable decision to the assessee, so they lost the credit. The same thing happened, one of my friend, he is representing the Ministry of Shipping, the shipping industry, he is representing to the Ministry of Shipping, and then, what happens is one ship starts from Mumbai, it will come to Visakhapatnam, it will come to Chennai. So whenever there is a repairing activities and all, they will be charging him SGST, CGST. So this ship which is starting from Mumbai, registered in Mumbai, will not be able to take credit. It's a huge chunk of money here, because ship activities and all, it will be huge. They are losing the credit. They are represented to the shipping industry, ministry. Through shipping ministry, they are representing to the finance ministry. But so far, I did not hear anything in favor to the assessee so far. So hopefully all these things will come up soon. Now, requirement for availing ITC. 16.2 says what are all the documents. Yeah.
You said in the Rajasthan case, in Yatra.com.
Yeah. It's not Yatra.com. Yeah.
See, they were in Delhi.
Yeah.
The service provider hotel is in Rajasthan. They are raising bill on yatra.com.
Correct, absolutely.
That means they have to raise IGST bill.
No. If, as far as the immovable property is concerned, the place of supply shall be the place at which the immovable property is located. So what happens is they have to charge CGST, SGST only, not IGST. So that is a problem. Okay. I'll deal with the place of supply. When I deal with it, I'll explain, give you more inputs on this. But please understand, immovable property, place where the immovable property is located. Now, what are all the requirements for availing ITC? One is tax invoice under section 31, and then you require any other tax paying documents, and then you need to receive the goods, or you need to at least deemed to be received the goods and tax actually paid to the government and filed the return under section 39. I told you this tax actually paid to the government can be questioned under Constitution 14, and first one is tax invoice, no doubt, and then any other tax paying document like bill of entry, then ISD credit invoice, then RCM invoices. These are all the other tax paying documents based on which you can take the credit and furnish the return under section 39. That is nothing but your monthly return or quarterly return, as the case may be. And receipt of goods. How do we determine the receipt of goods? You said, no, Shrikant sir, you said that how do we determine the receipt of goods? Capital work in progress case you asked. You look at these documents, your physical stock, your e-way bill, your GRN, and you also look at the fixed asset register. These 4 documents will give you a practical knowledge or practical way of looking at whether you received the goods or services. Then receipt of service. Receipt of service is very difficult to determine. You want me to complicate? You want me to confuse? Everybody is silent.
Please confuse.
Confuse?
Yes.
Okay. You should be active, otherwise I will be passive. All of you are with me? Yes or no?
Yes.
Okay, fine. So, I will tell you one case. For my own case, I will tell. One client has approached me and for a tribunal case. I said, okay, I will take it up this case. First stage is, we will have a kick-off meeting. We all will sit together, we will understand the case. The moment we sit, we will also assume that we are charging on a different basis. We will send an invoice. Second, assume that we will send an invoice, and then second meeting will be collecting the documents, everything, preparing the arguments, vetting it, everything is being done, appeared before the court also, tribunal also, then we won the case also, we got the order also, we gave the effect also. Effect to the order. What is the date of completion in this? There are plenty of transactions, right? I appeared, first we had a discussion, second we prepared the draft, appeal everything, then argument everything. We appeared before the tribunal. We got the favorable order also. The order has to be given effect in the department. What is the date of completion of service?
It depends on agreement between you and the client. If you are charging on stage by stage basis, you have to issue invoices. Accordingly, the services will be.
But let me ask you one thing, sir. Can my agreement override the law? Because law says the moment you complete your service, within 30 days you have to raise the invoice. So my agreement cannot override the law. But my question is, what is the date of completion here?
The date of completion should be the date on which you are making the argument.
Arguments? But people will have different opinion, yeah.
Won the case, no?
I won the case.
The winner losing is on
Won the case.
Huh?
When you know that you will.
I got the order.
But when the service is completed, you appeared and argued before the tribunal.
Correct.
That time you know that you won the case.
No, I will not be knowing it. Because only once I get the order, only I will know that I won the case. I have no method of understanding whether I will win the case or not.
Winning or losing is it's a contingent.
Yeah.
See, your service is to represent.
Correct.
So when you have represented and finished the final argument, you have completed the service.
But he is saying that I can do the, if assuming that I'm saying that I'll be charging on a stage basis.
See what happens if the client, you completed, you are charging on hourly basis.
Yeah.
You
Correct.
have done first service, then after the client says, sorry, I'm not happy, I'm going.
Correct.
You are sending the invoice.
Correct.
That time the service fee payable not.
Correct. Absolutely.
Okay. See, that is what it should be how you made and deal with
Absolutely.
the client.
See, there could be different views. I will not be surprised if the another person come and says that no, that's not the case. You give the effect only, raise the invoice only when you give the effect. Some people will say the moment you prepare the draft, that itself you can raise. See, determining the receipt of service is very, very difficult. Take it from me, to my knowledge, receipt of service is not defined anywhere. If it is, forget about GST Act, it is not defined in any other act also, to my knowledge, limited knowledge. So it is very, very difficult to determine. But I can take a view that there is a concept called taking ITC based on, see, the question is not raising invoice. The person who is availing invoice, no, the credit, no. Assuming that I am charging to, for example, Tata Teleservices, I am charging them the invoices, I am raising invoices. Will they be able to take the credit? When they will be able to take the credit? Only upon getting the order, I am raising invoices. But when they can be when they will be able to take the credit? I would say the moment I raise the invoice, the moment you can take the credit. Reason being, there is a concept called availing input tax credit on lot basis. That concept is not applicable for services. So you can very well take the input tax credit as and when you receive the service. Now, issues under 16.2. I'll move on to this. This is, yeah. So I said goods received. Some, yeah.
We are saying in services the lot is not, but in goods there is a
goods there is a lot.
So in the capital work in progress, how it is? Because the goods are sent.
Can I take that lot issue? The next slide is on the lot. So I will explain you that in detail. So you will be there itself. There are a lot of issues. So I will confuse you. No, don't worry. Don't worry at all. Oh, thank you, sir.
Time for break.
This is a secret note I call. Secret note. It's only between me and then Srinivasan, sir. So, explanation 16.2 says, sometime bill to ship to transaction you will not receive the goods. Goods will, I will say that you send it to XYZ. So, in those cases also, it is Act says, explanation is inserted which says, even if in such cases it will be considered as deemed act receipt. Sometimes job work case, bill to ship to transactions, sometime in import, in the course of import, from the Chennai port they will say that directly send it to the client. So it will not receive in your factory. Correct? No. Why should we do that? Assume that I am located in Chennai and I would like to buy some t-shirts and then do some job work in Bangalore. Tirupur, directly they can send it to Bangalore. It need not come to Chennai and then from Chennai I should send it. Then that's not a prudent decision. So they give some exemptions like bill to ship to transactions. Second is import, in the course of import if they are doing it, it's okay. Then job work. These are all the couple of exemptions which they have given. And here also there is an issue I don't want to deal, because if I deal that, it is too technical. If it is advanced course, definitely I would have handled this, because this is very, very technical because of the way we interpret the act. That is how I arrived at this issue. Okay, I'll take it up if I get the time later. Now, Proviso 1 says, receipt of goods in lots. Assuming that I am giving an order for, say for example, 10,000 quantity. And the goods are, one invoice will be there and goods are getting delivered on a 5 installments, 5 lots. First vehicle has come, second vehicle has come, third vehicle has come, fourth vehicle has come, fifth vehicle has come. Only when you receive the 5th lot, you will be able to take the credit on the entire invoice. Understood? Understood? Yes or no? Yes? No active.
But one thing,
Yes sir.
how will we know that okay, it says like that.
Yeah.
You take credit, how somebody can verify that?
Then when
Sorry,
a purchase order,
Yeah, it can be very well, sir. Only one invoice will be there, sir. One invoice will be there, and the supply of goods will be done in 5 lots. And the moment GRN, if you verify, you know that out against 10,000, only 2,000 has been received. 2,000 after 1 month, 2,000 after 1 month. So it can be very well be determined. Now the issue is you can take the credit only when you receive the last lot. Now I'll complicate it further. Assume a situation. Now in Mumbai there is a flood, right? 4 lots have come to Chennai. 5th lot got lost in flood. It is a unique product which cannot be supplied at all. What will happen? That lot will never come. Flood, goods lost, gone. That 5th lorry will not come to Chennai. What will you do? Will you be able to take the credit? Should you open it all the time? Or you should close this invoice after taking the credit? Will you be able to take the credit? No? Some people are saying yes, some people are saying no.
Based on e-way bill.
Huh?
Based on e-way bill, I'll pay.
No, you cannot take it based on e-way bill. The thing is, 5th lot does not come. Proviso says 5th lot has to come. Correct? Consignment I will not be paying. That is another issue. I will come to that.
There should be some provision where.
Sorry, sir?
You cannot take the input tax credit also.
Correct. You cannot take the input tax credit because 5th lot does not deliver. Act says if you strictly rate, I will go with sir. 5th lot has not been delivered. Only upon receipt of 5th lot, you can take the credit. 5th lot has not been received.
No, that should be somewhere else where we can treat that 4th lot as lost stock.
But Act is not saying. Act is clear. The agreement is clear that you will be delivering in 5th lot.
Give a credit note and get
Very good option. Give a credit note and close it. And wait for the 5th lot. If at all it comes, or keep it open. There is a time limit also. See, there is something called act of God. If something which is not possible by the act of God, you cannot punish the assessee for that. There is a judgment also on this from the state of Gujarat. There is a case law on this. So you can very well take, as you rightly mentioned, raise a credit note, avail the credit. It can be disputed, but you can use this case law to come out of it. Okay. Next is, if your 5th lot is received in December, assume that the 1st lot is received in March, 2nd lot, 3rd lot, 4th lot, 5th lot, 5th lot is received in December 2018. Will you be able to take the credit? Because under section 16(4) it says there is a time limit for availing the credit on an invoice. Invoice date will be March 31st and it is pertaining to financial year 17-18 financial year, and the 5th lot will come only in December. That is after the time limit prescribed under section 16(4), that is due date for filing return under section 39 for the month of September, or annual return filing date, whichever is earlier. That is last you can avail the credit of the previous financial year only by 20th of October. Last lot is received in December. Will you be able to take the credit of the entire transaction? Yes or no? You understood the question? Yeah. You cannot take the credit because it will be a lost credit. So when you enter into a lot transactions, you should be very, very careful. You should ensure that the 5th lot will receive on or before 30th of September or 20th of October, to be very precise, 20th of October, before filing the return for the month of September. Okay. Now, assume that, yeah.
See, as you said that you were saying, you cannot say, as a supplier, I would have raised the invoice in March and accounted for GST, everything.
Absolutely.
Why can't I take that argument?
No.
Because government is not at loss.
Correct.
Revenue, it's revenue neutral.
But the clear condition is, his point is very valid, no? He's saying that March month, the supplier has paid the tax to the government. What is the problem of the government? Government clearly says, you cannot avail the credit unless you receive the goods. In case of lots, government clearly says, unless you receive the 5th lot, you will not be able to take the credit. Now we cannot question that what is there in that. So you will not be able to take the credit. Now, my question is, I will give you a typical example. I ordered for 100 quantity. I received only 98 quantity. Can I take the credit for the entire 100 or only 98? Or should I wait for 2 more quantity? Or should I wait for the credit note? There are plenty of options like this. Typical business transaction. for 100 quantity, 98 is received. Will you be able to take the credit? Sorry? Not for 100. Sir is saying that you can take only on 98. How many of you say 100? 100. Excellent answer. 100. 100. 100. Very good. Most of them are giving different answers. I like that. See, one of the conditions in 16 is you should receive the goods or services. So you can take only 98. Have you received 100 quantity? You have not received 100 quantity. You received only 98. So if you receive only 98, you can take the credit only to the tune of 98, not 100. It is very well settled. It is not in the form of lot. That is, you have to understand.
What about the two?
Yeah.
For him, yes, the seller has to pay tax for the two, no?
Seller, let him pay tax. Let him pay tax. Government is not worried about what is received. Government is worried only what is getting lost to the government. So whatever extra money they are getting, they are happy. Typical thing. Now, proviso, not provided, that means not paid within 180 days. Please be very careful. Most of the companies are having a practice of paying within 45 days, etc. But always ensure that you are making payment to your vendors within 180 days. Within 180 days. Now, there are a lot of issues in this. When I did the audit for a construction company, I said no. One construction company, the problem with them was they were accounting the invoices based on the booking date. There are different dates. Invoice date, there is a booking date, there is a ITC availed date, ITC utilized date, there are plenty of dates. All these dates are relevant. Without knowing what is these dates are all about, you will not be able to appreciate what I am talking about. Assume that the recipient fails to pay the supplier of goods or services or both, except in case of reverse charge mechanism. The amount towards value of supply and along with tax payable thereon within 180 days from the date of invoice by the supplier, the reverse ITC along with interest. That means if you don't pay to your vendor within 180 days from the date of invoice is prescribed under 46, which says the date of issue of invoice. So date of invoice means the invoice date. You will have an invoice date, right? From that date, if you don't pay within 180 days, not the booking date. Many cases in construction industries and all, what happens is the invoice will go to the site engineer will approve, and then the in charge will approve, and then the client also has to approve, and finally it will reach 1 month. After 1 month only it will reach the head office. So the 180 days should be calculated from the date of invoice. Second point, when you account it in Tally or any software for that matter, many people are doing accounting only, accounting date. You should also consider the invoice date. You should also try to capture the invoice date in your Tally or in your software. After our audit only we recommended this, and then they said, Tally person came, and then it is possible in Tally to capture the invoice date, and then you should take the aging from the invoice date, not from the booking date. And now if you don't make the payment, you have to reverse the credit on 181st day. When you reverse, you have to pay interest under section 50 subsection 1, which says 18% per annum. Now the question is, from which date I should pay tax? Is it from the date of invoice? Or is it from the date of availment? Act says you should pay interest at the rate of 18% per annum from the date of availment. That means the date on which you take it into the return. That is the date of availment. They are not saying that the date on which you are utilizing it for payment of taxes. So date of availment till the date of that reversal date, you have to pay interest. This interest will become a cost, but as long, whenever after 181st day, later if you are making the payment, you can very well avail this credit at later point of time. You may be asking, March month, I supposed to pay after 180 days, I reversed it, but I paid after 2 years. Can I avail the credit? You only told me that 16.4 says there are some time restrictions for availing any credit on invoices. There is under section 16.4 for time limit for availing credit. There is only and only one exemption, that is for this 180. Not for lot, not for any other activities. Only and only exception is 180 days payment, which they pay at later point of time. And there are a lot of other issues also in this. Like assume that not paid, assume that I am paying in the form of, not in the form of money, but in the form of some other kind. Can that be considered as a payment? Yes, fine. Okay, I will make a part payment, 1 lakh. Actually invoice value is 2 lakh. It's a general practice that I will randomly pay 50,000. Can I avail the credit? Is this 50,000 is inclusive of taxes? See, for example, 1 lakh is your invoice, 1 lakh 18,000 will be your tax component, will be 18,000, so it will be 1 lakh 18,000. Now if you make 50,000, how will you take it? You will consider that 50 as inclusive of tax? In my view, you have to consider this 50,000 as inclusive of tax, correspondingly you can avail the credit. Okay, proportionately you have to give the credit. And now payment after 180 days, you are making the payment after 180 days, so we will break for tea for 5 minutes, within 5 minutes we will break. After making 180 days, you are making the payment, then you can very well avail the credit. But as I said few minutes back, interest will become a cost. Depreciation. Now, if you are capitalizing the goods and if you are capitalizing the value of that goods or services and capitalizing the GST also, then you will not be eligible to take the credit. Now here they are saying if you are depreciating that GST component under Income Tax Act, here they are very clear, they clearly said Income Tax Act. So if you are capitalizing and depreciating under Income Tax Act, then you will not be able to take the GST input tax credit. Time limit for availing the credit, it is actually, we already discussed this, so I'll move on. This rule also we have already discussed, and then one more particular point is if there is a demand or something, if you do any willful misstatement, fraud or suppression of act, then you will not be getting the credit, but if it is a genuine mistake, you will be getting credit subject to 16.4. Subject to 16.4, because generally this audit will come after 1, 2 years, 3 years later. At that time, even if it is not your willful misstatement, a wrong thing, but 16.4 will hit you and will not be eligible to take the credit. You understood? See, for example, there is an audit which comes, you are taking a view that no, I did not do any willful misstatement, you should give me the credit. They will say, okay, fine, doesn't matter, you take the credit. But when you go and then take the credit, time limit will say, you should have taken last October itself. Time limit is over. So that invoice, because of 16.4, there are a lot of issues. And ITC on capital goods, as I said, there is no difference between input and capital goods except for the reversal purpose under rule 42 and 43. And we have some litigation prone areas that we will handle it. See, this is only the trailer of ITC we have seen so far, not the actual movie. The actual movie will be played post tea break. I know that all of you are waiting for the tea desperately, so we'll break for tea. I think now its time is 11:50, right? 40, right? 40? 45. Your watch is also faster than
11:45.
45. We'll come back by 11:55 and then we will continue with ITC, and 12:30 we'll stop. We'll start with place of supply. See, here onwards, the second part of this movie will be very, very interesting because we are going to deal on litigation prone areas where there are going to be a lot of litigations and block to credit. Very, very important. Please refresh yourself and come back and join. Thank you.
Thank you very much, sir.
One question on the
Yeah,
tax charge.
yeah.
I have an office in Chennai,
Yeah.
which is basically my headquarters.
Yeah.
We have GST registration.
Yeah.
I have a Bangalore office, which has also got GST registration.
Yeah.
Now, Bangalore office rent I am paying.
rent and other expenses I'm paying because they do not have sufficient money. But the bills are being raised by the vendors in the name of the Bangalore office only.
Okay.
And the Bangalore GST registration.
Okay.
Is that an issue? Because
No, there will not be an issue. Are you supplying any service? No, right? It's only rent of Bangalore house property. That means rent. You're just you're paying it.
yeah, on their
So only thing is your input tax credit will be blocked. You will not be able to take the input tax credit. First point. Second point is you no need to have a cross charge because there is no supply which you are providing to them. You are just making the payment on behalf of your Bangalore branch.
But my question is, why should my input credit be blocked? Because I'm only making a payment on their behalf. So either they should get the benefit or I should get the benefit.
Two things why it should be blocked. One is the invoice is in your name, right?
Invoices in Bangalore's name.
Bangalore name only. Then they can take credit.
So even though I'm making the payment.
Yeah, that doesn't matter. I thought the invoice will come to you and you will be making the payment. If you are making the payment, it doesn't matter. Everybody has come back? No? Mostly. You know, last session also I told this. Who said this word mostly? Who said this mostly? Now somebody said mostly. They've come back mostly. Who said it? Very good, sir. See, we usually communicate with advocates because we can go up to tribunal, no? Next level is High Court. So when we go and then meet advocates, tax advocates, we ask, sir, what is the possibility of winning this case? He said, mostly we will win it, Rajiv. Then initially I did not understand what is his meaning mostly. Then I asked, what is this word mostly, sir? Finally he told me, once he became my friend, mostly means there is no meaning to it. Whenever we win it, we will say that mostly we will win it. Even if we fail, mostly we will fail it. So mostly is a very critical word, which still I did not understand the meaning of it.
Mostly means the probability is on high side, on winning.
On the high side, yeah. So that is a actual meaning, but in the business language, it has different interpretations. Can we start? I think we'll start, It's 12. Yeah, we'll have some, we'll start with some litigation prone areas. See, you know that normal loss, abnormal loss, then we have diversion of inputs, then we have goods lost. These are all the kind of activities. See, for example, in the manufacturing unit, you will have something called normal loss, right? You will have abnormal loss. Because of some activity, there will be an abnormal loss. You will have diversion of inputs. Inputs have come to your factory, but you are using it for some other purposes. Not for the business purpose, but for other purposes. So you got some inputs and then you are using it for the purpose of gift or something like that. Or goods lost. Goods lost means you lost the goods. So, in what are all the ways you can claim the input tax credit? But if you can come and join quickly, it would be really appreciated. Because this is one of the litigation prone areas where tomorrow in your office, if you are working for an office or if you are a CA, tomorrow you definitely will come across. At that time, you should know that answers are available, some are litigation prone areas. Okay. Normal loss, abnormal loss are, in my view, you can very well take the credit because these are all happened during the process of manufacture. Manufacture is also defined in business. So, if it is the moment it is used for the manufacturing, it is used for the purpose of business. In my view, you can very well use it for the purpose of input tax credit. You can very well avail the input tax credit. Now, diversion of inputs, that cannot be taken as input tax credit because you are using it not for the manufacturing purpose but for some other purpose. Now, goods lost. Goods lost. Goods lost means it is no longer used for the purpose of business. Then you cannot take the credit. Okay. And yeah.
Due to natural causes.
Due to
Nature or something.
yeah, very good point. If the goods have lost because of the flood, fire, etc., flood, fire, etc., I gave you a case law a few minutes back. Act of God. Okay. But let me tell you very clearly and honestly, department will not appreciate all these kind of case laws. they will say that no, it is goods lost, nothing is possible. So you have to go to the court and win the case. If this kind of interpretation, these are very, very high level interpretation, high level case laws which are appreciated by, even recently I will tell you one more of my experience. We got a case where Supreme Court has clearly laid down that this is favorable to associate. Supreme Court of India has given the judgment. I had the proof of that, the order. Went and appeared before the commissioner. He said no. They took a different view in that interpretation itself. Finally, we had to go to tribunal to win the case. Very pathetic. Because it is clearly given in the Supreme Court case. Case law is hardly 3-4 pages. That is very simply they closed it. But still we had to go to tribunal to win the case. So that is a level of, all of you would be knowing how the department will work. And next is, see, fixed establishment in Karnataka has purchased an AC from Mumbai through a manufacturer. Registered person paid the consideration and taken the ITC. Now you ask me, no? Assume that in that case itself, assume that you purchased an AC in Chennai for the purpose of, assume that you purchased it for the Bangalore branch, the invoice has come to Chennai office. You will not be able to take the credit because it is not used for your business.
So if that is
Yeah.
the case, I can recharge to Bangalore?
No, that will be in ISD. Through ISD you can distribute it. But again, let me see, it is not a cross charge because you are not providing any service. You got the AC here and then you are just doing a ISD, but you cannot do
But through ISD
cross
still I can...
ISD you can do, very well you can do, no problem. Now let me tell you, recently I visited one manufacturing unit of a fan manufacturing unit. Beautiful example. I was discussing with the director and then he was showing all the manufacturing unit. I was also going through it. Suddenly I found in the factory they have some ceiling fans. They are using it for their own personal consumption. I said, sir, what is this all about? He said, yeah, these are the fans, my own fans. Why should I purchase it from outside when I am manufacturing the fans? It is used for the normal purpose. I said, sir, it's a personal consumption, you have to reverse your input tax credit. He is a very brilliant guy. He is from, you would have heard about IIT Kharagpur and then MIT and all, he studied there. So he's a very brilliant guy who was working with McKinsey, etc. So he told me, Rajiv, will your answer be different if I consider this unit as my R&D? That means I'm testing these fans. I said, yes. My answer will be different if you are saying that it is used for the purpose of your research and development. Yes, I'm using it. My employees are watching it. Whether it is rotating correctly, whether it is falling down, whether the screws are all tightened properly. I said yes. If it is used for the R&D purpose, yes. But you cannot do these kind of activities for example, this AC is fitted here, right? See, for example, Samsung, LG and all, they are taking on AC from their unit and then putting it here and then saying that I'm doing it for the purpose of testing. That will not work because they are all established companies already, all the processes are all being laid down. But if it is used in the R&D department, then they can use this kind of interpretations because R&D is for the purpose of business. There is a court judgment. If it is used for the purpose of research and development, very well it can be considered as a business and then ITC can be availed.
Even capex, capital goods kind of.
Capital goods, you can avail the credit. Sorry?
You can term that as a capital good for me.
No, it's a personal consumption. Capital goods you cannot use it because it's a personal consumption. You availed all the input tax credit. It's a personal consumption. The moment you use it capital, you convert it from, take it from your input to thing. This is a personal consumption. Ultimately, the concept of GST is whoever is consuming it, finally they have to pay tax. So actually, you are consuming it finally. So you have to pay tax. You have to reverse the input tax credit. I'll put it this way. This kind of argument, you should give a lot of arguments like this. Different arguments. Give the arguments. What is the problem in it? All arguments are correct. All arguments are correct. But I'll deal with whether it is as per the act or not, that's all. Now, stationary, air conditioner, etc., etc. Can you take the input tax credit? Stationary, you are buying pen, pencil, all the stationery for your office purpose, right? Can you take the input tax credit? can I say that it is for the personal consumption? You can very well take the input tax credit. Reason being, there is a case law also. That case law clearly says, it's a state of Kerala where I think it's Trivandrum Tea Estate or something, the case law I fairly remember, where they said, it was in 1977, the case law was in 1977, where they said, the stationeries used are for the purpose of business and hence credit can be waived. So, that stand will continue in GST also. Stationeries can be considered as for the purpose of business. Nobody will buy stationery for their own consumption, right? So, you can very well take AC, all capital goods you can avail the credit. Now, AMC contract. How many of you are having AMC contract in your office? Please raise your hands. Kaushik. Yeah, many people. How are you taking the credit? You are taking the credit upon receipt of the invoice? I have three views in this. I'll confuse you with the three aspects. One is the moment you receive the service. That means the moment you sign the agreement, will you be able to take the credit, or it should be taken on a monthly basis, or it should be taken upon the completion of service, that will be after 1 year. What is your answer?
At the beginning.
Sorry?
Invoice date you will take.
You sign the
Invoice date you take.
Yeah.
How many of you say invoice date they will take? How many of you say monthly they will take? Very good. What's your good name? Zar. Zar, okay. And then, anybody, how many of you say they will take on the completion of service, on the last day? Nobody? At least somebody should raise hand, no.
Why I should waste my credit?
Huh?
Why I should waste my credit?
Why should I? So, if you say, I will take it upon the signing of the agreement, I will say you have not completed the service. If you say, I will take it on the last day, I will say, I agreed to provide the service on the first day. If you say, I will take it on the first day, I will say, no, the services are provided on a pro rata basis, on a monthly basis you should take. Three arguments are possible. Correct? Three arguments are possible. Now, which argument I should support? This is my personal view. Don't quote me anywhere. This is a highly litigation prone area. I will give you two views. One is solution. One is what is my view on this. My view is, assuming that AMC contract, if you avail it on a monthly basis, 16.4 will hit you. 16.4 will hit you if it crosses September. Assuming that the AMC you are signing in the month of March, you will be able to avail only for 6 or 7 months. That's not the intention of the law. Had it been the intention of the law, they would have definitely put it under 17.5, not under this section. This is one point. Second point, if you are availing on the last day of AMC, still 16.4 will hit you. So, safer side, you can avail it on the date of sign off. That is the only practical solution available to avail the full input tax credit, whether there is a litigation or not. Correct? All of you agree?
And also,
yeah.
It is paid earlier. I mean, the moment is invoice received, you make an advance payment.
Yeah.
Because for service, when you receive a payment,
yeah.
you pay the GST also. Similarly, when you avail credit also,
yeah.
when you have made the payment, you can avail the.
Yeah, but the department will take a view that you just signed the agreement, you have not received the agreement, you have not received the service.
Sir, AMC specifically, if there is any repair, they will come and do the service free of cost.
Yeah, correct.
During the year, the machine has not got repaired. The AMC is for non-safe only.
Yeah.
So, I can take this credit on the first day of signing there on payment.
Assuming that after 6 months, there is a machinery got repaired, will they come and do the service?
Still, if the AMC is
see,
alive, they will.
Let me tell you.
If the AMC is alive, they
absolutely. Let me tell you, it's a highly litigation prone area. What is the solution? If there is a problem with the department, what is the best solution? You restructure your agreement. I have put some good names for AMC. Here onwards, I will not call AMC. My office and all, I implemented this. I call it as HMC, half yearly maintenance contract, or QMC, that is quarterly maintenance contract, or MMC, monthly maintenance contract. You take these three, you will be safe. 6 months maximum if you take. September, March means you can avail it in September. 6 months AMC, it's not AMC, half yearly maintenance contract, HMC. These are all probably would be new words in the industry or market. I just named it based on my understanding. So better you change it to QMC. QMC is safer side. Quarterly maintenance contract. I changed it to quarterly maintenance contract. Now they cannot deny the credit. Maintenance is for quarterly. I signed the agreement. I avail the credit. AMC highly litigation prone area. Now there is another alternative also. The AMC should be from 1st April to 31st March, not in between the financial year. So better you go for QMC. Why do you argue? Why do you fight with the department? You have to spend a lot of money for that. Just go to QMC. And don't go and then tell in the market that I need QMC. They will not be able to understand. You tell that it's a quarterly maintenance contract. Now insurance, same problem. Same problem in insurance also. Insurance you cannot convert into QMC or HMC or anything like that. This is, in my view, considering my first view, you can avail it at the time of credit. I am telling you again, these are all highly litigation prone areas. I will not be surprised if the department takes the other view. At that time we have to argue with these kind of points. Now reversal of input, yeah. Sorry?
I will suggest you don't be the commissioner.
No, I will not be the commissioner. See, I
said, better you don't meet the commissioner.
No, see, the thing is, whenever I address the assessees, I will give the maximum viewpoints which department can take, so that you can be at least aware that this is the worst scenario. But when I talk to department people, I will support assessees only. I will say, sir, it is not practical, sir, this is the way it should. So I have to put my legs both the board and then manage my show. So it is a little tricky, but still that is how we survive. Now reversal of input tax credit. I told you, right, the 180 days case, there should be reversal. We already discussed this. And rule 42 and 43, I am not dealing with it. It's only formula. Anybody can go through it and then take it, because it's like something to do with the mathematics. Blocked input tax credit, very, very important. See, here I need some sort of in detailed analysis. I will take, otherwise you will not be able to understand. Notwithstanding anything contained in 16.1, 18.1, etc., etc., in respect of the following, credit will not be available. Motor vehicle and other conveyances, except if they are used for making the following taxable supplies, namely further supply of such vehicles or transportation of passengers, imparting training, or transportation of goods. So if you want to take the credit of the motor vehicles or any other conveyances, it should be used for further supply. I think Murthy sir is here. Yeah. So he is from Vishnu Maruti Vishnu, right? Vishnu Maruti's dealer, where what they do, they will buy the cars, they will sell the cars. First example, typically it's his case only. He will buy the cars, they will sell the cars. They are eligible to take the input tax credit. Second, transportation of passengers, Ola cab, all this passenger vehicles, you can very well take the credit. Parveen Travels, all these travels, they can avail the credit. Imparting training, Maruti training service and training center, driving schools, etc., etc., they can avail the input tax credit. Transportation of goods. Transportation of goods. That means all these lorries, etc., etc. Now I got a typical example. My friend, he came and asked me, Rajiv, I have a problem. I have an XUV 500, that Mahindra XUV, He is having that vehicle, the boot space is too much. So he is using to transport the goods also from his office, from his factory, a small way he is transporting. So he asked me, you said transportation of goods, I am eligible, it's a private vehicle number, the white board. So he asked me, I am transporting the goods, etc. So can I avail the goods? Can I avail the input tax credit? I said, his view is correct. He is transporting the goods. His view is correct. Goods means anything, any movable property other than money and securities, etc., etc. So I said, if you read the law, you are eligible. But that is not the intention of the law. Correct? Then all motor vehicle can be claimed. All motor vehicle can be claimed. Input tax credit can be claimed on all motor vehicle. Take it from me. If he is telling that I used it for transportation of goods, I will also say, I came in my car. In my car, I have that Swami Vigraham, I mean the idol, and I have steering, leather, seat cover, my coat I was carrying. This is a goods actually. And then I have backpack, that is also goods. Mat is there, no? The floor mat, that is also goods. One car definitely will have goods. Without goods, car cannot move. That is not the intention. Then I will also take a view. Act says if it is used for transportation of goods, you can avail. Doormat is there, I can also avail the credit. But that's not the intention of the law. Intention of the law is transportation of goods. The vehicle should be used for the purpose or intended to be manufactured for the purpose of transportation. So
I have my own lorry or something used for my business to carry goods.
Yeah, very well. You can very well claim it. In my view, you can very well claim because the lorry is intended to be transport the goods. You can very well. Now, sorry?
It will be meant for outward supplies.
Outward supply?
Within the factory premises, transporting from here to that location.
That is very well eligible. Within the factory also, if it is used for transportation goods, very well it is eligible. Typical question. Motor vehicle is exempted, that means blocked credit. Maintenance on motor vehicles, can that be availed? Maintenance expenses. Maintenance expenses, can it be availed?
Yeah, it's for the business.
But motor vehicle is blocked. Credit on motor vehicle is blocked. Can I avail the input tax credit on vehicle maintenance?
Any repair?
How many of you say yes? How many of you say no? When I raised the volume, some people got up. Yeah, how many of you say yes?
Yes.
Very good. How many of you say no? In between, there is no answer. Either you should say yes or you should say no. How many of you say yes?
Yes.
Now increased. How many of you say no? Very good. Why are you saying yes?
No, it's for the business. Even though the motor vehicle can be, we can't claim.
Yeah.
But any maintenance on that is business. It's
Yeah.
my business. So
Yeah.
it's for the business purpose.
Okay.
So I can claim.
Okay. Why are you saying yes? You said yes, no? Yeah, why are you saying yes?
Not allowed only on the asset motor vehicle.
Yeah.
Whereas the subsequent maintenance is the general regular expenses.
Okay. Why are you saying no?
Sir, answer is yes and no.
So, see, let me give you the legal answer to it. You can very well claim it because it's saying, notwithstanding anything contained in 16.1, 18.1, ITC shall not be available in respect of. The word in respect of means, already there are plenty of judgment in this regard. To make it very simple, I took it from Oxford Dictionary meaning. In respect of means as regards with reference to. That means only with respect to that. In respect of motor vehicle only. Assuming that had they used the word in connection with, then gone. All expenses in connection with the vehicle would not be allowed. Now here they are using the word in respect of. So don't worry at all. You are very well eligible to take the credit on maintenance, insurance, etc. on the vehicles. Now, motor vehicles are defined in the Motor Vehicles Act, and other conveyance means aircraft, vehicle, etc. I mean the vessel, etc. Motor vehicle. See, here we have an issue. When I did a detailed analysis on motor vehicle, because I was doing a research on this, what are on the motor vehicles, because I am not an engineer, so I wanted to take my cousin's help. He is into R&D of Mahindra. So I asked him, brother, what are all the motor vehicles? You tell me, because the moment I read the motor vehicles definition, I got confused. Propelled, not propelled, blah, 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 blah. I understood nothing. Then I called him, brother, please explain this, what is this all about? Then he explained me all this. Then I took a lot of examples like Maruti car, then a sedan, XUV, SUV, all those things. Then I told him, what about the cranes? Cranes, is it a motor vehicle? Then he told me, yes, cranes are motor vehicles. Then I got shocked. Is it? I gave the definition also to him because he's not law graduate. So I gave him, brother, this is the definition of motor vehicles. So he got through it and he told me that surprisingly, cranes, drilling and excavation machines, piling machines, all these are motor vehicles because it has a motor attached to it and propelled, etc. with that. Now my question is it used for transportation of goods? Cranes will not carry any goods. Crane will not carry any passengers. Crane is not used for training purposes, right? Crane is not used for that. Crane is not used for any of the further supply. I mean, obviously will be there, but in our case, no. Construction companies. Will you be able to take the credit?
This can
No.
be treated as machinery rather than...
No, it's a motor vehicle. It's falling under the definition of motor vehicle. That is a problem.
As per Motor Vehicle Act.
Yeah.
What about GST? What is the intention on motor
No, motor vehicle is defined by GST as motor vehicle as defined in the Motor Vehicles Act. So Act itself is giving a reference there. It's not that I am taking the reference. So in my view, if you strictly go, you are not eligible. I'll give you another example. You have heard about CMS machine vehicles, which load. Can I complete this? CMS machine motor vehicle which load the cash in the ATMs. You have seen? Can they avail the credit of that vehicle? Yes or no?
Yes.
Yes? Why? Money is not a goods. Money is excluded from goods.
It is a service used by the banker for purposes of his business.
Fine, but motor vehicle is blocked credit unless you use it.
It is a blocked credit only in the case of this one.
Blocked credit unless you use these goods for the purpose of transportation of goods. Money is not a goods. Clearly.
Money is packed in a...
Kaushik is coming up with a different explanation to it. Kaushik, let me tell you one thing. The company got confused because nowhere it is getting connected. They approached their professionals. They also got confused. Even I don't have an answer. Third, they approached the appellate authority of advanced ruling. They approached the authority of advanced ruling. They also got confused.
Better climb the input credit.
No, one minute. Let me complete this case law history. No, what really happened in the industry. They close it with the AR itself. They refer to the appellate authority because AR also got confused. No, probably in the next session I will be able to tell you what is the AR ruling. Because now it is confused completely. Logically they are eligible to take the credit. Correct? Logically they are eligible to take credit. Crane also it's logically available. But look at the Act. Act is not permitting. So this is the kind of confusions. I think probably in next 6 months I will get the case law. I probably will update you also on this.
The intention.
Now what did
But it is something which is beyond my control. Yeah.
What did you advise that client?
No, that client, in my view, you better don't take it because if you ask me, I strictly go with Act. I cannot go beyond that. So right now, there is an amendment which is required. They have to make a representation. Construction industries and all the CMS machines, motor vehicles and all, they have to make a representation to the GST Council and give you a notification in this regard. Otherwise, strictly I will say not eligible. Because, yeah.
Can't we take a stand that we are transporting the security guards to provide the service?
Security guards rules.
No, that the intention is, Kaushik, the intention is not transporting the passengers because then I will also take for my motor vehicle, I am taking my colleagues also in my car to the next, to the income tax office or to the CBIC office, so I will be able to take the credit. The intention is not that, purpose is also not.
Sir,
Yeah.
what is the intention for not giving credit for this motor vehicles if it is other than goods, not used for transport of goods? What is the intention for blocking?
No. See, first of all, the logic behind it, if we go, it is an unending story. We will restrict our discussion to this. I can tell you a lot of logics, but it doesn't make any sense. Once it is act has come, act has come. So we'll go on to the act rather than logic, because that will be of no use.
So they are taking other equipments
Yeah.
also with the that digital this one, and also that can be we are not considering as money, but other equipment used to fill the waiting machine.
See, actually that cash carry machine vehicle is, you would have seen that it is used or it is actually made with a lot of glasses, etc., for the purpose of carrying the cash. So let me just move on, otherwise I am running out of time. Now, no motor vehicle and see, my view is, simple view is, if it is a white board, you cannot take the credit. If it is a yellow board, it is for transportation commercial purpose, you can avail. And if it is a black board, it is used for transportation of passengers. You can see Zoom a car, etc., they will be having the black board. Okay, next. Yeah.
So maybe office, they have a bus to carry employees.
Yeah, that can be availed. If it is, see, this is the broad view I am giving, and if it is used for the purpose of transportation of passengers, you can definitely take the credit. Now, what are all the other credits, blocked credits? First of all, membership of a club. Most of the software companies are having membership of a club, membership of a health and fitness center, and travel benefits to employees. If they are going for leave, travel allowance, etc., when they come back, they will claim with invoices. At that time, you cannot avail the input tax credit. Membership of a health and fitness center, yoga center, etc., no credit. So, never allowed category, irrespective of whether you are in the same business, etc., it is never allowed. Next is rent-a-cab, life insurance, health insurance. Allowed where the services are notified as obligatory and used for making taxable outward supplies. See, rent-a-cab, I will tell you what is the government notification. Section 66 of the Factories Act says any woman employee who is leaving the office post 7 o'clock, first of all they say they should not leave post 7 o'clock and they should not be engaged in the factory before 5 o'clock, 5 a.m. Now, Factories Act says the respective state can give a leverage up to 10 o'clock with the subject to some conditions, etc. Now, Tamil Nadu Shop and Establishment says some industries they can leave, the women employees can leave post 7 o'clock but before, not later 10 o'clock. So, but Tamil Nadu Shop and Establishment is silent. They are not saying that transportation has to be arranged. But Karnataka Shop and Establishment says if those women employees are leaving post 7 o'clock but before 10 o'clock, they should arrange a cab facility for the women employees. So it is mandated by the Act, so they should definitely be able to take the credit. But in Tamil Nadu, no such condition, so irrespective whether they are arranging the cab or not, they will not be able to take the credit. Now I have an example here, I have a case study, these are all case studies which I prepare myself. So Infozen Limited, that name has nothing to do with any software companies which are present in India. So Infozen Limited, out of this one company is from Bangalore and one company is from Chennai. That is why I took these two names. But I did not say the name, okay. Infozen, a software company registered in Bangalore, is arranging a cab, a sedan cab for its employees for transportation from their residence office back from on the following shift, 5 a.m. to 7 p.m. Will you be able to take the credit if it is in Bangalore? No, because it is not mandated. 7 p.m. to 10 p.m. Will you be able to take the credit? Yes. Not in Chennai, but in Bangalore. Okay, because Shop and Establishment Act has to be kept in mind. 10 p.m. to 5 a.m. Why? Correct. It is an illegal activity, first of all. None of the companies should engage women employees post 10 o'clock. So for an illegal activity, no credit. It is not notified by the Act. Only notification is available from 7 to 10 p.m. Okay. Now, will your answer be different if Infozen Limited is located in Chennai? All three cases, no credit. Because Shop and Establishment of Tamil Nadu is not talking about it. Rent-a-cab means, what is rent-a-cab first of all? Is your bus fall under rent-a-cab, maxi-cab, or up to 6 passengers? Sedan cars, etc., etc. Rent-a-cab is not defined. Let me tell you straight away. Rent-a-cab is not defined. Only The rent-a-cab means we are taking a view that cab is defined where they are saying that up to 6 passengers. So all sedan cars, etc., will be eligible. If more than 6 passengers, then it will not be eligible for. It will not be blocked. I will say it will not be blocked. And there are another view that maxi cab also should be considered. Maxi means up to 12 passengers, etc. That can also be blocked. But my view is up to 6 passengers. Bus and all not at all coming into the picture. You can very well take the credit. Now. Life insurance, health insurance, if it is mandated by the government, then you can. Rent-a-cab also had a lot of issues which I have come across so far. I would like to share, but most of the time I am just moving. One issue is which I would like to mention is assuming that in case of once it is considered as a business, if it is mandated, can you avail the input tax credit? In my view, you can avail the input tax credit. Though the Infos and Limited's turnover is in billions, and the turnover, the collection from the employees is only, say for example, 500 rupees, still this can be considered as a business, and input tax credit on that vendor, whoever is arranging cab, can be availed. That is my humble view. It can be disputed. Food and beverages, outdoor catering, beauty treatment, health service, cosmetic, etc. can be only be available in case of if it is used for further supply. Many of the ladies would be appreciating that green trend and what is that? Naturals, etc. Those people, if you are going individually, you are not eligible. But some, see for example, Ambika Pillai, she is very famous beautician. So if she is coming and providing some service, and if she is charging invoices to the naturals or green trend, then they will be able to take the credit. So if it is used for the purpose of that particular business, they are eligible, otherwise not. Food and beverages, outdoor catering, all these things are not eligible. Okay, unless otherwise it is used for the purpose of that particular business. And we have another advanced ruling, I am just skipping right now. And other blocked credits are membership of a club, health, fitness, etc. We already dealt with it. And we have these case laws we already discussed. Then.
So this food and beverages you mentioned.
Yeah.
For example, in an event like this,
yeah.
Food and beverages just supplied.
Yeah.
Can the institute claim the input?
No, they cannot. Okay. Food and beverages is Institute is not in the business of supplying the food and beverages. It's only incidental to this particular program they are supplying. So Institute is not eligible to take the credit.
Will water be included in food and beverage?
Sorry?
Water be included in food and beverage?
To place of supply. So don't get confused. You need these two components to determine the nature of transaction. Nature of supply, if you want to determine, you need to see these two. Don't never look at only place of supply. You will make mistake. There are plenty of cases I have seen they will only look at place of supply, not the location of the supplier. Now, location of the supplier of goods not defined anywhere in GST Act. Location of supplier of service is defined in GST Act, which is defined as, see for example here you can see supplier of service. Supply made from a place of business which is registration is obtained. That means in the registration certificate that address is there. In the registration certificate you can have principal place of business, additional place of business. If you are providing the service from any of these places, that will be the place of location of the supplier. Understood? Okay. Now, fixed establishment. Assuming that the particular branch is not obtained the registration and providing service from that particular branch, then location of such fixed establishment. The moment they supply the service, they are supposed to get it registered. That's a different issue. But for the time being, please understand, supply from made from that fixed establishment, that will be the place of supply. And more than one establishment, then location of the establishment most directly concerned with the provision of supply or so. And in the absence of such place, you should place of business. See here, I'll tell you, there is another issue in this definition itself. I don't know why the lawmakers are so careless while drafting the law. See, look at the definition itself. First they are saying fixed establishment elsewhere. They are saying more than one establishment. Fixed establishment and establishment are two different words. Fixed establishment is defined in GST. Establishment is not defined in GST. So we will have litigations here. My view is, humble view is, you can construe establishment as fixed establishment and take the view. But don't quote me anywhere. I will not be surprised if the department take a different view. because they are using the word, see these are all not part of basic GST course, but just let me tell you this point also, otherwise I will not be doing justice. These are all litigation prone areas. The moment it is not defined, it is litigation prone areas. Anybody can take any view. I can take it my own view actually. Now place of supply in case of goods. There are two aspects which we have to define. Section 10, 11, 12, 13. These are all the 4 sections which we are going to deal now. 10 only for goods. 11 goods for domestic transaction. 11 for export and imports. 12 only domestic transactions. 13 where there are foreign party involved. I will put it in the simple manner. Okay. So
we were talking about, we were trying to explain location of supplier.
Yeah.
So you say that's what you refer to the supplier as well as the location of supplier where the goods are to be delivered.
Yeah.
And,
I'll take that in 10. 10 it's coming. So all of you know what is intrastate transaction, right? Intrastate transaction means no, I need help of a book. Intrastate transaction means, there will be a supplier, location of the supplier, and there is a location of, location of supplier and place of supply. If these two components are within the same state or within the same union territory, then it will be called as intrastate supply, where you have to charge CGST, SGST. Subject to, let me add the subject also. If the location of supplier, receipt, the place of supply, though both are in the same state or union territory, assuming that it is to a SZZ, then it will be considered as intrastate. Another aspect is, if it is in the course of import, then it will be IGST. Then third point is, if you are supplying to a foreign national who is eligible to take refund under section 15 of the IGST Act, though supplier and the place of supplier are in the same state, still it is only a intrastate transaction. Let me repeat. Intrastate transaction means, let me clarify you again, location of the supplier and place of supply both are in the same state. Exceptions, one is SZZ supply, 2 in the course of import, 3 foreign national who are coming to India, foreign tourist. They will come to India and then they will go back. They are eligible for refund under section 15 of the IGST Act. These are the only 3 things. So the moment you see a foreign national, if you are selling to a foreign national, ask him, are you a tourist? Are you going for a refund? Then the place of supply will be different. Okay? Correct? Correct? The place of supply will be different? No. Nature of transaction will be different. Place of supply will not change. That is what I am saying you. Don't never go with place of supply alone. It's not only place of supply, it's location of supply and place of supply, both put together. Let me warn you also, every time when I handle place of supply, I will go with the rhythm. Audience also will come with that rhythm. I am actually deliberately making mistake, they will also come with that mistake. I will do that. So be careful. This time I am giving an advance warning. Because many people like that, So it is intrastate transaction. They will also say, yes, it is intrastate transaction. Then when I pause and then ask them, then only they will realize, no, this guy paused and looking at us. There is some problem in what he said. So I will confuse you. Please be with me. Lunch time, so it's very difficult. Okay. That's what, whenever thanks to Srinivasan sir once again for giving me the opening session, that means in the morning session. If it is an afternoon session, topics like input tax credit and all very relevant actually. If it is handled in the post-lunch session, that's all gone. Pre-lunch session is very difficult. So, we'll see. So now, section 10. 10 talks about the place of supply for goods. So, I'll give you the overview. 10, 11 only for goods. I will repeat, 10 and 11 are only for goods. 10, no international transaction, that is no export or import. 11 only for export import. 12, 13 for services, 12 only domestic transactions, 13 there is a foreign party involved. One foreign party, either supplier or recipient. That's all. You understood the overall? Okay, fine. Now let me take 10. 10 place of supply of goods other than import or export from India. You want slide or you don't want slide? We will discuss or you want to go with this? Your choice.
Let it be, we will discuss.
Okay, fine. Section 10, 1A says when there is a supply involves movement of goods, then and there is no third party instruction involved in it, then the place of supply shall be the place at which the goods are getting delivered. Confused, Leah? You will definitely get confused. I'll give you some thumb rules. Make it very simple. Why do we go with this act and then getting confused? In the industry, you have something called supplier name, you have something called recipient name, right? Buyer's name and then supplier name, you will mention it in the invoice. If you have only these two parties, look at their registration numbers. Sorry? Look at their registration numbers. Okay? So, for that, no, I think if you look at that registration number, you can see that if it is 3333, you have to charge CGST, SGST. If it is 3333, you have to charge CGST, SGST. If it is other than 33, you have to charge IGST, correct? How many of you say correct? What about SZZ? What about other aspects which we discussed a few minutes back? So, it is not the same scenario. So, what I will do, but I will answer to your question. I will give you a thumb rule. It is my responsibility. So, but before that, that is why I just wanted to tell you that thumb rule will not work without exceptions. So, first let me take this provision, then I will tell you what is the thumb rule. So, when there is no third party instruction, that is, its business language, it is called bill to transaction. There is a supplier, there is a bill to. Then, when the goods are getting delivered, 1. 2, if there is with the third party instruction, that is bill to ship to transaction, I am asking other party to supply there. Okay. So, in that case, wherever it is getting delivered, that will be whoever is giving the instruction, that principal place of business of that particular party will be the place of supply. I know, just be with me, I will clarify all this with the thumb rule. At that time, we will revisit these provisions. Supply does not involve movement of goods. Say, I will give you an example where Tidal Park, there is a generator. I am having that generator and one party from Bangalore would like to purchase it. Okay, so I am supplying to Bangalore party, but movement is not there. Goods will continue there. It will be continued, but the ownership will change. So now the place of supply shall be Chennai, because there is no movement of goods. In case of these kind of no movement of goods transaction, place of supply shall be wherever the goods are located. Okay. Now fourth one is goods are assembled or installed at site. See, for example, mine is in CA office. We are opening a new office in Bangalore, and then the all interior decoration, all the workstations are installed at that particular place. I engage, say for example, ABC Private Limited Interiors to do that exercise. He is also located here. I am also located here. What he will do? He will raise an CGST, SGST transaction invoice. But actually, location of supplier is in Chennai. What is the place of supply? Place of supply is Bangalore, wherever the installation has happened. Now, supply of goods on board, including vessel, aircraft, train or motor vehicles. We will get a better example. How many of you have seen Shatabdi Express from here to Bangalore? How many of you boarded that vehicle? Most of you? Yeah. When you board, they will give you the food, right? They will give you the food, aircraft or anything for that matter. Shatabdi will give you food. Why I am taking Shatabdi is, Shatabdi has a uniqueness of crossing 3 states. Tamil Nadu, Andhra Pradesh and Karnataka. Now the question comes, what is the place of supply for the food? Tamil say goods taken on board is in Tamil Nadu, so you have to pay tax here. Andhra will say you cross through my place and the food is taken by the passengers in my state, so you should pay that. Karnataka will say no, ultimately it is a non-stop vehicle, reached Karnataka only, boarded, all people got down here only, so you have to pay my tax to my government. So all these confusions are avoided. Clearly said, if the goods are taken on board, that will be the place of supply. So the moment the place of supply is defined, so in this case Shatabdi, place of supply shall be Chennai and they have to charge CGST, SGST only. Correct? Correct? No. Place of supply is Chennai. But how do you determine it is CGST or SGST? You have to look at the location of the supplier. Assume that the location of the supplier is in Bangalore, then he would have charged IGST. If the location of supplier is in Tamil Nadu, he would have charged CGST, SGST. So I am warning you again and again to determine the rate, nature of supply, both are same, nature of supply. You should look at not only place of supply, you should also look at the location of the supplier. Thumb rule, thumb rule, thumb rule. If you deviate from this, you will make mistake. Please ensure nature of transaction, place of supply is only a part of nature of transaction. You cannot determine CGST or SGST or IGST based on place of supply alone. Please make a note of it. I will confuse you again. Let me see whether you got the point in your brain. So, yeah, now let me give you a thumb rule. Can I give you the thumb rule? Yeah. If it is a bill to ship to transaction, so we have 5 kinds of transactions in goods, right? 5 kinds of. 1, bill to ship to transaction. 2, bill to transaction. 2, bill to ship to transaction. 3, there is no movement of goods. 4, installed at site. 5th, supply of goods taken on board. We understood these 5 transactions. I will just show it again, then only thumb rule will work. Now, thumb rule is, when you raise an invoice, you have a supplier, you have a recipient. That is called bill to ship to transaction. Please look at the registration number of supplier, registration number of recipient. If both are 33, then you have to charge CGST, SGST subject to 3 limitations. One is subject to 1 limitation, supply to SEZ or in the course of import or supply to foreign national, or whether there is a movement of goods or not, or if it is installed at site or not, or the last point, goods taken on board. So subject to these 5 conditions, exceptions, you can straight away take it into. Out of these 5 exemptions, most of them you yourself know, goods taken on board will not be applicable to in your case, most of the cases. So why I am saying is I cannot give that exemption. You yourself can remove those exceptions, whatever I give, right? So please let me repeat, if the supplier is 33, recipient is 33, please do these kind of checkings. 1, see whether there is a SZZ transaction. There are 3 transactions which are outside, that is SZZ, import, and third is foreign national. And then 10 exemptions are, 1 is goods are installed, whether there is any movement or not, you have to see. Second, you have to see whether there is any goods installed at site, or goods are assembled or installed at site. Supply, goods taken on board. So most of the cases, last 2 will not be applicable. Generally, let me put it further simple, last 2 will not be applicable. You know that if it is an installed means you will directly go to this. So theoretically you will say foreign national also, rarely it will be there. So only you see SZZ, this don't take it on record, because this is a further simplification, you will make a mistake. That is why I will not give further thumb rules. First is you see SZZ, and then see import also, you know SZZ, then you look at whether there is a movement of goods or not. Most of the cases these 2 things only be sufficient. But let me tell you, let me take the bail again. You have to see those 3, that is SZZ, foreign national and import. and you also see whether there is a movement, assembling or installed at site, supply of goods on conveyance. Understood? Understood? Thumb rule is 3333 subject to these conditions. Now, assume that there is a bill to ship to transaction. Again I am telling you, look at bill to party, ship to party number alone. Sorry, bill to party alone. Supplier will be there, bill to party will be there, ship to party will be there. Ship to means I will be sending the goods to him, but actually billing is done to whom? You look at that number alone. You look at that number alone. Let me tell you again, look at the bill to party alone. And again apply the same rule whether SCC is there, if it is an import or if it is a foreign national, and again under 10 you see whether there is a movement of goods or not, or goods installed at site or not, and supply taken on board. So basically you see bill to supplier and bill to number. Now you understood the thumb rule, right? Now the exceptions are when there is no movement of goods, then 33 will not work. Though 33 and 29 are there, 33 and 29, that is 33 means the starting with Tamil Nadu code, 33 and 29 is there, but still movement is not there. So place of supply shall be the place at which the goods are located. So this thumb rule will not work for this. Goods installed at site, this thumb rule will not work. Then SCC transaction, this thumb rule will not work. And then supply of goods taken on board or conveyance, this thumb rule will not work. Understood? You can ask me the questions now. I gave you the thumb rule. Very simple. Invoice, you have supplier, recipient. That recipient number only you have to see. Because that is only the 5 conditions which they are giving, no? Nothing else they are giving. Only exception to, so let me just further simplify. 33, main transaction SCC, movement of goods or not. These two you keep it always in your mind. I gave you a lot of exemption because I cannot go beyond the law, but you can go beyond the law, but just keep the other aspects also, whether it is installed, taken on board. So basically 33 subject to SCC or movement of goods. Okay? Clear? Is that clear? I am talking only about goods, not about service. Service we have not yet started. Clear?
So just to make it more clear.
Yeah.
Okay, I am in Chennai. My vendor is in Mumbai. I asked the vendor to supply the goods to somebody in Mumbai.
Yeah.
So from my perspective, since both my GST number and the vendor's GST number is different, I'll be charging. My customer's number is in Mumbai. I'll be charging
IGST. Absolutely correct.
As far as the vendor is concerned, even though he is supplying in Mumbai itself, he will still be charging me IGST. Is it right? He is going to supply to a party in Mumbai on my behalf.
On your behalf, you are the supplier?
I am the supplier.
You are the supplier. You have to supply to a party in Mumbai.
Yes.
Okay.
My vendor is also in Mumbai.
No problem. That will be like, when he is raising an invoice to you, it will be like so and so party in Chennai. That will be the bill to party. Ship to party will be Mumbai. Okay. So he has to charge IGST only. IGST only. And when you raise it, there is another limit.
Movement of goods across the states there.
No, doesn't matter. That movement is happening actually. Between those two parties, it's a very good question. There are two transactions to it. One is, first, they will be, the vendor will be supplying to you. Okay, vendor will be, let me clarify. Vendor will be supplying to you, but the goods will move. On behalf of you, goods will move to the other party. Right? Very good that you asked. So first, there are two limits of transaction. One is vendor is supplying to you. There is a movement of goods. Goods are moving to some other party, that's all. Second is, you are raising an invoice on the other party. Right? In the first transaction, there is a movement of goods. You see whether the other party is located in other state or not. The 33. So you will be charging IGST. Right? Now let's come to, don't close it there itself. Let me just further give you another aspect of that also. Second point is, now you are raising an invoice on the third party. Is there any movement of goods?
No.
Is there any movement of goods? Is there any movement of goods?
There's a movement of goods from the vendor.
So it will be deemed there is a movement of goods. So what happens is, in this case, he has to again charge IGST only, looking at the other party's number. Okay. So, for example, if it is a, if you look at the generator, big machines, etc., which are not moving, then that cases, this will not be applicable. And those are all the exemptions. Did I answer your question? It is an IGST transaction only.
For both parties, both for my vendor as well as for me.
When you get an invoice, it will be IGST. When you raise an invoice, IGST. Because when you get an invoice, supplier will be Mumbai, bill to your name, ship to that party. Right? So that will be clearly your name and IGST will be charged. When you raise an invoice, it will be bill to transaction. Because you will be sending, you are the supplier, bill to only. There is no ship to, only shipping is done. So when you look at the GST number, it is other than 33, you will be charging IGST. Yeah.
The goods has not crossed the border. He has raised invoice on me. The goods have been roaming around Maharashtra only.
Okay.
Right? The place of supply in that basis, location of goods is only in Maharashtra and location of supply is also in Maharashtra.
Yeah.
In such a case, it should be CGST and SGST rather than IGST.
No, can you just clarify one?
See, my Maharashtrian supplier supplies to me
Yeah.
on my behalf only in Maharashtra.
Okay.
Not in other states.
Correct.
Even though I am from Chennai.
Absolutely.
The place of goods is Maharashtra and location of supply is also in Maharashtra.
Okay.
In such a case, it should be CGST.
Very good question. He is asking in the same example. Same example. He is saying.
Same example.
The location of supplier is in Mumbai. Goods are also getting delivered in Mumbai. If both are in the same state, why are you saying IGST? Very good question. The answer to this question is, I told you in the ITC itself, deemed receipt. There is a concept called deemed receipt, right? That means in this transaction, the first limb of though movement is goods are delivered in Chennai, Maharashtra itself, it is actually deemed delivered to the recipient. That is a position. Did I answer your question? Actual physical movement is not there. Actual physical movement will be there only in Tamil Nadu, sorry, in Maharashtra. But actually it is called deemed delivery to the recipient. That is a position. So you have to not only physically look at whether the goods are getting delivered. So I will give you a further example. You go to a shop right here, give your Delhi GST number. Okay, you are going to collect it. Or you will ask some transporter to collect the goods and then deliver it to Delhi. If this party is charging CGST, SGST, he is making a mistake. Reason being, delivery is not like handing over the goods. Delivery getting terminated. Where is it getting terminated? Whether he is transporting or whether you are transporting or whether you are collecting by hand, the nature will not change. Goods are finally getting delivered in Delhi only.
But in this case, it is not getting delivered in Chennai. It is getting delivered in Maharashtra.
That is what I am saying. It is a deemed delivery. There is two concepts. One is actual physical delivery, deemed delivery. Okay. So next is, yeah.
In this case, I did it for a tax purpose.
Yeah.
Maharashtra is losing the tax rate.
No, IGST. They are charging IGST, they are charging IGST.
But it goes to the center, right? But the state, Maharashtra state, even though
Can I stop for a while, because this is something which is beyond the chapter, because this is something with respect to revenue loss to the state, which may not be the subject matter now. I will clarify your point of the thing. Next is, import export. I have a lot of case studies. Probably the materials are also shared, so you can go through. I've put it this way: supplier name is ABC Limited, bill to this. So once you go through all these case studies, you will come to know what is the actual meaning. You fairly understood what is the supplier nature of transaction for the goods. Have you fairly understood? You got the thumb rules? Okay, fine. Now, import or export? Export of goods. Export of goods means, with grammatical variations and cognate expressions, means taking the goods outside India to a place outside India. Taking goods out of India. See, assuming that this is the custom frontiers. If the goods are taken out, export, brought into India from outside, then it is import. Clear? Let me repeat again, because this is very, very important. Assume that this is the custom frontiers. You are taking the goods out of this custom frontiers. It's out of India, it is export. If you are bringing from them, it is import. Clear? I will confuse you with a lot of transactions. Don't get confused. Stick to this thumb rule. Okay? I'll give you an example. I am located in Chennai. I request my US partner to send the goods to UK. He did it. I received the sale consideration also. Is it an export? Is it an export? Supplier is located in Chennai. Recipient is located in US. And goods are supplied to UK. Is it an export or import? Export.
No export.
Any other views, please? Need alternative views.
It crosses the boundary, so it's an export.
Very good. Any other views? Deemed export. Very good. Very good points. Any other views? Sir, I am telling you again. Stick to the thumb rule. Thumb rule. Thumb rule. Has the goods crossed from India to outside? It is going from somewhere to somewhere. Not even coming to Indian border. It is not at all considered as an export. It is not at all considered as export. In the last session when I told them, one audience asked me, "Sir, then what is this transaction is all about? Don't I need to pay the tax on it, income tax?" I said, you have to pay tax on it. You earned income. That is something to do with income tax, but nothing to do with the GST. GST is not applicable. I am telling you GST is not applicable, but I am not telling you that income tax is not applicable. Income tax will come and catch you whatever the profit you are making out of it. Now, sorry?
The vendor raises the bill on us, it's like import, right?
No, but the goods are not crossed, no custom frontiers.
The documentation part is not considered as
No, there is no documentation part because it's not.
which we receive from the vendor for payment of the service.
You pay it, no problem, but the goods are not crossed. Thumb rule is there is no condition. Only export import definition, if you see, sir, it's only 25210 says goods taking out of India, bringing into India. As long as the goods are not crossed. Now I will give you another example. Supplier is located in US, recipient is located in, the recipient is located in UK and goods are delivered to Chennai from US. US is the supplier and then instruction is given by UK and based on the UK's instruction, US guy has sent the goods to Chennai. Is it an import or export?
Yes.
It's an import because the goods have crossed the custom frontiers. Very thumb rule, forget about all the other things. Now I will confuse you further.
Sir, in the first case you mentioned, why can't I take it as a deemed receipt? Just like you talked about a deemed receipt in my case, here can't I say that there's a deemed receipt of the goods in India and from India it went to UK?
Sir, the good point, but at the same time, export of goods definition with the grammatical deemed receipt and all defined actually in GST. But this is export, not defined. Defined, it's clearly given taking out of India. Unless otherwise you take it out of India, it's not an export. Bringing it to India, it's not an import. Now I will put it this way. Now, assume that the goods are crossed custom frontiers. Cross custom frontiers. Will it be import? Means like it is bringing into India. Will it be import? Sure. Sure. What is the tax I have to pay? Customs, obviously you have to pay the tax also, no? GST tax also, IGST. Yeah, I answered it actually. So IGST has to be taxed. So all the import cases it will be IGST only. Okay. Now, I did the export. Okay, the goods have moved from Chennai to UK. But they have not paid the currency in foreign exchange. They have not paid the remuneration, that means the consideration in convertible foreign exchange. Will this be considered as an export still? How many of you say yes?
Yes.
No. How many of you say no? How many of you say no? At least please raise your hands. At least say something. Huh? No comments, sir. How many of you say yes? There are some people who are saying yes. Why you are saying yes?
The rupee billing is allowed for UK.
Rupee billing is allowed?
First of all, that's the one thing.
Okay.
And the main thing is it is sending out of India.
Okay.
Within the meaning of it fits within the meaning of export.
Absolutely. Your point?
Yeah, the same thing. Goods are moving out of the.
Absolutely correct. They are absolutely right. There is no condition like receipt should be in foreign exchange. Can you see any place where they are saying that import export there is a condition like export should be realized in foreign exchange? Nowhere it is mentioned. Thumb rule, goods taken out of India, bringing into India. That's all. Only one condition. Don't get worried about where the location of supplier, location of recipient, whether they are receiving it in foreign currency or not. Forget about all those things. I think I made my life simple. Now we will move on to supply of service. I'll quickly finish it off. Place of supply of service when there is no foreign party involved. Thumb rule is you look at where the location of supplier and recipient is in India. If both are in India, then 12 will be applicable. If one of the parties are outside India, 13 will be applicable. The thumb rule is this material has been given. Yeah. So place of supply of service. General rule is registered person, then location of the registered person will be the place of supply. Unregistered person, then location of recipient where the address on record is excess, and other cases location of the recipient of supplier of service. Registered person I can understand. I am transacting with another GST registered person. Unregistered person also I can understand. I am transacting with an unregistered party. Other cases, where the location of the recipient, where the address on record is not available. How can you transact with a person where there is no address available? Is that possible? Is that possible? Tell me, sir, how?
For example, we conduct events at various places where we invite participation from.
Absolutely correct, yeah.
So some of them remit the money, we get the money into the account, but when we know the person's name,
correct.
sometimes we may not know
Correct.
the address. Right?
So, I'll add to one point. There is a separate section for training, but it's a good point. How many of you gone for movie? You have not given your address, no? Just take the ticket. Movie also there is a separate provision. I'll tell you how many of you have taken DDs, demand draft. You will not give address. You just go over the counter, take the DD and go. That's all. So those cases they will be charging CGST, SGST. Right? 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 Yes, because most of the cases bank will charge CGST, SGST only because location of the branch also there and location, place of supply will be that particular place, location of the supplier. So this is the thumb rule. Registered means registered persons. Number, look at the number, registered principal place of business, location of such person, and unregistered means look at where the address available on record, and third is location of the supplier of service. Immovable property. Somebody asked me immovable property during the break. Somebody asked me immovable property. Okay, I don't remember. So immovable property, you look at where the immovable property is located. Okay. Now services directly in relation to immovable properties also you have to see. See, all these keywords are very, very important. Look at the services directly in relation to immovable property like architects, interior decorators, surveyors, engineers, other related expert, estate, grant of rights to immovable property, etc. All these things, place of supply shall be place at which the immovable property is located. Hotels, inn, guest house, homestay, all these things, the same thing will continue. And please note it, they are using the word directly in relation. Had they used the word in relation, even chartered accountants would be in trouble, because what happens is, assuming that one client comes to me, his property is located in Bangalore and asking me, Rajiv, I have a litigation on this particular property, can you represent me? I will say I will represent you, sir, but I will be charging you IGST only. Why? The property located in Bangalore, so my place of supply shall be Bangalore. But fortunately they use the word directly in relation. This is not directly in relation, this is indirectly in relation. So that will not be applicable. So in this case it is directly in relation, so whatever directly applicable to that particular property, place of supply shall be the place at which the property is located. And immovable property. And immovable property, this is also I told. See, for example, I am engaging when this case is there, immovable property case example I have given, assuming that I am engaging one engineer from here for my immovable property located in Goa. Then if he is traveling to Goa and doing the all architects, etc., though both of us are situated in Tamil Nadu, location of supplier is Tamil Nadu, but place of supply is Goa, so they have to charge IGST. All these are available. Restaurant and catering services. If restaurant and catering services, location where the services are actually performed, that means the food is supplied, wherever the food is supplied, that will be the place of supply. And personal grooming, fitness, all these things will be part of it. That's why if you go to naturals and all, they will be charging you CGST, SGST only. How many of you go to naturals? No, ladies? Many people are lying then. Oh, green trend, huh? No. Then?
Black and white.
Sorry?
Black and white.
Black and white. Oh, I don't even heard about this. Femina?
You have to come to Tambaram then.
Tambaram, that side, okay. I don't know. How many of you go? Many, all of you will be going.
18%.
Huh?
Better go to a barber shop.
No, ladies don't go, sir. They are ready to spend 18%, or even if you charge 28%, they will go. No problem. Training and performance appraisal. Training and performance appraisal. You said training and performance, right? If it is supplied to a registered person, assuming that ABC Private Limited is asking me to do a training service for their corporate accounts department, assuming that the company is located, the registered person is located in Chennai, asking me to do the training service in Bangalore, still I will be charging. CGST, SGST, because I am located in Chennai. Two things you have to always consider: location of the supplier, two, place of supply is the registered person's place. Okay. Assuming that I am supplying service to an unregistered party. Okay. Training and performance to unregistered party, then location where the services are actually performed. So here you have to see there is an interpretational issue which will come up later. What is that issue? See here they are using the word training and performance. You look at this point, they are using the word training and performance appraisal. If you are doing only training, you will go back to the general rule. If it is training and performance appraisal, then only you will come to this exceptional cases. Understood? If you are just going and taking a training, then the thumb rule will be applicable, the general rule will be applicable. But if you are doing a training and performance appraisal, you are just conducting a training. See, for example, I am just going to one company and then doing a training and then coming back without any performance appraisal. Will that be considered as, for this particular section, 12.5? Need your answer. If you do performance appraisal, I am just doing the performance appraisal also after my training, then only it will come under 12.5. Got it? Otherwise you have to go back to the general rule. Okay. Now, admission to cultural, etc., all this cultural activities, cultural, artistic, sporting, etc., scientific, educational, entertainment, amusement park, etc. Place of supply shall be the place where the event is actually held or where the park or such other place is located. See, for example, the IPL matches happened in Chepauk, right? So, since the location of that particular event, the event is happened in Chepauk, you have to charge CGST and SGST, correct? No, I am telling you again, location of that event is happened, I am determining only the place of supply. Now let's see who is conducting this program, what is the location of supplier. So place of supply is Chennai, but you have to see what is the location of the supplier. If the location of supplier is in Tamil Nadu, then it will be CGST, SGST, otherwise it will be IGST. Thank you so much for your response. Otherwise it's a post-lunch session, it's very difficult. It's going to be the lunch time, right? And now organizing an event. See, if you are organizing an event to a registered party, then that location of such person shall be the place of supply. Now, I am saying that registered person, location of such person, etc., etc. What do I mean by such person's location? So, assuming that he is giving me the registration number, and if I am seeing that registration number, if it is 3333, that is what I mean. If it is 3333, we already decided some thumb rule, right? No, that thumb rule is only for goods. That only for goods. Services, we have thumb rule like 3333 if it is a registered party. If it is an unregistered party, address on record, otherwise location of the supplier. Okay?
Now what happened import of, like, for somebody coming from abroad doing
Import of services?
Yeah.
That will be dealing in the second basis. And transportation of goods. If you are transporting goods to a registered party, that location of that party, or to unregistered party, the location at which the such goods are handed over for their transportation. Transportation of passengers. Transportation of passengers to registered party, location of the registered party. If it is to unregistered party, where the passengers embarks for the conveyance for a continuous journey. Okay. Services on board or conveyance. We discussed about the goods taken on board. Services cannot be taken on board, right? Goods, we told where the journey, where the goods are taken on board. Assuming that the Shatabdi Express starts from Tamil Nadu and then the goods are taken on board from Andhra Pradesh, then the place at which the goods are taken on board, that will be the place of supply. But in case of services, you cannot determine when the services are getting boarded, right? You cannot determine that. Service cannot be seen. So what you have to do, where the vehicle, that conveyance is getting started. See, assuming that the vehicle is started from Tamil Nadu, that will be the place of supply. Understood? If the place of this is the place of supply for services. Goods we already discussed under 10(1)(e). Now, telecommunication services. My friend is there from Tata Teleservices. He will be appreciating these points. So, for his sake, at least we will take this. And services involving fixed lines, circuits, etc., etc. Place of supply shall be location of such fixed equipment. And in case of mobile, internet, postpaid services, etc., place of supply shall be location of billing address of the recipient. Definitely, I'm sure that he will appreciate that. Nobody will give connection without address, right? Is it possible?
It's mandatory.
It's mandatory, not possible, right? Without that. Okay. So there is no case that you will have cases where there is no cases where connection without any address. So you don't have to even explore that. Next is sale of prepaid vouchers. Then place of supply shall be place of sale of such vouchers. So you'll be dealing all these things. And in other cases, place of supply shall be address of the recipient in record. There is no other cases where address is not available. Okay. Now banking and financial services, already we agreed, none of you are from banking and financial services, so I'll be skipping this particular thing. And advertisement services, that is, advertisement services to the central government, state government or statutory body or local authority. Please understand, this is not a general clause, this is exclusively for the purpose of central government, state government, statutory body or local authority only. In such cases, the place of supply shall be taken as located in each of such states proportionate value in multiple states. Some cases, they will give some advertisement in radio, right? So what happens is, they will give an advertisement and it will be for the across India, right? They will engage one party and they will do the services across the pan-India level, they will do it, and that has to be proportionately apportioned. Now we have something called, these are the transactions where both the parties, supplier and the recipient, both are in the same, all are in India. It's all domestic transactions. So now we will see what are all the cases where when foreign party is involved. Before that, let me just tell you, I told you one important point that under the definition for export of goods, foreign exchange is not at all an important criteria. But look at the definition for export of service. Now we are moving to the service, right? Export of service, to qualify export of service, supplier of service is located in India and recipient of service is located outside India. Third is place of supply of services outside India, and the payment of such services has been received in convertible foreign currency exchange, and both are not merely distinct persons. So here it is very, very important to note that for the purpose of service, you have to mandatorily receive the consideration in foreign exchange. Understood? For goods, it's not at all a consideration, but foreign transaction, services, the consideration must be received in convertible foreign exchange. Now, in this definition, why we are dealing section 13? It's mainly because of the point number 3, place of supply of services outside India. So we are determining whether the place of supply is in India or outside India. If it is outside India, then only it will qualify for export of service. Import of service, government is very clever. They said no, even if you don't receive it in foreign exchange, it doesn't matter, we will consider it as an import of service. So you look at it, located, supplier of service is located outside India, recipient of service is located in India, place of supply service is India. Now, place of supply of service, in this particular scenario what happens is, now we are going to deal with section 13 where you are dealing with a foreign party. They may not be having the registration number, right? Generally, they will not be having the GST registration number because it's a foreign party. So in such case, they are saying, the general rule says, location of the recipient of service, or in case if the location of this recipient of service is not available, location of the supplier of service. See here, there are a lot of issues. Even recently we come up with a particular scenario. Because of this issue, one company is making a loss to the tune of 18%. Because you can see in one of the slides, you can see intermediary services. Intermediary services where location of supplier of service shall be the place of supply. Because of location of supplier is from Tamil Nadu, this is not qualifying as an export, and tax also cannot be exported. Foreign parties were not able to, they are not ready to pay the taxes. Finally, they had to pay out of their pocket. After introduction of GST, they are started making a loss of 18%. They started, we made a representation, we prepared the representation to give it to it's a broker, the insurance broker, they have pan-India level, they have the presence. They have an association called Indian Brokers Association. We prepared the representation and submitted to them. In turn, asking them to submit it to the ministry, otherwise these kind of businesses will be closed down soon. And in case of, there are exceptions. The same way, here also we have a couple of exceptions. Like goods are required to be made physically available. If that being the case, goods which are required to be made physically available, then place of supply shall be location where the services are actually performed. All of you are with me? Sure. Lot of concepts which I am talking, it's very difficult to grasp it. See, because this place of supply, what happens is, they determined it, they gave a thumb rule, but they have given around 14 exemptions to determine place of supply in 12 itself. Further, around 10 cases in foreign party transactions also. So around we have 15 exemption cases. So you have to bear with me, and I know that you will not be able to appreciate it immediately, because 28 concepts immediately if I give it, I know that you will not be able to appreciate it. But just material is also available with you. You can always get back to me if you have any doubt, and I will just, to the extent possible, I will simplify it, and more than that I may not be able to do it, because law is there and it is tying my hands also. And immovable property, we discussed both the location of the supplier, both parties are in India, 12 will be applicable. If one party is outside India, then 13 will be applicable. In case of immovable property, if it is directly in relation, again I am using the word directly in relation, because otherwise again this will be disputable, all chartered accountants will be in trouble, because it is using the word in relation. Fortunately they are using directly in relation. Experts and real estate agents, all these cases are given where they are saying place of supply where the immovable property is located or intended to be located. Okay. Assuming that one foreign party is coming down and asking us to do the construction, then you have to see where the immovable property is located. Assuming that if it is in India, then that will be the place of supply. Just because the party is from UK, you cannot consider this as an export of service. Admission to cultural, etc., all these things. You know that all these film associations, they are conducting a lot of programs abroad, right? This Nadigar Sangam, etc., they are going abroad and then conducting a lot of programs. All these things, you have to see place where the event is actually held. Assuming that if it is held in UK, that will be the place of supply. If it is held in US, that will be the place of supply. And hence, they have to charge IGST, right? Hence, they have to charge IGST, right? They have to charge IGST or not? Very good. CGST, SGST.
It will depend upon whether they have a registration in that particular place.
Absolutely correct. You mean the location of supply?
The person who is rendering the service, whether
Yeah.
he has got a GST registration in that particular location.
No, they don't have a location. Foreign party, no. Obviously, they will not be having.
Then no.
So I have to charge IGST? How many of you say IGST? I'm saying IGST. Please raise your hands. How many of you say IGST? I'm saying IGST. Okay. I think I'm getting some benefits now. Nobody's raising with me. When I started, many people were raising with me. Now many people have understood the concept. So it's not like that. As I said, we are determining only the place of supply here, and second, place where the event is actually held. So you have to determine where the event is actually held. Assume that it is held in UK, that will be the place of supply. This is only out of 5 conditions. This is only one of the conditions out of 5. Location of supplier of service, location of recipient of service, third is place of supply, fourth is the consideration should be received in foreign exchange, fifth is both should not be each distinct person. These 5 conditions should be satisfied to consider it as an export of service. Clear? Clear? So place of supply, this point is only one among them. Okay. Now, specified services, these are all something I have given, but because of time, I think now it's already 1:45. Transportation of goods excluding mail or, see here, this is the last point which I would like to handle today. Online information and database access retrieval services. Spelling itself is very difficult. Remembering that word itself is very difficult, right? Recently I got a case. Actually. One company, they are actually, what they are doing is, they are supplying services to LinkedIn. You know LinkedIn, right? LinkedIn, Facebook and all. So what happens is, they are actually creating the database for LinkedIn. If you go to LinkedIn and search chartered accountants specialized in GST, if you search, that will give you a database. This is called database retrieval system. My client got a notice saying that, boss, you are doing database retrieval system, so you are not eligible for refund, etc., etc. Then I sat with that technical guy and understand what he exactly doing. He showed me the entire process. He is just supplying creating the database. He is not actually providing the service. Actually, service is provided by LinkedIn only. So LinkedIn is actually a OIDR party, Facebook, Google for that matter. Even your Excel sheet is also a database retrieval system. Okay. Now, place of supply, let me warn you again and again, nature of transactions, nature of supply will determine the rate of tax, the nature of tax to be charged, and nature of transaction, nature of supply will have 2 limbs. One is location of supplier and second is place of supply. So can you determine, let me ask you a question, can you determine the rate of tax, the nature of supply based on place of supply? How many of you say yes? No? Yes, you can do it, no? You can do it, no? No? Absolutely correct. To determine the nature of supply, you have to determine the location of supplier as well as the place of supply. So, this thumb rule, please keep it in mind. Nature of supply, these 2 things are very, very relevant. Any other questions? I think lunch is ready. I know that many people's stomach is, the firing. That fire should not affect me, that is why I am asking. See, when I started the presentation, everybody was smiling. I told you, smile, smile, smile. Your life will be, your life will get extended. So any other doubts? Any other doubts? It has only two meanings. One, you understood everything. Two, you understood nothing.
No, we will call you.
Okay, definitely, no problem.
You can find him during lunch. Also.
Yeah. So thank you so much. Thank you, Sripriya, for inviting me for this program. I'm really happy to associate with the SARC. Thank you so much for your patience here. Thank you.
I'm going to make it really short. I could not make it yesterday for the opening because we had a small medical emergency and I had to go. So just take about 3 minutes of your time, and I understand the growling stomachs. So this whole program is, I think we are on the 13th or the 14th batch, and we've run it for as many as 120 to 15 people because we found that there's still a very large population. Whenever we take this statistics, we find that it's the same set of 300 people who've been attending the GST programs. And Chennai's got about 15,000 members, and hence this program. The whole program was designed slightly differently. It said to understand GST, you need to understand only 4 things. It's the 4 C's. So one is, what is the conceptual? So it's actually 5 C's. The first is the component of your financials that it affects. So whether you're working for a company and you're trying to unravel GST for your own company, or whether you're consulting for somebody or auditing somebody, you just need to remember the first C is the component of the financial statement that gets impacted. It could be fixed assets, revenues, inventory, any part of it. The second C is the conceptual change. This act is of course completely conceptually different from the earlier act. And there are only about 20 conceptual changes, which I'm sure they've been running through the process that this act brings with it. The way a tax is defined, the way the credits are defined, the way the returns are filed, how are exports getting treated. So those 20 conceptual changes. Then the third C is your compliance changes. What are the changes to my dates, my rates, my returns, my records? Those are fairly simple once you've understood the compliance changes, the conceptual changes. The fourth is cost changes. Again, for all of us who believe that GST is over, in my opinion, GST is even yet to start. Nobody has looked at how to convert GST from an optimization perspective. And I think that's where we need to get. So today, if you're on the verge of, renewing a lease for your warehouse, you might want to rethink. You should today renew it only for 3 to 6 months because you will find that warehouse itself is a redundancy today. Something you had created for a predetermined sale avoidance under the erstwhile VAT regime to prevent your CST sale, the Ashok Leyland case, today you may not even want to have a warehouse. So that's the fourth change, the cost. The fifth is of course managing this change. So we've had 300, 400 notifications. They're it's like almost like a cannon with an unlimited supply of cannonballs. It just keeps firing all through. The advance authority rulings have started coming. So there's quite a bit of change that you need to cope with. So with these very few words, I'd like to thank you for being part of this workshop. Any feedback, please stay back. I think there's one advanced also that we are running this month. We've started a series of collaborative workshops, which is why we've converted the first part to a round table. So I think it's on 27th, or I'm not sure, 25th. 23rd is... Okay, no, on a slightly later date, we have a advanced GST workshop where we are going to be covering amendments, advance authority, and we have an expert who's going to speak only on classification. So just classification of goods and services. So if you're interested, you can come in. And the other thing is, very, very happy with the way Rajiv delivered, and I hope you liked it too. We've also started an e-learning initiative in the CPE committee. So you can actually log into icaielearning.org. You can register yourself, and we've put in a lot of lectures now. If you listen to those lectures, the mass mail has not yet been sent to everybody. Your unstructured credit gets automatically updated. And these videos are e-learning compliant. So if I listen to, let's say, Bimal Jain's video or Mr. Girish Ahuja's video for 20 minutes and I leave it there and I log out, tomorrow morning when I come back, it starts for me at my 20th minute. So we've made it compliant. So I'm going to request Rajiv to do exactly this as an e-learning lecture for us as well. So thank you very, very much once again, and could I please invite C.A. Ramanathan sir to please come and present a memento to Rajiv. He's from MC Ranganathan and Co. where they have another very helpful partner called Mr. T.R. Chandrasekhar. So
So I have pleasure in presenting this memento to Mr. Rajiv, who had a very electrifying and lively session, and demystifying GST is really, he has tried his best.
Thank you so much.
So this advanced GST workshop is on 25th. It's got Mr. Harisudhan, Hariganesh Venkateshwaran and Raghavan Ramabhadran who will be addressing. Promises to be an exciting workshop. So if you'd like to drop in, you can please drop in. Thank you. Thank you very much and off for lunch.
Hello. 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 It's my pleasure to introduce Mr. Sri R. Subramaniam to you. He is a qualified chartered accountant and a cost accountant. He has over 20 years of in-depth professional experience in both direct and indirect taxes practice, and is the founder and senior partner of Subramaniam and Associates headquartered at Chennai. His wide range of clients includes MNCs, listed and unlisted companies, firms and other medium and large business enterprises besides MSMEs covering a wide spectrum of trade, industry and commerce. His area of specialization includes income tax and GST. Besides, recently repealed legislations of service tax, central excise and central sales tax and VAT. He has delivered presentations in over 100 orientation seminars on GST, even prior to its introduction, with effect from 1/7/2017, and continues to address seminars and meetings on GST post its introduction. He also has unique distinction having trained government and private sector employees on the nuances of GST. CA Subramaniam regularly appears before all direct and indirect tax authorities including CIT appeals, ITAT, CESTAT and VAT tribunals. He also trains the GST officials of state and central government. CA Subramaniam regularly addresses members and students in seminar study circle meetings conducted by the auspices of the Institute of Chartered Accountants and Institute of Company Secretaries, besides members of various chambers of commerce, association and other bodies representing trade industry. He has been selected as GST faculty for the Institute of Chartered Accountants of India by the Indirect Tax Committee. CA Subramaniam is widely travelled in India and abroad and is a keen participant in philanthropic and charitable activities. He is a member of several charitable and welfare associations in South India engaged in religious and social welfare activities. We will let us welcome Sri S. Subramaniam to take us through value of taxable surveillance.
At the outset, I am thankful for the organizers, SIRC, for giving me an opportunity to share my views on GST, particularly GST valuations. Each and every time SIRC, I know your problems, is a post-lunch sessions. Each and every time SIRC, they are calling me only in post-lunch sessions. I thought
they have full confidence in you.
Yes. I thought that okay, I am presenting well, that's why they are calling me. After that, there are a lot of representation. This is a speaker, not disturbing my sleep, therefore, after post-session, only Subramaniam. So, that is, therefore, I assure you that I will not disturb your sleep. Those who wanted to sleep, you please continue. And don't disturb the others. So, with this, we'll go into the topic. So, before going into the topic, valuation, we will also go through some basic aspects. Supply is over, correct? Section 7 of the CST Act define what is supply. Supply includes sale, transfer, exchange, barter, lease, license, etc. for a consideration in the course or furtherance of a business. So therefore the supply is an inclusive definition. That means, is it restrictive or exhaustive? Any idea? See, supply start with it includes. It includes sale, transfer, exchange, barter for a considerations in the course or furtherance of a business. So therefore, is it an inclusive definition or is an exhaustive definition? It is a restrictive one or exhaustive one? Exhaustive one. Why, sir? But it starts with it includes. So it includes only these are all the items. Exhaustive. Why, sir?
Because they have not defined the supply first.
Not defined supply first.
They have not defined. But they want to include certain things specifically.
Okay. Suppose if you name it some supply, some name. Can you say that this is not there in section, therefore I am outside the purview of supply?
Supply does not begin with the word means.
Yes, it includes. So therefore, it is a restrictive or exhaustive. So it is an exhaustive definition. The reason is, there is one Supreme Court decision, I think if my remembrance is right, 8480 or page number 44. Taj Mahal Hotel, wherein the Supreme Court had held that, and then under the income tax also held that inclusive is an exhaustive definitions. So therefore it includes all. So therefore the first, it is an exhaustive definition one. The second very very important is there should be a consideration. So therefore the consideration is necessary for the supply. If there is no link between the supply and the consideration, then it is not liable for GST. So therefore there should be a link between the consideration and supply. Say for example, a beggar is singing song very well. I paid him 10,000 rupees. Like that there are 20 or 30 persons. Paid him 5,000, 3,000, 2,000 in the Ranganathan street. His total aggregate turnover is exceeds 20 lakhs. Aggregate turnover is exceeds 20. Whether he is liable to get it registered and pay the tax? Yes or no?
No.
His aggregate turnover is exceeds 20 lakhs. He deposited the entire amount into the bank and he filed his IT return also. Now there is a query from the GST officers, your turnover is exceeds 20 lakh rupees, you didn't register with the income tax GST department, therefore you register it and pay the tax. What a stand he will take? Whether he is liable to get it registered. So he is not liable to get it registered because there is no link between his supply and the consideration. I may or may not pay to him. It is not obligatory on my part to pay to him. Just I can enjoy the song and then go. Correct. So therefore there is no obligation on my part to pay to him. So therefore this will be outside the purview of the GST. The same beggar, suppose assuming that there is some big functions, I engaged the beggar and I paid him 20 lakh rupees. So he came and he performed. Then in such a situation, it is liable for GST because there is an obligation on his part to render the services, and also there is an obligation on my part to pay to the consideration to him. So therefore he is liable to pay the GST. So that is a difference. So therefore one, the supply is an exhaustive definition one. The second is, it should be for a consideration. That's very very important. If there is no consideration at all, the question of levying the GST doesn't arise. Therefore there should be a consideration. The third important is it should be in the course or furtherance of a business. Therefore, that's very, very important. Assuming that HDFC Vice President, he purchased one BMW car on 1st July 2017. Now he is selling in July 2020 for 25 lakh rupees. Now the GST officer issued a notice saying that you sold some BMW car more than 20 lakh rupees. You are required to get it registered and pay the tax. Am I going fast? Correct. Whether he is liable to pay the GST, whether he is liable to get it registered. Yes or no? No, because he is not in the course or furtherance of a business, he is only an employee of the HDFC man. He is telling his business is, there is no business at all. He is only an employee. Now the same situation, the same person is also doing part-time of buying and selling the car. The same HDFC employee, now he is having one part-time business of buying and selling the cars. Then in such a situation, whether he is liable to get it registered and pay the tax?
Yes.
Only two. Yes or no?
Yes.
So before 1 year back, we will have 4 or 5 or 6 opinions. Now at least 2. So the GST slowly settled down. Yes sir? Yes or no? So my view is still he is not liable to pay the GST because this is a personal asset for him. Correct? This is a personal asset. This is not in the course or furtherance of a business. This is not incidental to the carrying of the business. Therefore, he is not liable to pay the GST. The other view is no sir, he is in the course or furtherance of a business. Therefore, he is liable to pay the GST. I am not subscribing the second view. I am subscribing the first view. My view is he is not liable to pay the GST. A chartered accountant. A chartered accountant, he is doing statutory audit, filing returns, tax audit, etc. He is selling the old furniture and fittings and purchase a new one. Whether the sale of your old furniture and fitting is liable for the GST. He is rendering only the service. Whether he is liable to pay the GST on the sale of your old furniture and fittings. The old furniture and fitting is for 5 lakh rupees.
If he has claimed ITC,
Hmm?
if he has claimed ITC, he has to pay.
Assuming that he claimed ITC 1, the situation 2 is not claimed ITC. Both we will discuss. If he claimed ITC, so assuming that he purchased these old furniture and fittings before 1/7/2017, whether he is eligible to claim the ITC under the earlier law. Earlier law he will be covered by service tax or VAT. Service tax. Service tax whether he can claim? He cannot claim. So assuming that he has not claimed the input tax credit, and in such a situation, whether he is liable to pay the GST. Chartered accountant. Yes or no? No. Used for the business. Used for the business, depreciation is claimed on the asset, furniture and fittings. Stop. So he is liable to pay the GST because this furniture and fitting is in the incidental to the carrying of the business. And he has also claimed the depreciations. It is not his personal assets. So therefore, he is liable to pay the GST. Now the same proprietorship concern, chartered accountant firm, now they are selling some gold. Whether they are liable to pay the GST on the gold, on the sale of your gold. No, why is that?
Because it's not used for the purpose of
It is not incidental to, say first business is being defined in section 2 subsection 13. It says business, trade, commerce, etc. and any incidental activity. Is it the incidental activity sale of a good, is it an incidental activity? It is not an incidental activity. Therefore, he is not required to get it registered and pay the GST. So therefore, the basic is 1, the supply is an inclusive definition. The second is here, consideration is very, very important. The third is it should be in the course or furtherance of a business. The fourth very very important is a by a person. So therefore the other person is not required under the GST law. Under the earlier law, VAT, for levying a VAT, there must be a seller, there must be a buyer, there must be a consideration, and there must be a transfer of property from one person to another person, which is absent in GST law. That means, if I am sending the goods from here to my own branch office in Pondicherry, I am liable to pay the IGST. It is one entity, one PAN number, one management, all they, okay, I agree. But the Act says, no, according to section 25, subsection 4 and subsection 5 of the GST Act, it says, if a person have two different number, GST number, then these two persons will be considered as a distinct person. Or if a person have a two establishments and registered separately, these two establishments will be considered as a distinct person. So therefore, if there is a supply between two the distinct person, then it is liable for the GST. No doubt, one management, one PAN number, one private limited company, all I agree. But the GST law says different. The GST law says, no, you are a different person. Therefore, if there is any transaction between the two distinct persons, even within the state, assuming that I have one business in Chennai registered, and I have another business in Coimbatore registered, if there is any transaction between these two registered person, you are liable to pay the GST. So therefore, you must be very, very careful. What earlier we will do, just like that we will pass one entry from here to there. These are all, you must be very, very careful in finalizing the accounts. So therefore, if there are supply between your two distinct person under the same entity, that is liable for the GST.
That is branch to branch.
Branch to branch, sir. Within the state, branch to branch, but having a two different number. Within the state, I have only one number, but I have 5 or 6 branches. Those branches, I show it as an additional place of business, not registered, then there is no problem at all. But if you registered it
As a
separate, then you must be very, very careful. Then in such situations, you are liable to pay the GST. Only one call, sir, urgent call, sir.
Excuse me, sir.
Yes, sir.
I'm a little unclear.
Yeah.
Appreciate if you can enlighten me on this. Earlier case you were telling about chartered accountancy firm.
Yes, sir.
Selling their furniture. My only apprehension is chartered accountancy. They are only rendering service.
Correct.
They are not in the business of selling furniture.
Correct, sir.
They have registered their GST only because of the services they provide. And it's a one-time sale. Okay, you wanted to remodify your office, so you are selling your old furniture, which is a pittance or nothing compared to the new price. So I'm not very clear on that.
Even a single transaction, you please go through subsection 13 if my remembrance is correct. Even a single transaction constitutes a business. Therefore, you must be very careful. My view is.
And also, you are not in the business of selling furniture.
No, sir. Say whether you are in the course of your business or not. So you are in the course of your business or professions. Correct. So any supply is liable for the GST. That's all. Any supply is liable for the GST. So therefore, one is a by a person, consideration is over. Now, the act for this is covered by section 7(1) subsection A. 7(1) subsection B says there are certain transactions which are all listed in the first schedule. Without consideration, you are liable to pay the GST. That's very, very important. Therefore, there are certain transactions. I agreed. But without a consideration, there is no consideration at all. Even then, even then there is a GST liability. So therefore you have to go through Schedule 1. What Schedule 1 says? Schedule 1, item number 1 talks about permanent transfer of a business asset on which input tax credit is claimed. This is the first item in Schedule 1. Permanent transfer of a business asset on which input tax credit is claimed. I will give you with one example. TCS. TCS purchased 1000 computers in July 2017. In July 2017. In July 2020, they are selling these 1000 computers. Old computers, they wanted to sell it. The price is 500 rupees. Now the management decides, so it is only 500 rupees. Why don't we donate to some charitable institutions? So they decided to donate to the charitable institutions. When you donate to the charitable institutions, will there be any consideration? No consideration. So they transferred all the 1000 computers to 3 or 4 charitable institutions. Whether TCS is liable to pay the GST? Here the question is no consideration at all, correct? When you go through section 7.1 subsection A, it says supply includes etc. for a consideration. But if you go through section 7.1B, it says there are certain activity without consideration you are liable to pay the GST. But those activities are specified in Schedule 1. Therefore, you must verify the Schedule 1. Schedule 1, item number 1, permanent transfer of a business asset on which the input tax credit is claimed. So therefore, the first question is whether TCS claimed input tax credit. Yes or no? Yes. In July 2017, they purchased 1000 computers. They claimed GST, input tax credit. This is the first question. The second question is it a business asset for TCS? Because the section uses the word permanent transfer of business asset. Is it a business asset?
Yes.
Whether the business asset is defined in the GST law, the business asset is not defined in the GST law. So therefore, this computer is a business asset or not? It is a business asset because it is used in the business one on which the TCS claimed depreciation, on which the TCS claimed input tax credit. Therefore, it is a business asset. Correct. So therefore, the first is there any transfer or not? Yes, there is a transfer. Is it a permanent transfer or not? Yes, there is a permanent transfer. Is it a business asset or not? Yes, there is a business asset. On which input tax credit is claimed or not? Yes, the input tax credit is claimed. So therefore, this transaction, even without consideration, the TCS is liable to pay the GST. So now the question is, what is the valuation? At what value? Whether at purchase value or purchase value minus depreciation, whether depreciation as per Companies Act or depreciation as per IT Act, whether WDV method or straight line method, all those things which we have to discuss. So this is the item number 1. Suppose a same TCS purchased 1000 car in July 2017 and they are selling in July 2020. Now tell me the implications. Whether TCS is liable to pay GST. These 1000 cars they donated to the charitable institution. The facts are similar. Except computer, you have to replace with motor car. That's all.
They are not.
Yes, sir.
Motor car is an item where ITC cannot be claimed.
So here, here it is a business asset, yes. Is there any transfer? Yes. But on which input tax credit is claimed or not? So section 17 subsection 5, item number A, it says you are not entitled for input tax credit in respect of the motor vehicle, correct? Other than one, motor vehicle used for further supply 1, the second is transportation of passenger, the third is a transportation of goods, fourth is a driving institute. These 4 category only you are eligible to claim the input tax credit. Other than this, you are not eligible to claim the input tax credit. Therefore, no input tax credit is claimed. Therefore, the TCS not liable to pay the GST. So this is the schedule number, item number 1. Then item number 2, yes sir.
Sir,
No problem.
In that same example, TCS.
Yes sir.
When they donated the laptops or computers to the institution, if the return down value by company, if you apply company law, if you apply income tax or general principles of accountancy, it is 0 return down value. Then
Okay.
what happens?
See,
what value they will put?
That is why the valuation I am coming, section 15. So before that, I am giving you all the basics, and then we will go for section 15 and rule number 27 to rule number 35. We will examine it.
Does the definition of business asset cover only capital assets or even?
Very excellent question. Business asset is not being defined under the GST law. Business asset is not being defined under the GST law. My view is even a stock in trade is also will come under schedule 1 and item number 1. That is my view. So therefore they have to clarify. The indirect tax committee of ICA is also represented. So we will wait for the clarifications from the department. Until then, it includes both. So the word is, if it is a capital asset, there is no problem at all. But it talks about business asset. Even a stock in trade is also business asset. Capital asset is also a business asset. So therefore, you have to wait and see that. Clarifications from the department. Yes, sir.
So any asset, then you are saying before July 17, I have purchased and I have not availed input credit. But I sold after 17, I am not liable to pay GST.
You are liable to pay GST, sir. You have not claimed the input tax credit earlier, correct? You have not claimed input tax credit. It is a business asset. Transfer, the Act doesn't say that only the GST suffered input tax credit assets. It says on which the input tax credit not claimed, that's all. So therefore, my view is, you are liable to pay the GST, and then you please refer circular number 8/2018. There is a clarifications even for the asset which are all purchased prior to July 2017, there is a liability. And they have reduced the rate from 28 to 12 and 18%. So therefore, you have to examine the notification number 8/2018. So therefore, this is a first item. The second important is schedule number 1, without consideration. If there is a transaction between a two distinct person or two related person, even without consideration, liability to pay the GST. So that means I am sending a goods from here to Pondicherry. Pondicherry office, they are not going to give me the consideration, correct? Will they give the consideration for the supply? No. Even then you are liable to pay the GST 1. The second important is, there is a related party. Related party is being defined in section 15. Explanation. What are all related parties? So if there is a transaction between two related parties, say for example, Subramanian Associate is a partnership firm, filing Subramanian IT return, filing Subramanian income tax return. Whether Subramanian Associate and Subramanian, are they related or not? Yes or no?
Yes.
They are related, correct. They are related. Now Subramanian Associate, what they will do? They will file my IT return, that's all, income tax return. Will they raise me invoice? Will they raise invoice? They won't raise normally, correct. But the Act says no problem, even if you are not raising invoices, but these are all two transactions between the two related parties, even without consideration, you are liable to pay the GST. Therefore, the Subramanian Associate, what they have to do? They have to find out what would be the value. The same service what I am giving to outsiders, on which the Subramanian Associate is liable to discharge the GST. So therefore, I decided I will file my return. Subramanian Associate is not required to file my IT return. I will take care of my IT return. So I will not involve. So therefore, if there is a transaction between the related parties, say for example, wife, she is doing some business for in her own property, for 30 to 40 lakh rupees. Now the husband, he wanted to start the other business. Now wife, she gave 50% of the property to the husband without any consideration. No problem, sir, you use this. For the total 4,000 square feet. So I am taking 2,000 square feet, use this 2,000 square feet, you are not required to pay any rent. In such a situation, the wife is liable to pay the GST on these 2,000 square feet. No consideration, nothing. But the act says wife and husband are related person. So therefore, consideration is not important. What is important is only GST. So you pay me the GST. So that's all. Then what do you have to do? What is 4,000 square feet? What would be the market value? What would be the open market value? And then accordingly, you have to discharge your GST liability. So this is the second item in Schedule 1. The third item is very, very important. If there is a transaction between the principal and agent the agent to the principal, no consideration is necessary. I am sending the goods to my agent. Don't take a stand, sir. I send to the agent. The agent will sell and then send me all the details. All those things I will book it in my books and then I will recognize, I will pay the tax. Those things is gone under the earlier law. Under the GST law, if you are sending the goods to the agent, you are liable to pay the GST. No consideration, no problem. No consideration. I am sending my own agent, no problem. He will sell it and then he will appropriate the funds. No. When you are sending the goods, you are liable to pay the GST. So this is a third transaction. The fourth important transaction is the importation of services from the establishments outside India for the purpose of a business. So if I am importing any services from an associate enterprises outside India, then in such a situation, without consideration, I am liable to pay the GST. So that means my associate enterprises in US, they gave me the permission to use their software, to use the server, to use their trademark, but they are not charging anything for me. But I am liable to pay under reverse charge mechanism because it is an establishment, it is an associate establishment, it is for the purpose or in the course of your business. Therefore, I am liable to pay under reverse charge mechanism. Yes, sir?
Sir, associated means what, sir?
Associated is as defined under section 92E of the Income Tax Act, sir. So that is defined under the GST law also. So GST law says as per Income Tax Act. So therefore as per Income Tax Act. So therefore this is very, very important. The next very, very important is importation of your services, whether during in the course or furtherance of your business or not, you are liable to pay the GST. This is section 7(1) subsection C. So that means, no, B. So that means importation of your services, whether it is during in the course or business or not, I am liable to pay GST. Today, if my daughter, she downloaded some software from US, she is liable to pay the GST under reverse charge mechanism. Under reverse charge mechanism, because it is a importation of your services, whether during in the course of your business or not, it will be considered as a supply, therefore on which she is liable to pay the GST. But luckily, it is being exempted by the notification number IGST 1099 of the notification number. So therefore, she is not required to pay the GST because it is being exempted by right notifications. If it is individual, it is exempted. But if it is a business entity, they are liable to pay the GST under reverse charge mechanism. So therefore, now you know the basics, what is supply, what is 7(1)A, 7(1)B, 7(1)C and 7(1)D. And there are certain supplies is being treated as a supply of goods according to Schedule 2, treated as a supply of services according to Schedule 2. Therefore, we have to go through the Schedule 2 to find out is it a supply of goods or supply of services. Earlier under the law, what happened? Earlier under the law, whether the software is a service or sale of your goods. It went up to Supreme Court in TCS held that if it is a packaged software and you are selling as such, it is a sale of goods. If you are going to customize, then it will be considered as a sale of services. So therefore, the circular, the Supreme Court decision itself is not much clear what the software company, what they did? தெரியுமா யாருக்காவது என்ன பண்ணாங்கன்னு? They charge both. Both VAT, both service tax. So therefore, to avoid that, schedule 2 clarify what is supply of goods, what is supply of services. So therefore, job work, is it a supply of goods or supply of services? Any treatment or process undertaken on the person, on the goods belonging to the another person is a supply of service. So like that, they have defined what is supply of goods and what is supply of service. Therefore, you have to go through schedule 2 to find out. Why it is required? Why you have to find out it is a supply of goods or supply of services? What is a necessity, sir? What is a necessity? Why you have to find out whether this is supply of goods or this is supply of services?
They are governed by different legislations.
No, sir.
Not
The place of
registration.
service they vary.
Huh?
But first of all, place of service varies.
Very good. Place of supply. That's very, very important. Place of supply for service is different. Place of supply for goods is different. So therefore, to find out that one. The second, the rate of tax. Correct. So therefore, this is a basic under the GST law. With this background, we will go to the valuations. Why valuation is necessary under the GST law? What is the necessity, sir? 1. Valuation. If I am sending the goods to my own branch, what is the value I have to adopt? Whether I have to adopt whatever the, say suppose assuming that I am sending the goods from Chennai to Pondicherry for 1 lakh rupees. The same goods I am selling here for 1,05,000 rupees. And in Pondicherry they are selling at 1,20,000 rupees. What value you will adopt? As an entity, what value you will adopt for sending the goods from Chennai to Pondicherry? 105 or 120 or 105 plus transportation or 120 minus transportation, correct? So therefore, the valuation is very, very important to discharge the GST liability. Between the two related persons, even without a consideration, you are liable to pay the GST. Then how to find out the value? 4,000 square feet, 2,000 square feet, is it for 1,000 rupees or 20,000 rupees? Or the same locality you have to go and find out? Or the next neighbor, what he is charging? Then what is your your specification and the neighbor specification? So these are all things matters, correct? So therefore, the valuation is very, very important under the GST law. So this is being governed by section 15 of the GST Act. So section 15 of the GST Act is very, very clear. It says what is a transaction value, that is a value for the purpose of discharging the GST liability. So what is the transaction value? I am selling a goods from here to X for 1 lakh rupees. The same goods I am selling to Y for 80,000 rupees. In the same goods I am selling to X for 1 lakh rupees. The same goods I am also selling to Z for 80,000 rupees. Is it correct or not? Whether I have to sell it or 1 lakh. The another one case I am selling it for 1,20,000 rupees. Whether you will adopt 1,20,000 for all or whether you will adopt 80,000 to all, what you will do? The officer will say, no sir, sold to X for 1,20,000 rupees, same good, same, you are selling to some person for 80,000 rupees, so I will not accept this, I will adopt 1,20,000 rupees. Which is the correct? So therefore, the Act says the transaction value. Transaction value is, it depends upon the buyer. You may sell it to one person for 1,50,000 rupees, that is my transaction value. You may sell it to another person is for 90,000 rupees, that is my transaction value. So therefore, the transaction value will be the basis. But what you should not do it is, you sell it at 80,000 rupees and get the balance 60 or 50,000 rupees in other way from the buyer. If there is any flow from the buyer to the seller in any other form, then there will be a problem. Correct. I am selling it lakh and 20 here. I am selling it here lakh and I am selling it here 90,000 rupees. Then there won't be any problem at all. So therefore, the one is the transaction value is very, very important. So what is a transaction value? The next question is, I am selling the goods. I purchased at 1 lakh rupees, but I am selling it at 50,000 rupees. Is it allowed? I am purchasing it at 1 lakh rupees. I am selling it 50,000 rupees. Is it possible or not possible? Or will there be any issues? I can take a stand, it is a transaction value. Therefore, I sold it for 50,000 rupees. Under the VAT law, there is one section is called 19 subsection 20. It says you cannot sell it less than your purchase price. If you sell it, then you have to reverse the input tax credit. That is now is pending before the Supreme Court. Madras High Court is against. Madras High Court held that yes, correct. So whether the input tax credit is required to be reversed in such a situations. See, the Act says it is a transaction value, therefore I can sell it. I purchased for 1 lakh rupees, I can sell it for 50,000 rupees. But very, very important is, for the officer, he will find out what is the reason. If it is a distress sale, then he will agree. If it is not a distress sales, then in such a situations, he will examine whether it is correct or not. So nobody will sell it less than margin, correct, or less than the purchase price. So therefore, this will be the point for further investigations or further examinations. Therefore, if it is actually a distress sale, then in such a situations, my view is yes. My view is yes. So therefore, the transaction value is very, very important. But for this transaction value, there are certain conditions you have to fulfill. What is the condition? The first condition is that one, the price is a sole consideration. So that means price is a sole consideration. Other than that, I am not getting anything. No monetary consideration, nothing. The price is a sole consideration first. The second is it is actually paid or payable by the buyer. So he has to pay this price to me. The third is the buyer is not related to me. The buyer is not related to me. Then in such a situation, you can adopt the transaction value. So for transaction value, you have to fulfill these three conditions. Very, very important, these three conditions. So if you are selling to your related party and take a view it is a transaction value, they won't agree. They won't agree. So therefore, for transaction value, one, price must be the sole consideration. The second very, very important is he should not be a related person. Third is it should be actually paid or payable. So therefore, these three conditions you have to satisfy. If these three conditions, if you are satisfying, then you can adopt the transactions value. Suppose, sir, price is there, plus also some non-monetary consideration, then it is a problem. Then you have to go into rule 27, 28, 29, how to find out, which you will go through. So therefore, this is very, very important. The next important is the discount. What are all items that you have to exclude from the transaction value? I know this is a transaction value, no worry, no problem. But what are all the items or what are all the expenses which you can reduce? One is here discounts. Discount means there are two ways of approaching the discounts. This is given in section 15 subsection 3 of the GST Act. The first is, it is already entered in the invoice. It is formed part of the invoice. I purchased 1 lakh rupees goods. In the invoice itself is 10% discount, 10,000 rupees. Then in such situations, I am liable to pay the GST only on 90,000 rupees, not on 1 lakh rupees, because this discount is recorded in the invoice and reduced in the invoice. Therefore, I am liable to pay only on the balance amounts. There are other discounts. after issuing the invoices, and if I did certain turnover, then in such a situation they will give some discount based on my performance, correct? So those discounts what we have to do. It is not recorded in the invoice, correct? So the cement company says, the India Cement says that if you did 100 tons, I will give you the discount of 10%. This discount will come only after I achieve that 100 tons. It may come in the month of September or October or November or December. Then in such situations, whether I am eligible to claim that discount. As a supplier. So the Act says, yes, you are eligible to claim the credit. Claim the discount. The condition is one. The discount that you are giving to your customer should be linked to your invoice. So that means whatever the discount the India Cement giving to its distributor or customer, the India Cement should be able to link with its invoice. First condition. The second condition, there should be some prior agreement or arrangement between the India Cement and the customer or distributors. So there must be an agreement or arrangement, one. The second, you should be able to link between your discount and the invoice. The following are the 100 invoices. On those invoices, I am giving you the discount of this much. Therefore, this is a total amount of the discount. The third very, very important is the recipient, a person who purchased from the India Cement, he has to reverse the credit. So therefore, what India Cement will do? India Cement will raise invoice. Credit note. They will raise a credit note saying that these are all the invoices, I am giving you the discounts. So based on the credit note, the distributor or the other person, he has to reverse the credit. First what will happen? First 1000 tons. So he purchased it. He claimed the credit, correct? He claimed the credit. 1000 tons at the rate of 10,000 rupees, 1 crore at the rate of 18%. 18 lakhs he claimed the credit. Now the India Cement says, no, 1 crore is not my supply. 1 crore minus discount, 10%, 90 lakh is my supply. So they will reduce in the subsequent month or in the month in which the discount is given, they will reduce it and pay the tax. So this 10 lakh rupees on which the other person already claimed the credit, correct? Therefore he has to reverse the credit. So if these conditions are satisfied, then only the other person, then only the India Cement can claim the discount, otherwise they cannot claim it. So therefore the discount, there are two discounts. One is the invoice discount, there is no problem at all. So you can reduce in your invoice and you can claim it. But the other discounts, you must be very careful. You have to fulfill this condition. If the other person not reversed the credit, the department will say, I will not allow you the credit because this is one of the conditions specified in section 15 subsection 4 of the GST Act. So therefore you must be very, very careful. So this is a deduction from your transaction value. So what are all the items that you have to add it back to the transaction value? So you know now the transaction value. So the transaction value, the actual price paid or payable, the price is a sole consideration, the person should not be a related person. So now you know the transaction value. From the transaction value you can reduce the discount, you can reduce the other discount also, that is over. Now what are all the items that you have to add it back in the transactions value? The one is the duties and taxes, other than the GST. So that means other than the GST, whatever the duties and taxes levied by the supplier, you are liable to pay the GST. Suppose if you are importing the goods, in such a situation, the GST is paid on not only the import value plus customs duties also. Plus customs duty, because it is a duty on which you are liable to pay the GST. So other than the GST, whatever the duties are there, say for example sugar cess. Suppose if the sugar factory, when they are supplying the goods, levying the sugar cess, even in such a situation, you are liable to pay the GST not only on the supply of goods but also on the sugar cess. So these are all the two examples for duties and taxes. So duties and taxes other than the GST, IGST, cess, SGST, liable to pay the GST. So therefore you must be very careful for other taxes, property taxes, assuming that. Suppose if the owner says you have to pay the property tax also, the tenant is required to pay, the owner is required to pay the GST on the property tax also. Suppose if he is recovering from the tenant, then in such a situation he is liable to pay the GST on the property tax also. So therefore this is a first item. The second important item is the incidental expenses. What is the incidental expenses? Expenses which are all incurred prior to the supply. Say I am selling one important goods, but it has to be packed. This packing charges is a prior to the supply, therefore whatever the packing charges on which I am liable to pay the GST. So therefore, the supplier, if he incur any incidental expenses before, even if he is not getting from the recipient, he is liable to pay the GST. So therefore, prior expenses, or prior to the delivery, whatever the expenses which are all incidental on which the GST is liable to be paid. So that is very, very important. The next important is interest on late fee. I supplied the goods to Mr. X. He has to pay within 3 months. If he is not paying within 3 months, then the rate of interest would be 18%. In such a situation, if I am recovering the interest from my buyer, that has to be added back for the purpose of the transaction value. So therefore, one, duties and taxes, the second is the incidental expenses, the third is the interest on late fee. That is very, very important. Cess, which we have discussed. Subsidy is very, very important. Other than the government subsidy, any subsidy received by the supplier in relation to the price of supply of goods, he is liable to pay the GST. With the example, suppose State Bank of India, they are asking me to train 500 employee. They told very clearly that, I told very clearly the price would be 1000 rupees. State Bank of India told, no sir, no problem. You collect 500 rupees from the employee and we will pay you 500 rupees. So I will raise invoice only on 500 to the employee. But I am liable to pay the GST on 1000 rupees. The reason is, this 500 rupees is subsidized by the State Bank of India, which is not a government. So if it is a government, it is not required to be included. If it is not a government, then the price is required to be included. So therefore, that is a second important subsidy. Fees and charges.
Sir.
Yes sir.
In case of fertilizer industry, they are normally subsidized. If they are selling it to certain associations, it will be subsidized by government. If they are selling in open market, it won't be subsidized. That will fetch the price, whatever the open market price. In such a case, if you add the government price, open market price will be matching. So what will be the transaction value?
See, if it is subsidy from the government, you are not required to add that.
That's what. Same party selling it to outsider. So the transaction value differs.
Transaction value may differ. That is my first example. The transaction value, it is not required to be constant for all your buyers. It may differ. நாளைக்கே ஒரு ரொம்ப ஒன்றும் தெரியாத ஒரு கிளைண்ட் வந்தாருன்னா வில் சார்ஜ் மோர். நீங்கள் தான் சார் கடவுள்னு வந்தாருன்னு வச்சுக்கோங்க, சார்ஜ் மோர். Yes, sir.
In the case of interest, GST is payable on normal interest or penal interest?
GST? Another good question. Whether the interest include interest on interest.
Suppose normal credit period is suppose 30 days.
30 days.
30 days normally my supplier will charge me 10%.
Right.
And beyond 30 days they will charge me 18% as a penal interest.
Okay.
So I have to pay GST on both the interests? Or
Both interest, all interest. The question is when you will pay. So you raised in your invoices 18% interest. Suppose if I am the customer, I told very clearly, sir, I will pay only 90 days. So 30 days your period. 60 days you calculate the interest and raise in the invoice. Then in such a situation what will happen? When you will pay the tax on this interest? GST. When you will pay? Whether based on the invoice or based on the payment? Huh? Debit note. But interest is, if you go through section 12, it says only for this interest, once realized you are liable to pay the GST.
Oh, that's good.
Once realized you are liable to pay, please refer section 12. Section 12. I think 6 or 7, I am not able to remember. So there is a specific provision, it says that once it is realized, you are liable to pay the GST. Otherwise, you are not, just because it is there in the invoice, you are not liable to pay the GST. So the next important is the amount is liable to pay by the supplier. Very, very important. So the goods worth is 5 lakh rupees. Sir is approached me, sir, 5 lakh rupees, okay, he agreed. Now I told him, no problem, sir, I will sell you to 3 lakh rupees. I have to pay him 2 lakh rupees debt. You please make the payment 2 lakh rupees to him. Now the transaction value is only 3 lakhs as per invoice, correct? But he is paying on behalf of me to this person because there is some debt, there is some loan from him. I told him, you please pay to him and then I will sell you the goods at 3 lakh rupees. So in such a situation, the GST is on 5 lakh rupees, not on 3 lakh rupees. Even though the invoice says 3 lakh rupees, but the obligation of the supplier is met by the recipient. It is my responsibility to pay to him. I diverted it. I told him, no, I will reduce my price to that extent. So therefore the act says you are liable to pay on the entire amount. So that is very, very important. So that is why these are all the item is required to be added back. What are all the item is to be reduced discount, which is in the invoice and post discounts. So that's very, very important. So yes, sir.
Cash discount still is not allowed, right?
Yes, sir. Cash discounts, two views, sir. Cash discount, is it possible for you to link with your invoice?
Obviously, those invoices.
No, the cash discount is for you to do the supply or for a prompt payment.
Because the
Prompt.
late fee is also a financial related, it's not the cost.
Correct.
So when that is included, I was.
Yes. See, the cash discount, there are two views. The first view is that the cash discount is only for a prompt payment. So it is very difficult for you to link with invoice. Other than the invoice discount, the other discount you have to fulfill the conditions. Correct. There should be a prior agreement or arrangement. Okay, one. It should be linked with your invoice. Is it possible to link with invoice? If it is possible, yes. If it is not possible, then it will be a problem. So discount which we discussed, correct? Next important is rule 27. So there are rule 27 to 35 which we have to discuss. Value of supply, consideration not wholly in money. That means there is a cash consideration and there is a partially non-monetary consideration. Exchange of old mobile. There is a cash consideration and there is a non-monetary considerations. And in such a situation, how to value? How to value? This is discussed in Rule 27. Rule 27 says open market value. My mobile phone open market value is 1 lakh. Because of I am exchanging it with the old mobile, now he is giving to me 92,000 rupees. In such a situation, whether I am liable to pay GST on 92 or 1 lakh, the Act says 1 lakh. Because that is your open market value. Therefore, what is the open market value for this mobile phone? No doubt you are exchanging with your old mobile, no problem. You are paying only the less consideration, less money, no problem. But the Act says you are liable to pay the GST on the open market value. Therefore, what is the open market value? That is very, very important. That is the value that you have to discharge the liability. Suppose if I know the consideration both for monetary and non-monetary. So that means I know the cash consideration is only 20,000 rupees. Non-monetary consideration 4,000 rupees. Then in such a situation I can add both 20 plus 4, 24,000 rupees, or 92 plus 8, 1 lakh rupees. So that is a second situation. If there is a monetary and non-monetary consideration, take monetary plus fair market value of a non-monetary, add both and discharge the liability. So that is the second. If you are not able to find out the open market value, if you are not able to find out the second one also, then third is very, very important, is like, kind and quality. The same like and kind quality, what you are supplying to the others, what you are supplying to the other customers, then that should be your value. Therefore, like and quality will be easily which you can find out. Therefore, that should be the value for the purpose of discharging the GST liability. Suppose open market value is also not there, non-monetary, monetary consideration not able to find out, like, kind, quality. This is the old model, this is the final model. Therefore, there is no such a model in the available. Then in such a situation, like, kind and quality, very difficult to match. Then in such a situation, the Act says 110% of the cost of your production. So therefore, you have to work out what is the cost of your production, and then out of that you have to work out 110% of the cost of the productions. So my cost of production is 1 lakh rupees, then 110%, lakh and 10,000 rupees on which I have to. But what you have to do, you have to examine one by one. Don't come immediately, so this 110% is very, very easy. I will discharge this liability. Sometimes your open market value may be more than 110% of the cost of production. Therefore, the officer will ask you to pay the GST on the open market value. Correct? So therefore, you have to examine one by one, and you should have the reason why open market value is not available, why this is not available, why like and quality is not available, and then you have to come to rule number 34. Not immediately, this fourth is very good, so 110% cost of production, therefore which you will adopt. Now one by one you have to exhaust, like place of supply what you are doing, one by one you are exhausting it and then finding out where it will come. So like that you have to do it. The important method is residual method. This is a consistent method what the assessee is following, that also you can adopt. So this is a method for the valuations. Open market value is being defined, this is also being defined. The next important is between a distinct or related person. So first is monetary plus non-monetary, how to find out the valuations. So open market value plus monetary plus non-monetary plus like, kind and quality, and then 110% of the cost of the productions of the goods. Now this is between the two related persons. If it is between the two related persons, the first is a open market value. So I am selling a goods to my related concern for 10,000 rupees, whereas the same goods I am selling to some other person for 50,000 rupees. In such a situation, the open market value would be 50,000 rupees, not 10,000 rupees. So therefore, I know the open market value. The open market value is only 50,000 rupees. Because of he is my related person, I charge 10,000 rupees. So therefore, the Act says no problem, you take it open market value and discharge the liability. Value of like, kind and quality. If open market value is not available, this is a lost model or brand, in such a situation, then like kind and quality. Like and quality is also not available, then you have to go for 110% of the cost of your production. So the cost of your production, you have to go through the cost accounting rule 4, I think so. So you have to find out what is the cost of your production according to the cost accounting rule 4. That is also allowed under the excise law. The same they will also follow under the GST law. So therefore you have to work out the standard costing, what would be the cost, what is the direct cost, what is the factory overheads, direct material. Accordingly you have to prepare your cost of productions plus 110%. If it is not so, consistently the assessee what he is following.
So the open market value and the location of the supply. What place of market value? The location of supplier or place of supply, which market value? Because each place has a different market value.
The dealer where you are situated, if you are in Madras, Chennai, what would be the open market value? Definitely there will be a difference between Chennai and Bombay and Bangalore. So therefore, where the dealer is situated, there he has to find out what will be the open market. It's like transfer pricing. What you are selling to others, what the others selling to others. So like that you can compare and then find out what will be the open market value. This is very, very important. Where the goods are intended for further supply, as such by the recipient. Very, very important is as such by the recipient without making any alterations. As such by the recipient, the value shall be at the option of the supplier be an amount equal to 90% of the bill. So I am selling to my related person only. The related person as such he is selling to customer. The customer are all unrelated. Very, very important. The customer are related, then you cannot adopt this. So therefore if the customers are unrelated, then in such a situation 90% of the price, the related person he is selling to the customer, that will be the price. So that you can adopt. So therefore, very, very important is as such. The reason is, I am purchasing from my related person, but I am doing some manufacturing or do some processing. Then in such a situation, my view is this is not applicable because the section uses the word as such. You have to sell it as such. So therefore, that is very important. 90% of the price charged. The next very, very important is some issues also there, where the recipient is eligible for full credit. I am the related person getting the goods from my parent company or from other company, but I am eligible for 100% ITC. Then in such a situation, Act says no problem, whatever the value adopted in the invoice, you adopt it. The reason is, whatever the value you are going to raise, he is going to claim the credit, he is going to claim the full credit, therefore it is a revenue neutral. Therefore in such a situation, the Act says that no problem, that you can adopt that. Whatever the value recorded in the invoices is, that will be the value. Here only one issue. The Act uses the word where the recipient is eligible for full credit. Suppose if the recipient is doing some reversal, exempted supply, total input tax credit divided by total supply into exempted supply. Suppose if the recipient is engaged both exempted and taxable supply. Suppose if the recipient is engaged both business and non-business purpose, and if there is any reversal, then in such situations you cannot use this, because the Act says very clearly the recipient should be eligible for 100% credit. If there is a reversal, the recipient side, then this cannot be used. This is agent. So the agent, the same, what the agent is selling to the customers at the 90% of the value or the open market value, whichever is higher, that can be adopted, whichever at the option of the agent, that can be adopted. 90% of the price charge for supply of like kind quality by the recipient to his customer, not being related persons, where the goods are intended for further supply by the said recipients. This 110% is for all, but you have to exhaust one by one. So therefore, related person, monetary, non-monetary consideration, agent, which we have examined. Now there are certain industries, there are certain valuation methods because it is very difficult to find out the value in those industries. Therefore, the Act recognizes these are all the industries. There are certain method is being recognized. One is a purchase or sale in a foreign currencies. I am dealing in the purchase and sale of a foreign currency. What would be the rate for me, or what would be the value for me? Booking of a air ticket by an air travel agent. Air travel agent, whether he is liable to pay the GST on the entire air freight, or he is liable to pay only on the commissions, because he is getting only the commission, correct? He is getting only the commission, therefore whether he is liable to pay the GST. Life insurance business, getting the premium, whether the entire premium is liable for GST. Second-hand goods, dealer in purchasing and selling of second-hand goods. Goods repossessed from defaulter, samples. This we will discuss one by one. So lottery betting, this is very, very important. For foreign currency transaction, the authorized money changer, they are liable to pay the GST only on the difference between the RBI reference rate and the actual rate. That means Mr. X is approached the authorized agent to purchase some foreign currency. He is going to purchase for $1,000. The rate given by RBI is 61. So the bank, the authorized agent, what they will do? They will purchase at 61 or 60. So they will purchase less than whatever the rate given by the RBI. So therefore they will purchase at 60 rupees. So therefore the RBI reference rate is 61, but they are purchasing at 60 rupees. Therefore they are getting 1 rupee. Into 1 rupee into $1,000 is 1,000, on which they are liable to pay the GST. So therefore, for buying and selling of the currencies, the difference between the RBI rate and the rate charged by the concerned authorized dealer, the difference is liable to pay the GST.
That is actually on the profit on.
Yes, sir. Actually on the margin. The reason is you can't levy the GST on the entire currency. The reason is if you go through the goods says excludes money. Correct. So therefore you cannot levy GST on the entire currency money value. Therefore only the transaction, only the service, this difference is a service, therefore the difference only you are liable to pay the GST. If the RBI rate is available, no problem at all. What is my RBI rate, what I am charging, the difference into number of units into 18%, I can discharge the liability. Suppose if the RBI rate is not available, what will happen? Zimbabwe, what would be the rate? No RBI rate at all. Then in such situations, what do you have to do? Then in such situations, the authorized dealer, what would be the value for the dollar? Then he will work it out, and accordingly you have to discharge the liability. Suppose for 10,000 Zimbabwe dollars into 7 rupees, 70,000 rupees, on which he has to discharge the liability because no RBI rate is available. Then what would be the actual conversion on which you are liable to pay the GST? Suppose if the currency changed is totally different. Suppose I wanted to change from dollar to dollar to euro. Then in such situations, what we have to do, that is also being provided in the rule. Rule says that you have to work out into Indian rupee, $1,000 into Indian rupee, 1,000 euro into Indian rupee, and then whichever is lower, on which you are liable to pay at the rate of 1%. So therefore, foreign currency transactions, RBI rate is available, the difference. If the RBI rate is not available, then what would be the value on which you are paying? If the currencies are not Indian currency involved, then in such a situation, you have to convert into Indian rupee, and then what is the least on which you have to pay at the rate of 1%. So that is in respect of your currency transactions. Air ticket by air travel agent. Air travel agent, normally they will issue the ticket in the name of the customer, but what they are entitled only the commission, not the entire money, what they are receiving from the customer, they have to give it to the airline. So therefore, the Act says that, the Act recognizes that the entire air freight is not the income of the air travel agent. So therefore, the Act recognizes only the commission that they are earning. So therefore, Act says 5% of the basic rate in case of a domestic travel. So in case of a domestic travel, 5% of the basic rate, that is for the purpose of GST. Suppose if it is 1 lakh rupees, 5%, 5,000 rupees, on which you have to discharge the liability at the rate of 18%. If it is an international travel, then 10% of the basic rate. Suppose if the air travel agent is not adopting this, then what he has to do? He has to pay the GST on the commission he is receiving, not on the air freight, whatever the commission he is receiving from the airline, on which he has to discharge a liability at the rate of 18%. Life insurance, very important. Life insurance, if it is a risk covered insurance. Yes, sir.
Sir, this air travel,
yeah.
Does he have a choice?
Yes, sir, he has a choice. Yes, sir. These are all options, sir. Whatever Rule 32, it is an option to the supplier of goods or services. Insurance business. If it is a risk cover policy, term insurance policy, if it is a risk cover, on the entire amount, the GST is leviable. Suppose my premium is 1 lakh rupees, but the entire 1 lakh rupees is insured against risk. Then in such a situation, I am liable to pay the GST on the entire 1 lakh rupees. The insurance company, they have to collect it from the person and they have to pay it. So if it is a risk cover. If it is not a risk cover, only the single premium policy, then 10% of the single insurance premium policy is charged. So that means it is a single premium. That means you will pay only one premium, 10 lakh or 15 lakh rupees. Then in such situations, if the insurance company is not able to break what is related to the risk, what is related to the investment, then in such a situation, the 10% of the single premium charged will be the value for the purpose of discharging the GST liability. The third important is other cases. 25% of the premium in the first year. So if it is first year, 25% of the premium. If it is second year, 12.5% of the premium. Suppose in the 25% of the premium charged in the first year, if the insurance company is able to differentiate or break what is related to the risk coverage, what is related to the investment, then only the risk cover they are liable to pay the GST, not on the investment portions. So therefore the investment portions or saving portion, no GST liability, but risk coverage, there is a GST liability. Second-hand goods. I am dealer in second-hand goods. I am purchasing and selling it. I am purchasing, doing some minor processing and selling it. Then in such situations, at what value I am liable to pay the GST? Because who is selling to the second-hand dealer? The individuals, correct? The individual only selling to the second-hand dealer. So whether the individual is liable to pay the GST or it is not in the course of a business, therefore he is not liable to pay the GST. One. The second, when he purchased, whether he is eligible to claim the credit? No, he is not eligible to claim the credit because he is not in the course or furtherance of a business. One. Second is motor vehicles is section 17 subsection 5. No input tax credit is allowed. Therefore, in such situations, what do we have to do for the second-hand dealer? Those who are purchasing and selling the second-hand goods, only this motor vehicle, those dealers the Act recognize, the person who is purchasing is not eligible, the person who is selling it also is not liable to discharge the GST liability. A person who is purchasing, the second-hand dealer who is purchasing from the individual, he is also not eligible to claim the credit. Therefore, in such a situation, the Act recognizes this is a different type of a business. So, under the earlier law, whether it is leviable on VAT or whether it is leviable on services, a big question. So, under the GST law, at least there is a mechanism for this type of dealers. The Act says difference between the purchase price and the selling price. So, that means I am purchasing at 1 lakh rupees, I am doing some small processing, small repair, and I spend 25,000 rupees. So, the total is lakh and 25,000 rupees, but I am selling it at lakh and 50,000 rupees. Then in such a situation, I am liable to pay the GST only on 25,000 rupees. Suppose I am purchasing at lakh and 25,000 rupees, but I am selling it 1 lakh rupees. In such a situation, the Act says, please ignore. If it is negative, you please ignore. Therefore, you are liable to pay only on the differences. So, goods repossessed from default borrower. I purchased goods and I borrowed from the institutions. I am not able to pay the EMI. Now they are repossessing the entire vehicle and they are selling it. So in such a situation, the Act says very clearly, whatever the depreciation on the date of supply, you please allow it and then find out what would be the value, what is the sale value, the difference will be considered as a margin on which you are liable to pay the GST. So purchase price in the hands of such a borrower reduced by 5%. So therefore each and every quarter they will reduce 5% and accordingly they will find out what is the value, what is the price sold, the difference will be considered as considered for the purpose of the GST. Voucher is very, very important. So if the voucher is at the time of issuing the voucher itself, I know this voucher is only for the purpose of buying the chair or gold, then in such a situation, I am liable to discharge the GST on the vouchers. Suppose if the voucher is given general, I don't know, he may purchase for gold or he may purchase for furniture or he may purchase for telephone or phones, etc. Then in such a situation, only at the time of the redemptions, liable to pay the GST. So that is rule number 32. Pure agent is very, very important. The pure agent, I am acting as a pure agent. My recipient, he knows I am acting on behalf of him. And I am also doing some services to the recipient. While doing some services, I am also acting as a pure agent. And I am not intending to hold the goods or services. I am holding it everything on behalf of the recipient. And in such situations, you can claim pure agent. Then, if it is a pure agent, you are not liable to pay the GST. Say for example, in case of C&F, clearing and forwarding agency, what they will do, they will pay the customs duty on behalf of the customers. But this customs duty is paid in the name of the customer, not in the name of C&F. So therefore, if the customs duty is paid in the name of the customer also know it, and the customer is also says that yes, he is acting on behalf of him, then in such a situations, you are not required to pay the GST on the customs duty. So therefore, for satisfying the pure agent, you must be very, very careful. There should not be any margin at all. Same example, customs duty is only 1 lakh rupees. The department also issued challan for 1 lakh rupees. But if I charge my customer lakh and 5,000 rupees, then in such a situation, even on the customs duty, you are liable to pay the GST because there is a margin. So therefore, there should not be any margin one, and you should not hold goods or services in your own account. You should hold on behalf of the recipient, and the recipient also knows that you are acting on behalf of him. There is some contract between you. It is not necessary it should be in writing. It may be even a oral contract, but it is very difficult to fulfill the officer's oral contract. But based upon the invoices and other circumstantial evidences, if you are able to satisfy, no problem at all. So therefore, the pure agent is very, very important. If you are acting as a pure agent, then in such a situation, you are not liable to pay the GST. For chartered accountant, the chartered accountant, suppose I am incorporating one company, the ROC fees is 20,000 rupees. The ROC fees will be issued in the name of the company, correct? In the name of the company that we are going to incorporate, or in the name of the customer, not in the name of a chartered accountant. Then in such a situation you can take a stand. This is only a pure agent. I am incurring on behalf of my client. Therefore, I am not liable to pay the GST on the ROC fees.
Basically, all the reimbursement of expenses.
Reimbursement of expenses, but you should be verified. There should not be any margin, and you have to fulfill all the conditions specified there. What is the time, sir?
5 minutes to 4.
4. So I think they asked me to close at 3:45. 5 minutes. So any questions, sir? So I think I have covered almost all important rules. Inclusive method is very important. Value of supply inclusive of. You can also supply the goods or services inclusive of that. There is no problem at all. But the other person, he cannot claim the credit. Correct. So therefore nobody will use it except in case of a retail trade. So other than that, this will not be useful. Rule number 35. So any questions on valuation or GST, you can ask me. So I have only 5 minutes. Yes, sir.
In the case of a builder,
I have 10 or 15 case studies which I am not able to cover. Yes. Builder.
works contractor, materials are purchased as a pure agent. Materials are purchased on behalf of the client.
Sir, material purchased works contract service. First you should purchase the material in the name of the customer. He has to issue you have to make the payment and then you have to receive the payment. It will be very difficult. How it is possible in works contract?
Policy bidding.
All the material you have to purchase. The client name, not in your name. You are not entitled to claim the credit. The person also is not eligible to claim the credit because he is not in the course of furtherance of a business. Very difficult, sir. C&F agent possible, chartered accountant possible, because we always will pay some fees or tax on behalf of the customer. Then in such a situation, if I payment of 1 lakh rupees income tax on behalf of my customer, then in such a situation I can take a stand. It is only a tax payment. Any doubts, sir? GST? Okay, sir. Thank you for your passion.
Thank you very much, sir. On behalf of CRC, I'd like to thank you very much with regard to the enlightening fees on valuation principles with regard to GST and all. I take this opportunity to present this small limit on behalf of CRC.
Thank you.
So let's start.
The time is tea break.
10 minutes tea break.
Good evening, friends. Good evening, friends. After having a wonderful session on valuation, I think we are going to have a next session on export, which is also a very interesting subject. So So for taking us through this export under GST, I welcome Mr. V. Prasanna Krishnan, who was a founder partner of a very practicing chartered accountant in Chennai. I just want to share little knowledge about the V. Prasanna Kumar. So he has very professional specialization in the field of taxation, especially in the goods and service tax and customs. So he was a successful indirect tax law counsel, and he has appeared before various customs and service tax and GST tribunals and other GST authorities also. So he has also done various representations to government on various tax matters and any clarifications or suggestions. So some of the things are like he has represented All India Omnibus Owners Associations for representing their cases to the GST department, and he has also given a GST compounded levy, suggestion on compounded levy, which was very much appreciated and taken by our Honorable Prime Minister while drafting those GST laws or something. So he has done a very good contribution in various tax laws or circulars or wherever it's required for. And also he has done a very knowledge sharing in various customs and conducted a training to various corporates, especially in RBIs and C&AG and all those things, where he has taken delivers lectures on various taxation issues. So in media also he has actively participated and done interviews in various tax forums and other things. So I think he is going to give a wonderful session on export, which is under GST. So I once again welcome you, sir, for taking us through the next session.
Learned brothers and sisters, good evening. Good evening.
Good evening.
Evening time, last session. And of course, after hearing me, if you are coming to this mood, I can understand. That's fine. Okay. That's totally different. Before hearing itself, you are coming to this mood, I was slightly little doubting and puzzled actually. You know, a nice subject we do have for discussing in the next 63 minutes actually. We have about some 44 slides. And we have all important matters to discuss. It's a little stuffed session, in fact. Maybe you will feel slightly uncomfortable. If you miss for some 3 or 5 minutes, you will be having some confusion in your continuity. That's the problem, because it's a single topic. One-to-one, it's related. Okay, the one what I'm discussing in the first 5 or 10 minutes will be very, very serious, which will be making a basic what I can say, comfort structure on which you can build more and more as to your understanding. And feel comfortable to ask any doubts which you feel, honestly, that need to be discussed at that point itself, instead of waiting till the last hour actually, because it will be useful for others also. You will feel that others are very comfortable and you are not able to understand that one, and you need not wait till the end of the session actually. You can feel comfortable. Just to start, it was a French village, outskirts of Paris. An aged couple were living, and madam was not having good hearing capacity. In the past 2-3 decades, it appears. This man, a very lonely life. This man who used to raise his voice, shout and tell what he wants, and she will be understanding. Man is also becoming old. Over a time, he is not able to shout also. Decided one fine morning that he has to take ma'am to one good doctor, ENT doctor, do necessary surgery or treatment, see that her hearing capacity is brought back. Went, got it done, doctor assured, they came back happily, and the next morning our gentleman, old gentleman, is sitting in his hall, and he is of the opinion that next morning the sutures and all removed and she will be able to hear, is his belief. Now he is asking, honey, can I get a cup of coffee? No reply. Honey, can I get a cup of coffee? No reply. Honey, can I get a cup of coffee? Still no reply. Man got so much irritated. What is this? This doctor is a doctor or not? Whether he did a proper treatment or not. He got a doubt and just fiercely was about to go inside the kitchen. By the time ma'am is coming out. Very unhappy ma'am she is. She is coming out and just coming near to the face of this old man. With very much angry, she is very clearly telling to him, you stupid old man, For the first time when you called me, I told very clearly that yes, I do have some urgent work in the kitchen, I will get the cup of coffee in 5 minutes. Second time also you shouted, I also shouted. Third time also you loudly shouted, third time also I told. You did not hear, what's your problem? She asked. That day only this man realized that this guy is also having some problem in his ear. So hearing is a relative term. Here also knowledge level is a relative term. Please don't think that the person who is nearby you is not asking any doubt at all, so he is very intelligent and why should we ask? You please ask for your doubt. In fact, the so-called neighbor will be waiting for you to ask actually. So please ask your doubt, you please ask, don't wait for other person to ask. Coming back to this one, some quick numbers we'll see, maybe less than 10 seconds we'll be spending on this. Exports have grown now, is a fact actually. You can just see, in fact the base is very closed actually. It is beyond the 20, it is going there actually. Beyond 20 lakh million, it is going there actually, US dollars. So this bar is very lengthy. I have cut, for the purpose of presentation, I have cut, the bar is too lengthy actually. Comparative, if you see, in the month of March and April, it is in the upward trend comparing to the previous year. It's having an upward increase only. So it's always said that because of GST, the export has come down, exporters are facing big problem. Actually, it has grown. As usual, it is keeping on going. With all the problems.
In spite of devaluation?
Exactly. So, in spite of all the nuisance, all the type of irritations to the exporters, still they are doing their job very sincerely. And they are keeping on growing and making the country also to grow. Fine, nice. Coming to this one, we do have about some 5 or 6 important sections only. The entire session, I am not going to use so many sections and references for you. You can happily note. Maybe section 11, section 16, section 147, section 2, subsection 5, section 2, subsection 6, section 2, subsection 10, section 2, subsection 11. And maybe rule 96A for a while, I will just tell for here and there some reference. That's all. Totally, these are all the sections we are going to refer. As the number of sections going to be discussed by us are very less, we will spend exactly 1.5 minutes, 90 seconds. You can just switch on your stop clock also. 90 seconds only we are going to discuss the basics. So if you are, as you are going to be there all the time, if you are there in specific for 90 seconds with me, the entire discussion will be more comfortable for you. Now, section 11 is saying about the place of supply. But first of all, sir, you told that you are going to discuss about export of goods, export of services, whatever it is. Why are you talking about place of supply, which has been already dealt by some other learned faculty? Why you have to repeat? You know very well, export is decided purely on the basis of place of supply. Whether it is export or not, we have to decide only on that basis. So, if the goods are exported from India to a place outside India, location outside India, then it will become, as far as goods are concerned, when it is terminating its transportation outside India, then naturally that is what ending up in an export. So physically the goods should reach a place outside India is the basic point to note from section 11. This is one. Then section 2 subsection 5. Export of goods means that is same thing, grammatical variation, cognate expressions and all. Meaning taking goods out of India to a place outside India. This is the meaning. Now you see the screen and see the encircled text actually. Is there any importance for that? This is definition that I already read. I need not translate from English to English. Your English knowledge is quite good. Fine. What I am asking is, in the encircled spot, the text what you are seeing, is it in any way attracting your thinking process? Do you get any kind of input from this? Do you feel that something is special in these words?
High sea sales, it's not export.
High sea sales should not be export. High sea sales should not be export as per this meaning. How you say this? How you feel that high sea sale is not fitting itself to this definition actually? How do you feel?
Taking outside India.
You are not taking out of India, so high sea sales will not be an export, number one. Okay, then anything else?
What about SEZ?
SEZ. You would like to say that within the meaning of this, selling to SEZ should not be export. That's an observation. I will just tell you, but serious observation. Sir, you asked me from the slide whether I am feeling, that's what yes, perfectly right. Okay, then.
Physical movement of goods outside India.
physical movement of goods should happen outside India.
India to outside.
From India to outside. That's very important. From India to a place outside. Okay, right. Then. Any other observations? Right. You just reserve your thinking process result actually. We'll just come back to this after some 40 minutes. Now, this you can have a look. Export of services. Section 2, subsection 6. See, export of services means, fortunately the definition is starting as means. It's not using includes. That is a nuisance actually. Means, that's all. Exhaustively, this is the meaning. Supplier of the service should be in India. Naturally, you are exporting a service, you say. So you should be in India, right? Your recipient should be outside India. Yes, if your recipient is in India, you are supplying to him, and where is the question of export? Fine, okay. He should be outside India. Recipient outside India, supplier in India. Good. Then the third one is, place of supply should be outside India. Very nice. Very right actually. It should be outside India only. Then only you can say that within the meaning of the law, if the place of supply is outside India, the service is going outside India. If the place of supply is in India, whether foreigner is the recipient or Indian is a recipient, place of supply is in India, where is the question of saying that it is an export? Fine. So, in case of export of service, place of supply of service should be outside India. Right. Then, the payment for such service has been received by the supplier in convertible foreign exchange. That's a very important condition, which is to be there in case of export. Fine. Then the fifth item coming there, you should not merely be distinct person within the meaning of explanation 1 to section 8 of IGST Act. What section 8 explanation 1 is saying about what it is reading is the question. I am having one, let me say, VPK Private Limited in India. I do have a branch at, let me say, Toronto, Canada for me. That branch is doing some work for me, commercial work for me, that's all. Now, if I am exporting some goods, VPK Private Limited, India to Toronto branch, Toronto VPK Incline, one company, just for example. If I am exporting the goods, all formalities of exports will be there. Just because I am selling to branch, there is no exoneration from the export formalities. I do have serious export related matters. Customs clearance is done, shipping bill is done, bill of lading is done. Export General Manifesto reads my name, goods moving out, all of that. Incidentally, I may receive foreign exchange also. My own branch, for some kind of gold congruence or something like that, get me back the money. I want to see the profitability perfectly accounted. I raise an invoice on you, you give me the money. So branch is giving me money also. In this case, law says that after all it is your own branch, we will not treat that as an export. Because you are merely a distinct person, not a different legal person. Legal person means you should be one kind of company, maybe one private limited company. No, that's all one party. One private limited versus another private limited is totally different. Let me say that A private limited company is in India. B private limited company is in USA, Michigan, Minnesota, somewhere it is there. Now if there is an export of service from here to there, what will be the thing? From here to there. That is a holding company, this is a subsidiary company, that way we can do. What will be saying? Two legal persons. Maybe 100% holding company, that is totally different. Two legal persons, he is there and I am here. Holding company is supplying to subsidiary company or subsidiary company is supplying to holding company. Still there is a perfect export. What law tries to say is, within a company, if there is a movement of a service from one person to another person, that doesn't cause any kind of...
Even goods also.
Sorry, sir?
Even if it is goods.
Goods are having separate stories, sir. Goods is having separate story. That's different one actually. Service is the nuisance actually. No, not nuisance, some preconditions actually. So, you can try to see that in case of exports, all formalities you are following for both same way. Whether it is a branch or whether it is a... as I was telling you, just because branch customs officer is not going to do anything specially, you are following the formalities. In case of export of services, no customs formalities and all, but you do have the same formality, like you may raise invoice, they may give money also, all that. But between an head office and branch office, when there is a relationship for the purpose of service, when all the four conditions, supplier here, yes, recipient there, yes, place of supply there, yes, foreign exchange comes in convertible format, yes, still condition number 5 is affected between head office and branch. It's not a legally different person, it's just merely a distinct person for the purpose of law. Otherwise, it is not totally a different person. Because this law is recognizing my Chennai head office as a different one from my Bangalore branch. Bangalore branch is a distinct person, Chennai head office is a distinct person. Vijayawada head office is a different person, distinct person, and maybe a Delhi branch office is a distinct person. So within India itself, state-wise, if you are having different branches, offices or agencies as the case may be, they are identified to be a distinct person separately for the purpose of law. But in case of Indian branch and foreign head office, or foreign branch and Indian head office if you are having, that will not constitute an export of service at all, because the 5th condition is hit. Cumulatively, if you are able to comply with all the 5 conditions, you can always say that you are complied with the law perfectly.
So what is the logic of this, sir?
Yeah, see, the question is, sir, you only told in your example, I did not imagine. You told that Toronto branch is sending the foreign exchange also to you. You are sincerely sending your service invoice on them. And trails are there, very clear. You have done some service also. And value is also correct. Like a third party, you are charging it. Your money is coming there. But between you and them, if you are collecting the money, after all foreign exchange coming to India, you should be happy. Even after receiving foreign exchange to Indian branch or Indian head office, if you are not treating that as a branch, if the same is done for a third party, you are honestly saying, oh yeah, that is a great export, you are an exporter. You are saying, why that's such a kind of distinction? What are you achieving by distinguishing between that and this way is the question. See, in case of same legal person, it's merely the transfer of money between 2 hands. Naturally, for all legal purpose, the income or the money's hold is totally different one. If a foreign person is, foreign unrelated person is sending you the money, you earned your foreign exchange actually. You earned your foreign exchange in the country's account. In case of held one, it's only a transfer between 2 persons. Because you know very well, for all purpose, even for income tax purpose, for all purpose, global income of a resident is getting taxed here. You are holder of the money or one thing. So physically money coming inside is not making a big difference at all between a branch and a head office. If you are really doing an export, you should be capable of bringing in the money from an unrelated third person. Because a lot of arrangements can be there between a related party just like that. So you can just get the money, you can raise an invoice, raise this invoice is there, money is coming there, all you can show. But really foreign exchange is coming there to you where an unrelated open market condition is there, you bring in the money. That is what is really treated to be the money which is coming to India as foreign exchange reserve for a while, comfortably. Otherwise, it's only branch transfers between you. You can give any name for that one, you can transfer the money upward or backward actually, as the case may be. Coming to this one, what is the meaning of zero rate? First of all, whether do you have tax on the export or not? Basic. Then we'll go to the discussion. Do we have GST or tax on export or not? Export of goods or export of service, whatever it is. Do we have tax on that? Whether export is taxable?
Yes, sir. No.
Yes? No?
Yes, yes.
Yes and no?
Yes.
Yes only?
Yes.
Strong yes only. Okay. Any other strong no equally? Neither is no nor no. Walk out. Exempted. Okay. One equal strength reply is there. Strength will reply with equal strength. One exempted. Whether it is taxable, I am asking. One of my brothers says that yes sir, it is certainly taxable. Another brother says no sir, it is exempted sir. That is why you are not paying tax. Which one is right?
Sir, because they have to pay GST on this one.
They have to pay GST. Okay. But if they are not paying GST?
Yeah, if you are not paying it, you have to make it through less of 100.
Ah, that's what. That a condition in which they are not paying.
That means that you have been.
That's what my brother said. You are exempted, you say.
No, your taxability is kept in abeyance. That's it.
That's it. Okay.
Then you can apply for refund.
Okay. No, refund I am applying in respect of. That is so many things are. No, my brother says, sir, you export or not is not a big deal at all. Even as an exporter, if you are exporting, you are liable. That is why you are paying tax. My brother says, no, if I am getting one letter of undertaking, I am exempted. So my transaction is exempted. Really, the export is a taxable transaction or not can be explained with simple example. This is how I used to teach the officials also, the tax officers. This is my hand with 5 fingers, right? We'll take always simple examples. Let us not complicate this matter. Very simple. Let us understand simply. All the problems are simple only. We only complicate unnecessarily. This is a hand with 5 fingers. Assume that if I am folding one finger, that finger is not there. Assume. Okay. Now 4 fingers. Now
2.
So hand with the 2 fingers. Now
1.
Hand with 1 finger. Now
No fingers.
5 fingers.
hand is there. No.
Hand is there.
Let's see. Start with hand with 5 finger, hand with 4 finger, hand with 2 finger, hand with 1 finger.
Hand with no finger.
That is the right answer. Hand is there. Fingers are not there. So that's how 28% is a rate, 18% is a rate, 12% is a rate, 5% is a rate, 0 is also a rate. 0 is a rate. Being Indian, we should be very proud. We are the reason for this. 0. Indians are not 0. He invented 0, I tell. Okay. So 0 is a rate. At any time 0 may move upward to 5, 10, whatever it is. Today it is 0. But it is not nil. Nil means absence of rate. 0 means 0 is the number. 0 is a number. Instead of 5 it is 0. Instead of 18 it is 0. So 0 rated taxable transaction is the export transaction. I agree with my brother. So all the exports are taxable transaction only. Sir, spending 2.5 minutes by showing your hands, legs, all these dances and all, with pain you just proved that export is a taxable transaction. By proving that export is a taxable transaction but at 0 rate, what you have achieved? You are going to ask me only 0 rupee to pay. That's all my brother told, that exempted. It's a big difference. Is there any big difference or not? Is there any big difference? 0 rated. 0 rated is a taxable transaction. Okay. Theoretically I prove, okay, right, okay, it is a taxable transaction. Practically what is the use of this? Any use is there? Then why the lawmaker is with so much of pain is making this arrangement? Why your last session of the day he is making you to sit and a boring speaker is standing before you for 3 minutes to explain this? Is there any background for this and is there any valid reason for this?
They may increase the rate also.
That is one series, sir. You must be appointed in North Block, sir. Very nice man, sir. Great, sir. They may raise, my brother says, sir, they may raise the rate, sir. Great. No, I like it. That's a possibility. In this country, anything can happen. By the first 6 days of the July 2017, you did not have any procedure at all how to export from 1st July to 6th July. I agree with you, sir. Possible. Okay. Then, any other reason? See.
There's a rate if you get input credit.
As my brother says, you should not take credit of exempted output related aspects. Output is exempted. Related input you will not be eligible to take credit.
Input tax credit, ITC.
Exactly. Input tax credit exclusively relating to exempted output ab initio prevented. If the output is exempted, if the export is exempted, export related input material, input services, capital, whatever it is, nothing will be there. You will not get it. If the lawmaker says that I don't want you to pay tax, though you don't pay tax, it is a taxable supply. If he says like this, 0 rated tax, but 0 is a tax. If he says taxable output is the export of service, export of goods. Relating to these exported goods or exported services, you can very comfortably, right royally take the credit of that and enjoy it. Sir, being an exporter, why I need the ITC, sir? You only told that 0 rated. For 0 rated, I don't require any tax at all to pay. If no need to pay the tax at all, with the ITC, what I can do? I should do only puja with that ITC. What I can do it? If you are able to use for your domestic supply, if any, use. If you don't have any domestic supply at all to use, go and get back the refund. Exporters are eligible to take refund. Section 54. Read together with section 16. Clear. Now.
So they can take refund.
Yes. Where ITC accumulated by the exporter is of no use to him. What he can do? Poor guy is keeping on purchasing from the local market. Everybody who is supplying to him as a vendor is charging the tax on him. It is keeping on accumulating. Because of section 16, I am saying that it is 0 rated. For 0 rated, you will not pay tax also. Without paying tax, without using ITC, if it is keeping on accumulating, what to do? Once in a month, file RFD 018. That's all. Refund will be coming there. Produce a paper that you are really an exporter, prove it. Get back the ITC. That's all. Get back the money. Now,
that is, in this case, the exporter is not paying.
No, that is the assumption. The exporter is not paying the tax.
GST.
Yes.
But he is able to get refund.
Exactly. Now, Section 16 of IGST Act is reading what is the meaning of zero rated supply, as you are able to see in the screen. The regular export of goods or services are both normal. My brother told, sir, as per your definition, what you are showing, export of goods or export of services is not covering the supply to SEZ, is my understanding. That's what plain understanding, correct. But Section 16 is reading this way. Please read the second limb of this. Supply of goods, services are both to SEZ developer or SEZ unit shall also be zero rated supply. Though you are supplying to Indian SEZ inside Indian territory only, for limited purpose of IGST law, it will be treated as an intrastate transaction, but zero rated, subject to condition. But now, you are able to see the definition which might have been by this time settled in your mind, fine. But is there any importance for this word? 2. Supply of goods or services or both to SEZ developer or unit is a zero rated supply. Is there any serious importance for that? 2. Anything comes to your mind? Sir?
That is probably promoting exports. That is why this is given.
No, what I am asking is, the word to is having any importance as such?
It's only one way, procured by the SEZ.
That is true, naturally, that is true. If I am a domestic tariff area party in Chennai, to Chennai SEZ I am supplying, to claim myself to be an exporter, I should supply to SEZ developer, I say. Shall I tell this way? I will just ease the process a little more. Your thinking process will be comfortable for that. If I am using the word supply of goods or services or both in a SEZ developer's premises or SEZ unit, if I say, what is the meaning of that? 2, if I use, what is the meaning of that?
That 2 means you are supplying from the DTA to SEZ.
Okay.
N means you are also, supply is also located in SEZ.
To some extent, but some more extension is involved there. Okay, to some extent. Okay, I will refine this answer. Any other thing coming to your mind? Okay, a little more clue. We will just give you another clue also. Okay. I am a subcontractor to a contractor of SEZ. I am a subcontractor to a contractor of SEZ. Any hint now you are getting? Very serious. Sorry, sir?
You won't get nil rate.
Myself, I am the subcontractor. My brother says, sir, if you are doing subcontractor to contractor for SEZ, you are ruining them. You don't claim zero rate.
I am not saying subcontractor will get the benefit.
Subcontractor will get.
It is the zero rated benefit. But supply made to subcontractor of a SEZ developer, he won't get.
Oh, that way you are saying. Okay. But how you are convinced that subcontractor will be getting the benefit, sir?
Because he is doing services to
but services to?
Developer.
Is he doing services to developer or services to contractor of developer, sir? Which is correct? Agree? That is the catch point. The problem here is the law has solved so many big problems with single word, 2-lettered word. A contractor is serving or supplying to SEZ, that guy is covered here. A subcontractor is supplying or doing service, supplying of goods or supplying of service to contractor of SEZ, whatever it is. So, law is giving exoneration under the zero rated supply only for a contractor directly. What about the subcontractor? He is doing only to other person. He is not under this loop at all. He is not covered duly here. So, that's such a big arena with simple word closed. That's all. There. What was the scenario all these days under export? Exporter may be a zero rated person subject to conditions I told. Generally, you will be able to get zero rated. I said. Generally, I said. The word generally is very dangerous. Hope you might already heard, maybe from me also as a response. One of my clients came to me. He is a typical client. The client is a person who will not listen to you when you are giving advice well in time. He will come after doing everything in a big mess and he will come for advice. This is a general trend. Whatever circular you give, update you give, warning you give, always there. End of the day, he will mess up everything, spoil the case totally and then come to you. This is normal actually. He is also a typical client. Came to me and maybe a finalization time he met me and said, "Sir, I want to have a 5 minutes appointment with you. You never used to talk at all about the accounts and finalization." Yeah, great, okay, please. Sir, in my office, sir, I do have a production manager to take care of production related matter. In every office, production manager only is taking care of production matters. No, let me complete. Oh, complete. No. Purchase manager for purchase, sales manager for sales, security manager for security, safety manager for safety, IT manager for IT. What do you want, sir? In IT, security, safety, sales, purchase, all are taken care by respective person. Why do I have a person called as general manager? What that guy is doing? That I don't know, sir. You are the employee. No, my theory is, he says, my theory is, general manager is a person who generally does something, specifically nothing. With all due respect to very good general manager. Okay. So that is his theory. I disagree with him. A lot of good general managers I have met and meeting regularly. Now, what I am trying to say is, generally is a word generally used. Specifically, some of the damage is going to come. Here I am telling you, generally, exporters need not pay tax. Generally. Then specifically what I have to tell, they will be paying only with subject to certain conditions. Law will not give any kind of concession so simply. Subject to SLC, that will be given. Safeguard, limitations and conditions. In indirect taxes, it is mandatory. Some safeguard will be there. Revenue interest will be safeguarded. Limitations will be there. Subject to this, you are true. Conditions will be there. These are all to be complied with, then only. Or these are all should not be there in your case. They should either be present or they should be either absent. Something will be there. Then only you will be allowed to do.
After all, enrichment.
Right, at least the condition will be there. Huh? Right. So, exports, how it had been. Sir, please come again. Exports, how it had been. Why, sir, it had been? Export, how it is. Explain to us. Why you should talk something about the history? The problem here is, if you don't know history, there comes the mystery. Much often, after 3 years, 4.5 years, 3.5 years only, the learned officer used to very comfortably enter the premises in the name of audit, verification, investigation, something. Very coolly, law is giving them 5 years time to open the case. They will start from 1/7/2017 in the year 2021, even 2022 also. Your client will be coming. Client, you know what kind of person is. Client will be coming to you off late only and he will just say that, sir, these are all the problems are there. So if you don't know that as an exporter, what was the phase he has come across, what kind of complaints had been there to him to be complied with at that time, between July 2017 to December or January 2018, you will not be able to give a proper advice at that time. What has happened there, you should know. Secondly, if you are becoming a GST auditor, annual audit is mandatory for more than 2 crore rupees of turnover. You are becoming that, you should know that what has happened from July 2017. Whether somebody has complied with the law or not, if you don't know, how you will be a GST auditor? The problem here is the status what you have got today with all efforts of institute is having a very lengthy history. Don't have time to discuss. But few lines only I need to put here. You had a law called as FERA 1973. Foreign Exchange Regulation Act, 1973. You do have companies, secretaries, full-fledged official functions only from 1980. Though it was a Section 8 company at the time, it came to the existence from 1980 only. So you did not have effectively a character called as company secretary seriously at the time. In 1973, your flag was flying high. Chartered Accountant certification in foreign exchange regulation related matter, restriction was very big one, big job actually. You did a good job that time. Then comes after 20 years in the year 2000, the act called as FEMA 2000. How many of you are doing any work relating to FEMA here? A small gathering of some 20, 25, 30 members. None of you, if you are taken as a representative sample, none of you are doing anything relating to FEMA because you have totally forgotten that such an area is there for chartered accountant to do some practice at all. Totally gone. neither a Form 83, nor a Reserve Bank valuation related matter, nor a certification relating to foreign person going back, nothing is done. But you take another simple example. Uttar Pradesh tax tribunal told that chartered accountant should not enter the tribunal at all for representation because he is not a graduate. A graduate can come, a BA can come, but not a CA. What a kind of extraordinary interpretation. Then our institute took pain and said, please understand what is the meaning of this course. Then they are, oh, sorry sir, that's right, you can come. Later.
Maybe they would afraid of that.
Maybe the case. That should be the right interpretation. And you do have another situation wherein one controller is there, regulator is there. He is making a comment openly that what kind of big contribution you are making by your bank branch audit. Useless. What you are going to put nil, not known, not applicable to the circle office, to be referred to the circle office only. From head office, circle office is not available. Branch level is not happening. This query is not applicable to branch. So what you are going to write? With this report, what you are going to do? No need for any branch audit at all. Oh, only when you are doing the branch audit, your bank will be, no, what is the use of it? It is always done. What contribution you have made? Fire extinguishers are there. Every 2 years you are refilling religiously. What is the use of it? Throw it out. When the fire comes, then you will understand what is the meaning of that. So, statutory audit of chartered accountant is quite serious. What we are contributing is priceless. Because of this only things are going very reasonable. Maybe I agree. Some of our professional brothers and sisters might have gone wrong, little lethargically, without understanding the serious role what they are playing in the process. They might have done something wrong, very exceptionally. Not the rule actually. So this is one part. So then later we are explaining that what all we have done in the past 60 years. What are all the things we have done contributed to the banking industry. Then they slowly understand. Last apply. In the entire process, you would have seen that. One is saying that what is the use of chartered accountant, one is saying that what is the contribution by chartered accountant, one tribunal is saying that why a chartered accountant should enter the tribunal at all. One is saying that one law is now over, another law has come. We will take up the latest professionals who are having the identity from 1980, not you from 1947. So things are moving this way. But comes a law with a draft 1.5 years back. One specific section reads, chartered accountant means accountant will be a person eligible to do audit under this law. The lawmaker doesn't know what is the law going to be written finally by him at all. It's a draft. He doesn't know what is going to be the final version, what kind of law it is going to be. Without knowing what is the final law at all, when he is writing the draft itself, he writes one line that chartered accountant will do the audit. Please remember, 18,000 plus programs are conducted throughout India to train the state and central offices by the government and government-aided institutions. Even after training that much, thousands of IRS officers they are having in their kitty. Even after having that much experienced IRS officers in their hand and a well-trained team in the mostly similar kind of law, in 1 decade experience, 2 decade experienced officers, the lawmaker still feels from revenue side, it shall only be an accountant who will be able to do a sincere service to me. I don't want to believe my officers. He will read my law, she will read my law very sincerely. They will be able to contribute seriously with a perfect report, identifying the flaw or mistakes done by the taxpayer. Even if the taxpayer is, as per the custom, going to pay the fees and get the report, they will be still honest in telling that what has gone wrong in a particular year with the taxpayer, and they will give a very fair report from their side. So on the day one itself, I am believing. If this is the respect what he is giving, without seeing your service in this law at all, and after seeing your service also, if somebody has given the respect all these days, whatever I told, whether it is bank audit or income tax or maybe at other law and all, what is the reciprocal respect we are giving to the GST lawmaker is a simple question. We should have been masters by now. They are believing, blindly believing. They believe that your audit report is the Gita or Bible. It will be right, they believe. That's why they say that you are eligible to. We have contributed a lot to the lawmaking process, no doubt about it. More than 719 plus observations and corrections we requested. More or less 80% of our observations and submissions have been accepted, except it is involving a very larger policy implication. So my sincere request is, as I always make in this kind of promenade, is for the sake of reciprocally respecting the lawmaker at least, our community is supposed to learn GST very sincerely. Leave alone the other part and all. To be a very regular statutory auditor himself, you need to be good in the basics of GST at least. There is one reverse charge and a particular amount. It has not been paid at all. It is not being provided in the current liability at all. Then how you can very comfortably say that as an auditor that true and fair view is ensured? There is one GST refund receivable, GST ITC in current asset side. If you know GST law, you can tell the assessee that it is not eligible amount at all. Why have taken the credit? It is not an eligible ITC at all. If the refund, I will show the sum of the slides. If you are showing that one, it is not eligible to refund at all. If that way, if you are aware of the GST provisions, you will be able to ask the assessee that you are not eligible at all. Why are you keeping this? Please write it off. You can give advice. If you don't know the provisions of GST, you cannot do even a fair statutory audit, conventional audit itself. At least for that purpose, just to be a conventional auditor, regular auditor, you please try to update yourself in respect of GST, which is mandate. It's a basic responsibility of a chartered accountant today in India to know the basics of GST. Leaving that to do his own work is impossible. So at least for that, I request you to see that you are updated. Now coming back to this one, for all these reasons, there had been a different situation as you are seeing in the screen. Exports can be done by letter of undertaking route or payment route. Payment route simple, even today it is continuing. Pay the money first, 18%, 28%, whatever is, as it is there in the normal tariff for the goods or services. Export. After exporting, show the document that I am an exporter, get back the money what you have unnecessarily paid. That's all. This is one route. This is a regular route. You do have letter of undertaking route. Earlier, by July, August, September, all this time and all, you had the provisions where they told that I will give you letter of undertaking, acceptance letter. You will give letter of undertaking, we will give letter of undertaking, acceptance letter from our side, officer's side. You give us bank guarantee, you give us bond, if you are giving the bank guarantee furnished by you, I will just give this, they told. These are all the history. Then later from September end, what they have told is no need for any bank guarantee. Just make an application manually, then manually. We will verify and give you the letter of undertaking, that's all. No guarantee, nothing required. No bank guarantee, no bond, nothing required. So you can get the letter of undertaking prospectively with the strength of the letter of undertaking, you can do an export without payment. So this was the situation. So this is continuing there till now. There is no bank guarantee or bond matters. There is no kind of furnishing the details to them this way as it is required there, right? Now, if that is the case, can we just have a quick look on what kind of things have been there? As I told you, they have been seeing whether your foreign exchange is at least 10% of your turnover and you have earned more than 1 crore rupees. All these things are old stories. From September, they are not asking anything at all. Go and introduce yourself as an exporter, that's all. That also, now as I told you, it's all old stories. All the things are required there, done there. Some of them gave the money, bank guarantee given there, got the letter of understanding, all that been there. Now, having seen all these things and all, latest development is from April 2018, especially by the end of March end itself, it was very effective working, introducing first week of April, March. Letter of undertaking becomes online. Nowadays, it's only online. You need not visit to any officer physically and meet for any purpose. Just have a look on the screen. So just log into the gst.gov.in, your usual website. Go into the services menu. You'll be having user services as it is shown there in the red color encircled part. And you'll be having letter of undertaking option open there. You will open that. There will be mostly pre-filled data of yours. Mostly. You need not type anything at all. I am challenging you, it will take exactly 80 seconds, 80 seconds. Less than making noodles. They ask 2 minutes time, 120 seconds. So I am just telling you that 80 seconds it will take, that's all, nothing more than that. I am an exporter, I want to do export without payment of tax. If you say, you need not pay tax, sir. Happily export for trillions and billions of dollars what you want. But please spend 80 seconds online, sitting at your home. Sit at cinema theatre also and do it, provided you are having a net connection. It's up to you. 80 seconds only you are going to see. This is the screen, what you are going to see. Click, click, click. I think that 3 into 2 seconds. 2 seconds will take, no? Right. 6 seconds gone. Then you will come here. All pre-filled. Whatever I given in the blue color band is private information. So nothing required actually. It is going to show your name, your GST number, your and all. Incidentally, if you had any letter of undertaking collected manually in the previous year, if you are collected, if anything is there, annex the scanned copy by clicking this. Right? If you don't have anything, for the first time only I am applying, sir. I am a chartered accountant doing service to SEZ. Okay, I want to get an LOE. Okay, just get inside there, click it. Last year I did not get any, sir. No problem, just go inside. Last year you did not fill up anything. Just type to witness name, real witness. Nobody is going to verify. If problem comes, they may be verified. Name of the person, father's name, address, we just pay. They are the witness. Some live witness. So really seen witness, you type. Once you type it, you are going to see that this acknowledgement is coming. Sir, again I am having a doubt, sir. You started to say that you need to get letter of undertaking acceptance letter. What you are showing in the screen is an acknowledgement for the online file, online form what I filed, as you very proudly claimed, maybe 80 seconds I would have taken. What about the acceptance letter? I have just made an application. This is only an acknowledgement, reading some TR number and something like that. What is the use of it? Please believe, this is what the so-called acceptance letter. Officer is not having any role to accept, sir. You are just writing, Mr. Officer, I am going to export. So this is my letter of undertaking. Take. That's all. You need not get any acceptance letter and all from anybody. That's all. Law has been simplified to that extent. On 6th April 2018, CBSE circular said that please don't visit any officer physically. Don't meet them anywhere. Make the application, take the acknowledgement copy. That's all. The process over. 80 seconds. Over.
So this acknowledgement will be valid from the date of acceptance to
that reads very clearly 1 year time. It reads very clearly.
So retrospective, if suppose I apply for it now, so is it valid from 1st April?
No, it's prospective only. And you need to convince the officer who has been given discretion power, if he is able to see a case in your matter, he may decide that you can be given the retrospective effect, which I need not explain in detail. Should it will it happen, or should you make a visit and spend your time? I leave it to you.
Generally it's prospective.
It's perfectly for prospective only, and the retrospective effect may be given. That's what their own circular has told there. On 15th January they issued a circular. They said that the officer can leniently take into consideration the problems of the exporter who might have missed because of ignorance actually. They may leniently decide as the case may be. No leniency at all. Officer is a person who is totally trained in a different level. You go to an officer, sir, I am having for this an exemption, sir. No. Sir, your circular is saying that I am not. No. Sir, at least you see the case law which is squarely covering me. No. Sir, you are an intelligent officer. No. Sir, I said you are intelligent. Oh, fine. Because all the time we have been telling no only. So, without listening to you, what you are telling, he is saying always no. What to do? He is trained to so. So, when you are going to the officer, it is all possible or not. That is different. Merchandise export from India scheme script, MEIS script, is a script which is given there by DGFT when you are making an application online to them with simple annexes. When you are giving this one, the script is given there. What is the use of this script? See, you are an exporter. Without paying tax, you are exporting it. Proving that I am an exporter of this kind of goods and all, I am eligible for this. All the goods exported by me earned foreign exchange for India. You prove. You write. Director General of Foreign Trade is happy to receive such an application from you and know your details as you are filling up, as it is cross-checked with his own records. He wants to appreciate under the Foreign Trade Policy Block 2016-20. What if he says 2015-20 block wise? If you see the handbook, he is saying that the officer of subject to condition, industry or product wise may be able to give you MEIS script to you. It's a credit script. What is the meaning of credit script? In our language, a credit note. You keep. Credit note, something like that.
The duty credit.
Something like that.
You can import
With this credit note, what I can do, sir? Now you can pay the duty. Sir, don't make fun, sir. First of all, I am not having any kind of liability at all as an exporter to pay any duty. When I am not having any duty liability at all, what fun in having a duty credit scrip in my hand?
You can sell it in open market.
I am not paying, right? Okay. There are so many lakhs of persons who are importing goods paying duty, right? I can sell to them. Sir, again I am not able to understand, sir. If the MEA script is reading 2 lakh rupees worth the tax duty you can pay through this if it reads. I with paying collected also from DGFT also, fine, okay. I am not going to use because I am an exporter, right, okay. This one I can sell to some other person. This is reading a number 2 lakh rupees. He is purchasing from me for 2 lakh rupees. Instead of purchasing from me for 2 lakh rupees, he can directly pay the duty directly to 2 lakh rupees. What is the fun in purchasing the script from me? Who will come? What kind of arrangement it is? Is it so simple and logicless? What you can do is, instead of giving to him for 2 lakh rupees, say that you are selling for 1,99,000 rupees. Discounted by 1%. What is wrong in that? If you are selling, sir, again sir, what is the use of it? What is the use? That's a script having a expiry date of 6 months or 1 year. Sell that small sheet of paper for 2 lakh rupees, happy. 1,99,000 rupees free income, bonus. Who did give you? Nobody gave. Government has given you. Sell it. Officially you can sell it. Very comfortable. When you are selling this for 1,99,000 rupees, you are very happy because that small slip has given me 1,99,000. What about the purchaser? He can use it for paying 2 lakh rupees just by spending 1,99,000. He is also happy. Happy, sir. Both of you are happy. So that is the way in which this MEA script is working. Sir, you told about the goods being exported, MEA script being given to us. What about the service industry? Is it forsaken? What happened? No, it is also taken care. A list of 89 services are there under which 2%, 3%, 5%, several rates are there depending upon the industry and services actually. 17 sectors are told, so many things are. Accordingly, you can make application. SES script also in the equal manner will be able to help to pay the duty. The person who is holding this MEA script or SES script will be able to pay the basic customs duty using that one happily. Sir, all the time exporter is not paying tax at all, you told. So, he is very happy. Because a letter of undertaking, 80 seconds, credit, do it, happy. What is the use for any person who is supplying to him? He should also be taken care, right? Is there any benefit for him or not? A supplier who is supplying to an exporter should have some benefit. What kind of benefit this law is giving? The supplier of the exporter can supply at 0.05% CGST, SGST respectively or 0.1% of the value. If he is supplying to 0.05%, at 0.05 if he is supplying to, the exporter is purchasing for a very lowest price and he is exporting it. Sir, I am not fully convinced, sir. The question is very clear. I asked you, exporter is happy by not paying tax. What is the happiness given to the supporter of the exporter? I am asking. In turn, you are telling the supporter of the exporter can supply the goods to the exporter who in turn going to export to the exporter at a low rate. At a low rate, if you are supporting, again exporter is only happy, sir. What is the use for the supporter? Supporter is still going to be happy. Because this 0.05 plus 0.05 or the 0.1% IGST is an outward rate for him. And he is having several inward rates are there for him, 5%, 18%, 28%. So he will be buying for 28, 18 and 5%, he will be selling at 0.05 in case of local transaction, 0.05, 0.05, in case of interstate 0.1%. What is the situation is this? High inward rate, very important, not value. High inward rate of GST, low outward rate of GST. What is the situation? Under section 54 of CGST Act, this is called as inverted rate structure. If the law itself is imposing a situation on you that at a lower rate you sell the goods, supply the goods outward, and at a higher rate, I mean always referring the rate, not the value. At a higher rate you are getting your inputs, naturally you will be entitled to get refund as it is made. Like an exporter, Supporter of the exporter can also do very happily a refund process request. You can make an application. Any accumulated ITC you can get back. That's the provision given there. Sir, all these things are about export. What is the meaning of deemed export? That is one section 147. It says that, and as per that, central government can notify any activity to be deemed export. There is a circular 48/2017, which reads that 4 items are deemed export. If there is a supply made by a person in India to a person in India with advance authorization held in his hand. What is this advanced authorization? Somebody wants to buy input materials without paying duty, customs duty, excise duty, countervailing duty, whatever it is. Okay, sir, if he wants to buy, let him buy. By supplying to an advance authorization person, so-called person, what I am enjoying, what the government is trying to achieve. Please remember, when you are giving advance authorization for a prospective exporter, he imports first without paying duty the input material and then does the process manufacturing, then exports. Right? But when he is importing, you are not asking to pay the duty. Happy. But the foreigner has to receive his foreign exchange. You should pay. He is a third party. So the foreign exchange goes out of India. Take in case of Export Promotion Capital Goods Scheme, EPCG. A person who imports capital goods, earlier I told advance authorization, input material. A person who intends to do a big level of exports with a foreign made capital goods, buying the capital goods from the foreigner, doing manufacturing in the capital goods, using the capital goods, selling the products outside India, exporting, earning the foreign exchange. All happy. Under EPCG scheme, he need not pay any duty when he is importing the goods subject to conditions and export obligations. But duty is not paid by him. To import the capital goods, should he not pay to the foreign supplier the capital goods related foreign exchange price? Yes, he has to. So the foreign exchange goes outside India. So in the name of earning in future by export, still for the first round, you need to spend outward money in foreign exchange, your foreign exchange comes down. What the lawmaker has done simply is, only when this guy is searching the foreign source, he has to send the money foreign exchange outside India, right? Let us give a benefit. Anybody who is supplying, GST supplier who is supplying the goods to these persons in India itself will be treated as a deemed exporter. What you will do happily? To advance authorization person, instead of buying in German, buy from me, I am in India only. Instead of purchasing from America, the capital goods, buy from me. So if you are doing that one, you are exempted, you are not going to, you are treated as a deemed exporter, you are not going to charge anything. The person who is buying will pay INR to you. You are Indian, he is Indian. So you will pay INR, your foreign exchange is not going out of India. Happy? Very happy. Both purposes served. The person who is supplying to him also is given a status of deemed exporter. The person who is receiving has also got his machinery or input material happy. So that all okay, fine, sir, okay. That I understand. Being the deemed exporter is in any way different from the exporter, no. It's also having the status. That is why the word is reading as deemed exporter. So if you are supplying to an EOU, export oriented unit, same way, that supply of goods will be treated as deemed exporter. If for a public sector bank, gold is supplied, that is different one, not so famous actually. That is also deemed supply. So in these cases and all, you are able to see that it's happily happening there comfortably. In case of SEZ, now these are all the things what we have to discuss about the export. Sir, exporter is the word told. Immediately to your mind what is coming there is refund. What are all the major problems a practitioner nowadays seeing there in practice about the refunds? Because exporter and refund separately cannot be discussed. Separate section is there. We ourselves are having a separate session in detail about the refund. But exporter related refund problems need to be discussed quickly in next 6 or 7 minutes. What are the problems here? First problem, sir, I supplied to SEZ, sir. Refund is not coming, sir. refund is not coming there, it's different one. Can you punch your return properly? First you check. Why, sir? What is the problem? If you are supplying to an SEZ unit, the SEZ unit should have registered itself properly as SEZ unit. I am not able to get, sir. SEZ unit will register as SEZ unit only. Then that one, what will the cottage industry under the category will it be registering? No, sir. The problem here is majority of the SEZ unit without proper knowledge of GST have registered themselves as a regular supply unit. I don't know why selected. Lot of units. Time and again the supplier to SEZ got his head broken. To classify him under any category, he is not able to find out at all. Actually, what should you do? Under GSTR 1 return, para number 6B, you have to punch this detail. Supply to SEZ 0 rated. With payment of tax or without payment of tax, whatever it is. If you are having LOT, letter of undertaking, without payment. If you are not having letter of undertaking, with payment, then later you collect. Fine. But anyhow, 0 rated you should say. Where to say if he is not SEZ? So, see that whether the status of the person SEZ has been mentioned by him as SEZ only. How I will see that? You can see in the website very easily. Check the assessee status. It is there. Then you will understand that that guy has registered himself as a regular assessee. Ask him to change it. Sir, he doesn't know to change, sir. Or that such SEZ itself is me, sir. I am the person processing. I don't know what to do now. You do have a separate email ID given for this purpose actually. To this mail ID, just give the basic detail about your SEZ status, registered mail ID, phone number, attaching your registration detail also to reset.sezzflag@gst.gov.in. A specific mail ID given for this purpose only to set right the problem relating to status of SEZs in GST website. Mostly it is getting clear. Only thing is you need to write a lot. The given case you will be able to see remainder number 12. It was there once. You have to repeatedly remind. You have to kill that man so many times with the reminders. 12th remainder. But nowadays they are reasonably good. In the second or third remainder itself they are clearing it. Now it's good. And coming to the last set of discussion, what are all the problems what are all the basis for the problems I am facing in refund as an export? There is one table 6A in GSTR 1. This is meant for export details to be punched. There, shipping bill number you transpose sometimes. Or write some wrong, say shipping bill number. Shipping bill date is given there in the format of DD, YY. But you type it as very interesting actually. How it is punched there. What you are punching there is DD, YY. Sir, always the maximum digits for a date will be 2 digits. How come you are able to think that 3-digit date will be punched with a 0 prefixed to that? That's why the problem is. Shipping bill wrongly typed. Port code. Cochin port code is different, Kakinada port code is different. Incidentally, as being a 6-digit alphanumeric number, there will be much similarity between this. You punch wrongly the number, gone. Sir, why gone, sir? This is unfair, sir. Whether I exported or not, sir, I am having document. Please understand, you are talking to a machine, not to the human being. Human being itself is not able to understand. That is different. You are talking to a machine. On so and so date, I exported 25 gunny bags from India. I don't know why 25 gunny bags sent. I am just saying for example. 25 gunny bags were exported from Cochin airport, I say. The machine is just going to the particular shipping bill and checking. On that day, from Cochin, not even a ton gunny bag has not been exported. What to do? Actually, what was done is at Kakinada. In Kakinada port, somebody should inquire, like you. You are the person. You did not punch the data at all, it is kept open. Machine is saying that mismatch, no refund, fix. Let him come in person, let us discuss later. That's all over. Then you take the paper and go there, officer cries, you cry, all these things are happening. That is what it is. Automatic refund will not be possible unless you are precisely giving the information. It is basic. It's a machine. Stupid machine or intelligent machine, whatever you say. Machine is machine. It cannot understand. Similarly, in para number 31B of GSTR 3B return, you are supposed to mention the 0 rated turnover. Very religiously in urgency on 20th, tomorrow. 20th, punching. 31A, punch. Sent. That's all. Out. 3.1a is a local turnover. 3.1c exempted turnover out. Where you will be able to see that the machine is matching. It is not able to understand that at all. Now from 30 May 2018 they have made a correction fortunately. They say that yet it is not implemented. Till this minute, just before 25 minutes or 30 minutes, whatever it is, also it has not been done. They say that in the days to come, para 3.1a, 3.1b, 3.1c will be clubbed. How much IGST you have paid under any category, we will see. If you are able to prove with the export document that you are an exporter, we will agree. That they are told, but not at implemented. So, leave alone these things and all. Please type your export detail under 3.1b of form GSTR 3b. Please punch your detail of exports under para 6 capital A of GSTR 1. Please punch your SEZ export details in GSTR 1 form under para 6b. Enough. All problems solved. Why to confusingly interchange that or confuse that and then say that my refund is not coming? Why? Now, the solutions, as I told you, you can always make serious attempt to see that the data is punched in right place. So all this time you have been talking about the exports, sir. I am having still a query, sir. I am a UOU, sir, export oriented unit, 100% export oriented unit. I am a SEZ, sir. Don't have any special provision for me? No special provision. After all, export is an export. Export from SEZ, export from EOU, provisions relating to export, whatever we have discussed, are simply applicable. Nothing more than that. Your own SEZ related, SEZ Act 2005's implications and some better privileges could always be there. It's different one. But that doesn't mean that you are having some other kind of procedure to follow just because your status is SEZ, just because your status is EOU. It's all same. Now the last question. I do have exempted goods being exported by me. Goods are exempted, but I export. I do have some services which I am exporting within the meaning of section 2 subsection 6. I am exporting, but whether such exempted goods or exempted services be treated as exported service or exported goods. If it is treated so, will you accept that it is a zero rated one? Yes. Sweepingly, we can say that once export of goods are there, once export of services is seen, then you can simply say it is zero rated only. Internally, domestically, it may be exempted goods or exempted service also. Maybe. That doesn't matter. It is certainly a zero rating. As long as export has happened there, you can always believe that zero rating has always been there. Perfectly there. You can believe. Now, if you do have any questions for which I should give brief answers, we'll be happy to reply. Any questions relating to the session what we had? No, if you are not having any questions at all, 2 meetings could be there. One, what a lecture, sir. 63 minutes plus 1 minute. Okay, 64 minutes. A brilliant lecture, sir. Everything we understood. What is that to pay? Nothing, sir. Everything understood. There is another meaning also, which I don't want to say. I am too optimistic. All these years I have gone in my life this way only. So too optimistic. Believing that, always it's a belief. Believing that all what I have told you understood, you are all very happy and your knowledge level slightly half a inch has gone upward to the comfort zone. With that presumption, I just take leave from you. Thanks for your time. Thank you.
Thank you so much for the interesting session, sir. And you shared your knowledge, and it was quite a interesting timing for us. And as a token of small thing, I'd like to, on behalf of